día despierto con pesos en mano, mientras los novatos rezando en el vano compraron el hype, se tragaron la trampa. Yo vendo la cima, les dejo la estampa. Brindamos con oro, tequila en la mesa, mientras sus cuentas se van de cabeza. El toro me sigue, lo monto sin miedo, a ellos los pisa cayendo del cielo. Salud, mis amigos, yo gano, yo sé. Cervezas bien frías, dinero al revés. Los tontos apuestan, yo leo el tablero. Y cuando ellos lloran, yo cuento dinero. El rey del mercado, brindemos con fe. Se creen muy listos jugando en centavos, pero el que no aprende termina en los clavos. Comprando la baja, soñando con luna, mientras yo me río con otra fortuna. Mi cartera gorda, mi vaso rebosa. El vino es francés, pero el oro es de rosa. Que sigan soñando, que esperen milagros. Yo sigo reinando, contando los pagos. Salud, mis amigos, yo gano, yo sé. Cervezas bien frías, dinero al revés. Los tontos apuestan, yo leo el tablero. Y cuando ellos lloran, yo cuento dinero. El rey del mercado, brindemos con fe. Señores, el mercado no es para los débiles. Brindemos por los perdedores. Clinking glasses. Salud, mis amigos, yo gano, yo sé. Cervezas bien frías, dinero al revés. Los tontos apuestan, yo leo el tablero. Y cuando ellos lloran, yo cuento dinero. El rey del mercado, el rey del mercado, brindemos con fe.
Oh, brother, oh, brother, oh, brother. Hello, and good morning, folks. It is another episode of the Matt Kohrs Show. It is a beautiful Wednesday, February the 12th. It is not only a CPI inflation report day, it is also a Jerome Powell, chairman of the Fed, money printer goes burr, testifying in front of the House kind of a day. So obviously, we're starting early. I do appreciate you guys getting up at the crack of dawn with me, Mateo, your amigo, and we're going to be running late today because of the Jerome Powell testimony. So it's going to be a big stream, but it is the final boss. It is the final chapter before we're all going on a quick vacation to Mexico. Yep, you heard that right. Right after this, well, actually, technically tomorrow, your boy's hopping on a flight, flying across the border, parachuting down. And if I'm going to be honest, it's going to be a bad day to be a little glass of sangria because your boy's coming in hot. If I was a sangria family right now in Mexico, I would be scared because Mateo is coming to town. No pitcher of sangria is going to be safe. I don't know. You guys might want to buy calls on sangria. I don't know if that's legal. I don't know if that's possible, but I'm giving you some insider information. The supply of sangria is about to plummet. So do what you want with that information. 100%, but I'm telling you, generally I can't give out trading advice, but I'm going to give out some financial advice today. YOLO, zero DT, well, give it a 1 week because I'm going to be there all weekend, but get some calls on sangria because, dude, it's going to get crazy. It's going to get a little crazy down there. So very excited for it. This is, as I alluded to, the final boss battle before we get to take a little bit of a breather. I hope you guys got up. I hope you already got your cardio in. I'm a little jazzed right now because your boy already burned 300 to 400 kcals. So we did that. We got on the Lucky Buffalo shirt, and I think we're ready to crush the CPI report. So I hope everything's good. I hope you guys are ready to rock. We have some things to talk about. Market this morning was looking real weak. SPY, Qs, Tesla, and then all of a sudden, really starting at 4 in the morning, we started to pippity pop, turn it around. And part of it is because the president of the United States, he's also up. He's also getting ready to crush some sangria down in Mexico. He's up getting his cardio in. He's up ripping it on Truth Social. So around 30 minutes ago, interest rates should be lowered, something which could go hand in hand with upcoming tariffs. Let's rock and roll America. As soon as he hit us with that one about 30 minutes ago, it really started to send things up. I mean, even Bitcoin's popping. Tesla was looking horrible around 320, now looking pretty good at 336. So we are all over the place. And it's going to get more exciting because, as I've been alluding to, we're about to get an inflation report. Stock futures slip as traders brace for January consumer inflation report. Slip, they better update. Little change. I was going to say we've had a nice comeback. Consumer price report Wednesday expected to show inflation isn't going away. So once again, we are here for the CPI report, the Consumer Price Index. And actually, that's going to be coming out in about 2 minutes. So please cast your vote. Are you bullish? Are you bearish? Please comment away. I want to know where you guys are feeling. It's a fun little prediction. I'm not saying anyone should be trading off of this, but I legitimately want to know. Are you guys bullish on this? Are you bearish on this? Which way are you leaning? Core inflation seen rising at firm pace in January. Economists expect the gauge to rise 3.1%, which is actually a little bit higher than the line in the sand. The line in the sand right now is 2.9% year over year, and month over month, we are looking at 0.3%. Those are the lines in the sand, once again, coming out in a couple minutes. The SPY is right at the closing value from yesterday. The Qs are a little bit above it. Like I said, Bitcoin at 96. It's going to be interesting to see how all of this reacts. I'll get up the dollar index as well. But we're going to be listening to our boy Rick Santilli in a moment.
Consensus is that we might have a good month, only a 0.3% gain down from 0.4 in November or in December. These are January numbers that are coming out today. No change in the core, and it brings us down by a tick for the year over year number on the core, and no change on the headline. So it isn't dramatic. However, there is one thing that you have to keep in mind going into this, and that is there's a seasonal pattern over the
Okay, so right here, CPI year over year 2.9, taking out food and energy, which is referred to as core, is 3.1. Prior month was 3.2, so that would be a slight improvement there. But if you look at the month over month, last month was 0.2. Expectation is a little bit hotter, 0.3, but that's once again just taking out food and energy. When you consider food and energy, they're actually looking at a bit of a drop. So once again, those are the lines in the sand from all the fancy schmancy analysts with all those degrees on the wall. Are they right? Yeah. Sometimes they're also horrifically wrong. So please don't forget that. But it's always a good day. Let's get Rick going in chat. Really, he should be popping up here soon. Right? I mean, and I have up the 15-second chart so we can see this ripping. I also have up the NASDAQ in case we want to do some degenerate trades. Dude, we're ready to go today. We are ready to go. 30 seconds. Folks, there's 30 seconds till this report comes out. I need you have to lock in your bet now. Are you bullish? Are you bearish? It doesn't count if you lock it in after. That's a cheater, pumpkin eater. You got to cast your vote now. We are connection lost. I'm losing my connection to my data. Perfect.
We also added a new partner.
That's exactly what I want to hear.
Big Japanese trading company. And
get ready.
Financing business.
3, 2, 1.
So they'll be great
boom! Up, down, up, down, big down. We just dropped $5. Holy shit! $5? What the fuck?
Just their technology.
Holy shit!
I think it's almost empirical right now in terms of what they've been able to do relative to Tesla.
Hold me.
Yeah, look,
and you Mobile even behind them.
Going the fuck on.
No, for sure. Look, Waymo's doing amazing work, and we talk to all these companies all the time. There'll be a lot of different technologies when it comes to self-driving. Already today you've got Waymo, you've got Cruise. Of course, they're not operational.
David, I'm sorry to run. The futures are taking based on some data that's out right now. You're now looking at
bring Rick on. Save the market.
Let's get right to Rick Santilli. He has that CPI number.
Yes, it's hot data. We look at yields moving up, pre-opening equities moving down.
Oh my
January
God.
rate on CPI up 0.5%. Up half of 1%. We're looking for up 0.3, and the rearview mirror up 0.4.
It is hot.
I do caution.
Hot,
There's
hot,
annual
hot.
revisions coming out, so some of my comps may change. But at this point, to find a higher number than 0.5, you're going all the way back to June of 22. We've had plenty of 0.5, but that's where the higher number is. And if we strip out
Dagger.
important food and energy, also hotter, up 0.4, double what's in the rearview mirror. Equals several occasions, but the highest number to be a higher number, 0.5, would be April of 23. If we look at the year-over-year data, up 3% on the headline year-over-year, 1/10 hotter than both front and back. And if we look at 3.0, it would be the warmest going back to May of 24. Now let's look at year over year and strip out the all-important food and energy. Also hotter, 3.3. We were looking for 3.1.
Oh my God, dude.
3.2.
Market just got fucking rocked.
Remember, these go back quite a ways. And are we making new highs here? Yes. New high, 317.67 on the non-seasonally adjusted.
Dude.
If we look at core,
This just got so
324.74, also a new high. There's never been higher indices on either
The
headline
lucky
or
shirt
core.
strikes
And I also
again.
would like to throw a little
Lucky
water
shirt
on the
strikes
conventional
again.
wisdom that January is this big
You might be
important
thinking to
reset.
yourself,
I looked
why?
at
How?
21, 22, 23, and 24, 4 years post-COVID. And maybe one
I'm the dude
time
swinging
every,
about
synopsis,
$20,000
so
worth of puts.
year-over-year,
Dude,
was
this is
January the
gonna
highest,
pay.
was many, where
I
it
was getting
equal
beat
to
up
other
going into
months,
this, but dude, this is gonna
predominantly,
pay
we saw many
big.
February and Marches that were higher. So the reset, I don't know that I buy
This is going to
into
have a
it, but in either
huge
case,
turnaround.
if there
Instead of
are
being down
resets, this
12,000,
month
I'm probably going to
certainly
be
looks like
up
one. Back to
12,000.
you.
This is going to be
Stay with
lucky
us.
shirt
Let's
strikes
very quickly look through
again.
these boards again. As Rick was pointing out, we looked at the equities tank. You're now looking at the Dow futures off by about 400 points, just over 400 points. S&P futures are down by 57. NASDAQ indicated down by more than 220 points. If you've been watching Treasuries, we did see a very significant tick up in Treasuries as well. The 10-year, which was trading, I think, at about 453 this morning when we started, so all the way up to 461.
Wow,
the 2 years
dude.
at 437. Joining us right now for more on this information is Priya Misra. She is the fixed income portfolio manager at JP Morgan Asset Management. Drew Mattis is the head of global economic and market strategy team at MetLife Investment Management. Drew, let's just start with you. Markets didn't like this.
No, the focus was going to be on the core year over year. 3.2 would have been bad. And what we got was worse, right? So, it's really disappointing news for the Fed that they were hoping for continued deceleration. It's disappointing for the market because they're hoping for continued deceleration. And the fact that this is a January number and doesn't include any potential, tariff impact yet, means that, the risk going forward is for potentially higher inflation.
It comes just after Donald Trump put out on Truth Social the
We're
idea
right
that the
above
Fed should be
6,000,
lowering rates to go
seemingly
along with the
bouncing
tariffs
off
that
of
we
like
would be at this time. This puts the Fed in a pretty tight box. It's
zoom in on
hard-pressed
this.
for them to be able to lower rates at this point.
Well, it does. I mean, you need
We
to.
bounced
they
off to
shouldn't
like
have been lowering
610
rates
maybe?
In the first place. So that's
608,
they kind of
610,
got themselves
somewhere
into a
right in
box.
there,
They
right where
tried
my
to get
cursor
in
is.
front of things heading into the election, and they went a little
Dagger,
too
dude.
far, too fast, and then they continued
Holy
easing, even
fuck.
when everything should have been telling them that they should have been stopping.
This is that nascent inflation that we were worried was.
As you can
in
see,
the
we
back
are
of our minds,
snapping
we were worried
support
that it was
that I
still
had.
there. Well, isn't that what we're seeing
We're
right now? This
breaking
is like our
below
worst
this Friday low.
nightmare
That's not
coming through.
good.
We didn't do
I
anything.
marked out
We
the
didn't do
high
any
and the low.
tariffs yet. This was
we're heading
already
to 597.
coming,
That's
wasn't
the
it?
50
But what I
EMA,
would say
technically
is
the
last
48.
mile of inflation. There's some research that's hard. I mean, we have
Last mile is hard.
8-9% on inflation.
We're going back up. We're not going.
Well, I think January.
It's now
does
a mile
seem
and
to
a quarter. It's now a mile and a quarter, Priya.
So there is this seasonal aspect to the start of the year. The first quarter has been high. I think there's some of that. Look at the totality of inflation. PCE is heading lower. I look at wages. Wages are showing you some signs that it's decelerating. I think the Fed is going to be on hold. I completely agree with you. And I think we're going to watch the data. But I would say for the Treasury market, one of the reasons we got to that 480 was talk of fiscal stimulus. I mean, there's this inflation fear. I hear you. And I think that's why the market's reacting today. What do we hear on taxes? Are we going to hear deficit finance tax cuts? We're going to go up a lot more in rates. We're not hearing that. We're hearing Doge. We're hearing where are we cutting spending. We're hearing about offsets. I think that's what's going to contain the Treasury market beyond this inflation fear that I think is legit and it's going to keep the Fed on hold.
Well, and the risk with inflation right now, and you're seeing it in the data, you're seeing it in consumer credit data for December, which was crazy, which is people are cutting their savings. They're boosting the amount of money they're borrowing in order to maintain their standard of living because inflation's kind of eroding their wages faster than they can keep up.
All right,
and so
this is getting boring. Let's look at the hemorrhage. Dude, it's still going. Holy shit. Oh, dude, it's not stopping. This is so fucking brutal. Dude, what in the world? And if you're just joining right now, like wondering what happened, hot inflation. We got a hot inflation report. Inflation came in way too high. Right here, they were expecting 0.3, came in at 0.4. They're expecting 2.9, came in at 3, expecting 0.3. This is the bad one. The CPI month over month, they were expecting 0.3, came in at 0.5. Inflation is hot. We're not getting a rate cut, right? When inflation is ticking up, we're not going to get a rate cut. No freaking way. This just put a dagger in the heart of a rate cut in March. We're not going to get one now. Where are we at? The March meeting, 19th. Yep. There's now a 96% chance that we're going to stay at 4.25%. 10-year yields have to be popping on this. Hang on. I want to do a quick little trade here to see if I could get my account back to being in the green. Where should that be at? 608. Just doing a quick, I did a kind of a scratch trade last night to just get that trade locked in. And as you can see, it was a locked in loss of 170, which was stupid. I should have been way, way faster. Instead, I took like a 8-point hit or something like that. So I'm wondering if I could quickly just make some of these points right back. You know what I'm going to do? Play it to 5. All right, we'll see if that trade hits. So if you hear a random thing pop off in the background, that's literally me just trying to do a little scalp trade to get this back into the green and just obviously praying I also did not somehow... Why is this all green? Oh, because the EMAs didn't close. Dude, this is brutal. The lucky shirt strikes again. I was down bad, 59%, 60%. I've been holding these puts. I had some time, Feb 21, so I wasn't really worried on time, but I was worried about, is this inflation report going to go my way or not? Obviously, I had a thesis that it was going to go my way, and thus far, it is paying. This is brutal. Absolutely brutal what is going on. That's bad. We're at 599. Why I find it to be so particularly bad, you could see it better here on the daily chart, is not only do we now have a giant gap up, which I should put that on the screen. Let me make this green so you know it's a gap up kind of a trade. All right, so we have this gap up to 602.43. Probably not going to happen today. Yes, when we are talking about gaps in the chart, which I mean is when you're opening either above the previous day's high or below the previous day's low. We're in the latter case right now. Yesterday's low was 602.43. We're scheduled to open at 599, which means that there's an upside gap full of about I don't know, $3-ish. That is a very strong play, but not when it's news driven. This gap is obviously because of news. So as much as I'm a fan of playing gaps, and we talk about them a lot in here and that type of a thing, I do want to remind everyone that the odds of the gap fills when prompted by news, the odds actually are not good. So yes, I'm a big fan of playing those gap fill trades just because the odds around them are very good. But once again, not when it's news driven, such as a CPI type of a situation. So I just want to remind everyone of that. So we have this giant upside gap fill, but my bigger concern is that we dropped below 600, which is not only a key technical level, key psychological level, key options level, but it's just this massive support. And the next thing I really see is kind of this low from Tuesday, February the 4th, which is roughly aligning with this 48 EMA. So I'm seeing that. And then if that doesn't hold, we might be talking about revisiting this recent low at 590. Obviously, I have all the SPX levels already prepped up for you. Let me get this ready. You could see we're around 6,007. These were the levels as of this morning. So the green line is yesterday's high, the red line is yesterday's low, and the white line is yesterday's close. So high, low, close. The yellow horizontal lines are key option levels. So as of now, we are scheduled to open all the way down here around 6,000, right where my cursor is. Like we are just nosediving all the way here. You can see huge support is at 6,000. That's a big, big level. We have not breached it as of now. As I could see right around 6,000. Yeah, we're right around 6,007. So we're right above it. Not only is it a key options level, it's a key gamma strike. Well, that means that it is a key options level. So I'm going to be watching this out of the gate. Out of the gate, this is going to be pivotal. This is going to be telling, and I'll remind you guys as soon as the market's about to open. If this holds, yeah, we might have a shot of a bit of a recovery and maybe not so much of a bloodbath of a day. But if this does not hold, look out below. I mean, let me see where some of these key levels are at right now. Let's zoom out a little bit. So you can see all of these long puts at 6,010. That person just made a lot of money, a ton of money. We're not seeing much. This is my big concern, is there's not much support below here. That is dangerous. That is no bueno. That is not good. So I'm a bit concerned about that. When the market gets open, of course, I'll check out GexBot and to see other levels of support and resistance. I do know from looking at some stuff yesterday, all right, that's not going the way that I wanted to at all. All right, that's a bit silly of me. I do know that a potential level of support is 5985. I saw some action there, and I guess I want to show you how crazy this is in the options market, and some people just made an absolute killing. So first, let me update this just in case 6,000 doesn't hold right out of the gate. But what I want to show you is just what happened in this overnight session. So this is currently the open interest. There's a ton of open interest for 5,950. That's how bad things might get coming into today from market close last night to this exact moment. The open interest, the live contracts, 5,950. That's another 60-ish point drop from here. That's another $6. That is crazy. If we look at the open interest change from last night market close to this morning, you can see there was some puts, some calls, not too telling. There was a lot of volume at 6,000. There's also a lot of volume at 6,120. Obviously, this was the bull case. People were excited about this, and this is the bear case that is now coming to fruition. So you could see not only from the psychological standpoint, but you could just see from an option standpoint how many people were targeting 6,000 flat. And then if we look at the buys minus the sales just to see what direction they were playing it, this is where it gets a bit more interesting. So we saw some short premium at 6,025, 6,030, long premium at 6,000. I find this bet to be super interesting because this was an aggressively bearish bet. We also had some aggressive bullish bets, but obviously this player now just got blown out. So 6,000 for no matter how you break it down, this is the key level of the day. And if we do not hold it, and this is a big if, remember, you should always just have an if-then statement. If this holds, if this bounces, if this breaks, if this doesn't break, if this does not hold, if it does not hold, then I'd be looking for 5,985. And if that doesn't hold, the next place we're seeing quite a bit of action is 5,950. So the likelihood of this is not high because it's so incredibly far away, but it's also not zero. Like we might be talking about this situation where out of the gate, if this doesn't hold, maybe there's like a flush to 5,985. If that doesn't get steady, 5,950, it is in the cards today. I'm by no means saying it's probable and you should be like, oh, I'm going to be betting everything on it. It's just we're playing it from level to level to level. So on the converse situation, if this does hold and we bounce off of 6,000, I'd be looking for a recovery up to about 6,030. So this would be my bounce bullish case. This would be my breakdown bearish case. And my right where my cursor is like roughly, well, yeah, we're at 6,007. Roughly right around 6,007. So roughly where my cursor is, I'm expecting kind of a panic right at open. So just a little bit of an overshoot. I'm not going to count that as a breakdown. Breaking 5985 is a different story though. So my bounce bullish case and then my bearish breakdown case. And then if things get really bearish, we might be talking about 5950. And the last time we saw that was the low about where we opened on Monday, February the 3rd. So just to give you guys roughly equivalent SPY levels, where would Monday the 3rd be? Right here. That we're at that point talking, I mean, that could actually get really bad. We might be talking in the lower 590s, maybe right around the mid 590s. So watching this generic zone, but the fact that we're sub 600, I mean, fuck, that's a crazy deal. And then I don't need to really call this out now because I don't think this is going to happen today. But if we continue to trend down later this week, next week, look for that snap of 590.49. And then we have a giant downside gap fill at 585 flat, and that's from that high on Tuesday, January the 14th. So there's currently on the market, or with respect to the SPY ETF, there's an upside gap fill to 602.43, obviously much closer than the downside gap fill at 585 flat, but obviously we're trending a little bit closer to the direction of this 585 gap fill. So I just wanted to call all that out of like the technicals of how we're setting up, and also to, I guess, so we're seeing the SPY break but the Qs are kind of trying to hold right here. This low from Friday the 7th was 522.19. We're actually just above that. So I'm curious if it's going to hold. If it doesn't, once again, we have this low on Tuesday the 4th, which is roughly equivalent to the 48 EMA, so closer to that realm of 518. So I'm looking to see if 522 holds on the Qs, and if it does not hold, then I'm looking down here at 518, just to give you kind of a rough translation from the SPX, ES, and NQ levels. On that news, Bitcoin took a pretty serious hit. We have these lower highs. We have these lower lows. Big support is at 92,000. Ideally, that will hold. If not, not so good. How are we looking? Okay, a little bit of a relief bounce. That's, I guess, expected. I mean, this is huge. This is such an incredible vomit. Such an incredible vomit. That was bad. That inflation report came in as high as freaking Snoop Dogg, man. I mean, look at this. SPY pukes, Q pukes, Bitcoin pukes, dollar just absolutely rallies. I will, I guess, tip my cap to Tesla. It's actually holding on this. Tesla puked all day today or yesterday, and then even this morning it was really bad. Since then, it has a nice $10 plus recovery. So maybe the bottom is being put in on Tesla. I see a lot of you commenting on it right now. Basically, we had one downside gap fill get hit yesterday. We had another downside gap fill get hit. This is just a technical level where you would expect profit takers to take some profit, buyers to step in. So I think some of these shorts are like, yep, I'm happy with these gap fills. So I think this is a relief. There's a chance that you might see some sort of Vanna-related rally off of it, because if you have a lot of people throwing in their towels on the puts, the vol is going to get crushed. Market makers don't have to hedge as much, so they're going to get rid of their shorts, and then it'll start to bounce back up. So that's definitely on my radar for today. Palantir's been on my radar just because it keeps ripping. Microsoft's on my radar because it looks like it wants to break down here at 408, 405, something like that. So definitely watching that. Nvidia's also been having relative strength, but relative strength when the SPY and the Qs are puking, I'd kind of look for actually relative weakness. It's, in my book, easier to trade with the overall market, but yes, Nvidia is a bit stronger. Broadcom trying to hold. Apple had a great day yesterday, giving some back, but Apple was like one of the strongest ones yesterday. It's kind of the reason, I mean, we didn't have such a horrible vomit, but wow, this trading session just got so much more fun. So before I get too crazy into it, pinned to the top of chat in the description of the video, you guys know I do not trade without tracking options flow. I don't know how anyone could be a successful trader without knowing what the options flow is doing from second to second to second. Right now, we are the only community on God's green earth that SpotGamma is offering this deal to. 80% off for the first month for you guys to check it out. You get access to everything on this platform. The highest tier on this platform, 80% off for the first month to see if it's for you. And folks, I mean, you see me day in and day out. I feverishly check the options flow, and that's only a part of the platform. Obviously, they have quite a bit more going on, and I implore you guys to check all of that out. But for me, it has become pivotal to my trading. So shout out to Spot Gamma for being a partner of today's stream. 80% off. This is the time for you guys to test it out to see if it can have a great impact on your trading. But where I'm at in my trading career, literally, I'm just not going to trade if I don't have that information. I mean, it blows my mind that people are trying to scalp or swing trade or do anything like that, not knowing what the options are currently doing. So check it out. Use that link, and you're going to get, it's a huge deal off, 80% off. We are the only community that they are partnering up with to make this kind of a deal. So highly recommend you guys checking that out. And we are already starting to dip again, dude. We had a little bit of a bounce back on the SPY trying to recapture 600 here. I'll go to the 1 minute. You might be able to see it. But getting smacked at 600, getting smacked at 600. And here, I guess I'll set up an alert on this intraday low just in case that happens to break in pre-market trading. Who knows what's going to be happening today? The fun is not over by any means, folks. So if you're just joining right now, why everything is so blood red, why we're having such an absolute bloodbath at this moment is at 8:30, about 21 minutes ago, we had an inflation report, a consumer price index report that was not good. Inflation came in higher than expected, and it just sent the market down. I mean, within this first minute, the SPY went from 605.50 to sub 600. We dropped over $5 within 1 minute. And then for the next 7 minutes, we just bled down. There's a little bit of a reversion now. We're kind of just like halfway in this dancing around range, but geez, brutal. Absolutely brutal. And as I alluded to, the fun is not over there. Here are the numbers. They were expecting 2.9. It came in at 3%. They were expecting 0.3 month over month. It came in at 0.5. Not good. But today in itself, you could see here at 10 a.m., Jerome Powell, the chairman of the Fed, Daddy Powell, he's going to be testifying again. Yesterday at 10, he was testifying to the Senate. Today, he's going to be testifying from the House. So yesterday, we got to hear from Pocahontas, Elizabeth Warren, and a lot of people are calling it out. They're like, hey, how do you make $2 million a year when your pay is only $200,000? Like, where's the other money coming from? So I don't know. Maybe she shouldn't be asking numbers about our money, where it's questionable where she gets her money. And then today we get to hear from AOC. And I wonder what big brain questions she's going to end up having them. I feel like she just continually embarrasses herself. I think a lot of these politicians who left, right, they all like try to act as if they know so much about finance and the economy. And then we hear the questions that they're asking, and it's as if they didn't even take time to like Google what the Fed does. So it gets all forms of confusing, but that's going to be happening today, 30 minutes into the trading session. Very quickly, just to cover it, we are in earnings season. So Supermicro, they reported yesterday, very strange. At first it died, and then it popped, and before the CPI report came out, at least, it was back in the green. Is it holding right now, SMCI? SMCI, yeah, it's up 10%. So it gave back a little bit on that bad CPI report, but overall it is up 11%. So holding well. I'm not the biggest fan of it as an investment right now. I like the sector it's in. I just don't like what's going on with their reports. Supermicro confident it will meet SEC deadline and reach $40 billion next fiscal year. So the CEO said he's confident that the company will file its delayed annual report by the U.S. SEC Feb 25th. When you get accused of accounting malpractice, I don't know, where there's smoke, there's fire. So I hope that they're not doing anything. It is seemingly, if you're just looking at the sector and the company as a whole, it seems pretty good, but I don't know. Like, I don't know what to tell about it because I don't know if they actually were doing like kind of shady stuff with their accounting. So that one freaks me out a little bit. And once again, when it comes to the market where there's smoke, there's fire. Generally, these types of accusations don't get levied on absolutely nothing. So I'm a bit concerned about it. But in terms of a trade, yeah, this thing moves. I mean, recently we've had a huge explosion, great opportunity, but I would be worried about investing in it until this whole situation gets cleaned up because I just don't want to take on that legal risk. risk. But as an active trade, yeah, this thing, well, it goes from periods of moving a lot to kind of going a little bit more dormant. Right now, it is moving a lot. So I completely understand that. If you're playing things like earnings, hey, have at it. And if I had to bet right now, I do bet that the whole situation does get resolved. But once again, it's just like an external risk that market is tough enough. Trading is tough enough. Investing is tough enough. I don't need to add in another uncertainty. So for me, I'm just personally going to wait until we figure that out. That's pretty much what I'm going to be waiting for. Like I said, if I had to bet right now, I do believe it's all going to get resolved. It seems like the SEC is not like really like putting them out, like hanging them out to dry here. But still, where there's smoke, there's fire. So I think for me, it's taking on a little bit more of a higher risk profile, especially when I could get semiconductor return by just getting into like whatever, Soxel, SMH, Broadcom, NVIDIA. It's not like this is the only well-known player in this space. So I would be more willing to mess with it if there weren't other very popular names. But the fact that there are, that's why I'm like, well, why am I taking on this legal risk? Also, just other wild stuff going on just before we get back to the options breakdown on the chart breakdowns for today. Musk says Doge is what democracy is all about during an Oval Office visit. So he was speaking with Trump yesterday. Actually, we'll play this. This is a good clip.
In the Oval Office just moments ago, Eamon Javers has the details. Hi, Eamon.
Yeah, hey there, Morgan. The president and Elon Musk are talking about Doge and its efforts to cut federal government spending. Elon Musk was asked by a reporter in the room if he's conducting a hostile takeover of the federal government and if this is being done with a lack of transparency, as a lot of his critics say. Here's what Elon Musk had to say just a few moments ago.
Well, first of all, you couldn't ask for a stronger mandate from the public. The public voted.
I like how he just brings his son. His son is down there.
We have a majority of the public voting for President Trump. We won the House. We won the Senate. The people voted for major government reform. There should be no doubt about that. That was on the campaign. The president spoke about that at every rally. The people voted for major government reform, and that's what the people are going to get. They're going to get what they voted for. And a lot of times, people that don't get what they voted for, but in this presidency, they are going to get what they voted for. And that's what democracy is all about.
His son just vibing over there, not caring.
Mr. Musk, the White House says that you will identify and excuse yourself from any conflicts of interest that you may have. Does that mean that you are, in effect, policing yourself? What are the checks and balances that are in place to ensure that there is accountability and transparency?
No. Well, we actually are trying to be as transparent as possible. In fact, our actions, we post our actions to the Doge handle on X and to the Doge website. So all of our actions are maximally transparent. In fact, I don't think there's been, I don't know of a case where an organization has been more transparent than the Doge organization. So, and the kind of things we're doing are, I think, very, very simple and basic. They're not, what I mentioned, for example, about Treasury, just making sure that payments that go out, taxpayer money that goes out, is categorized correctly, that the payment is explained, that organizations on the do not pay list, which takes a lot to get there, that actually are not paid, which currently they are paid. These are not individual judgment decisions. These are about simply having sensible checks and balances in the system itself to ensure that taxpayer money is spent well. So it's got nothing to do with, like, say, a contract with some company of mine at all.
But if there is a conflict of interest when it comes to you yourself, for instance.
So you hear Elon Musk and the president there. Fascinating moment, Morgan. Almost really evolved into a dual press conference with Elon Musk and President Trump sitting there in the Oval Office talking to reporters for just over a half an hour's time. Elon Musk here at pains to say that he's doing nothing more with Doge than a sort of good government effort to trim any kind of fraudulent spending, any kind of lax attention the Treasury might have had to payments going out that were in some way improper. And Musk really making an effort here to address his critics who have said that what he's doing is sort of under the cover of the dark of night, taking over the federal payment system in a way that appears to the critics to be malicious. Musk here saying, no, nothing of the sort, guys.
This actually reminds me, Eamon, of when you and I spoke to Vivek Ramaswamy, who's now the former co-chair of Doge, and he talked about fiduciary responsibility and treating it like a business. Really fascinating. All
right, so two things on this. First of all, I am surprised that that's not how our system ran anyway. It blows my mind that we are sitting here in 2025 and the major issues of government and our money is, we don't know who we're sending it to. We don't know how much we're sending. We don't really keep track of it. And we do know that sometimes we send money to places that we know we shouldn't be sending to. And it's just like a complete mess up. The fact that it's like that poor, like that random, like there's no oversight. I found that to be absolutely insane. But what's also interesting is directly related to Elon, and it's seemingly as he's getting more and more tied into this world of politics, the stock is not doing so well. Tesla dropped 6% after BYD partners with DeepSeek. Musk adds to Doge distractions with OpenAI bid. So I think right now the market, SMCI is losing a little bit. Tesla is recovering in pre-market right now, but obviously really since this high at 48.54 that we saw in mid-December, actually that was the day of the FOMC meeting, since then lower highs, lower lows, and it just got into a little bit of a puke fest over the past 4 days of trading. The amount that Elon has going on top of some of the increased competition with just his direct competitors in the EV space, the market has not been liking that whatsoever. So I just wanted to bring that up because I still like Tesla as a long-term investment. I made this very clear over the past couple of days. Long-term, I'm an investor. I'll happily buy the dip and add it to my long-term portfolio. But as a breakdown trade, this was a very evident breakdown trade. We had the opportunity to break out of this trend on Friday, January the 31st. Got smacked, couldn't hold the 48 EMA, and then ended up breaking this support from right here, the 2nd of January. Snapped that and just puked, and it puked real quick. It went from 375 down to 325. That lost $50 in 3 trading days. Just got absolutely pummeled. Now, the bottom might be in. We got one downside gap fill, and we almost got the other. So I'll be watching it because this was a strong bounce, but even with the strong bounce, it would have had a much better chance had we not just gotten this hot inflation report. So definitely things to consider. What just happened? Oh, we just made a fresh low. Oh shit, I'm back in the green. Your boy's back in the green. Back in the green. I also moved my profit target down a little bit, but back to where I should be. Dude, I don't know. I might just take this. If I see a count going overall green today, I might just take this money and move on with my life because golly, today's going to get nuts. All right, so the SPY just made a fresh pre-market low. The market's getting beat up. There's panic. There's fear. It's all good. I'm telling you, folks, if you're joining in right now, the major thing I want to call out to all of you, where are we on SPX, the actual level? We are currently at 6,004. The key level, we closed at 6,068. We're opening all the way down here. We are dropping this much. If 6,000 doesn't hold, we might have a shot to recover at 5985. There might be a shot to recover there. There is some options positioning, but the next real, the clear support that we're seeing in the options market is all the way down here at 5950. That is, I'll show you this again. We could see right here, the open interest, 5950. This is the current running open interest on the SPX, the S&P 500 complex. It's the biggest one that is close. So I'm worried that if this spike right here, this options positioning doesn't hold, we literally might be talking about another 50-point sell-off, which is roughly equivalent to $5 in the SPY. So to kind of articulate what that really means, the SPY is currently trading at 598. If this does not hold, we might be talking about 593. So just to give you that comparison of converting these two, today's going to get wild. I very much hope you have on your Lucky Buffalo shirt. Not only is the market probably going to severely overreact to this, but don't forget Jerome Powell is speaking at 10 a.m. He's testifying in front of the House today. Golly, we have a lot going on. So even with all this craziness, yesterday had a very good day in the Goonie Trading Discord. If you're watching this right now, please understand you can get into the Goonie Trading Discord for free. Test drive it for a month. See if it's for you. If you like it, great, stick around. If it's not for you, hey, I'm not everyone's cup of tea, glass of wine. I'm some people's bag of gasoline, and that's just how it goes. But I don't want anyone to feel like they got. So the promo code to go in for an entire full month for free is Goonie. So make sure you're checking that out. Here's what happened yesterday. Piper marker ended up firing pretty late, around 11:35, 11:40. It was bearish for it at 5 confidence, a SPY and a Q call credit spread. That ended up paying nicely. For the minimum capital requirement of 344, it returned 56. Obviously, you could scale that up. This was just the minimum unit sizing. I ended up not really playing Piper. I ended up doing more of those edge flow plays that I explained to you yesterday. So I sold some premium at yesterday's close, and then I sold some premium at where I saw a lot of other traders trading. Once again, they were both call credit spreads. I ended up getting in the first trade around 10 and got out at 1, and the second trade I got in at 11 and I got out a little less than 2 hours later. So both of those together, $2,865 before fees. So obviously, Goonie Discord crushing it. Also yesterday, I've been swinging those Tesla puts that I showed you. Ended up, I completely got out of it at market close and ended up making around $23,000. So really, really good day over there. Once again, you can test drive this whole community, see if it's for you. You get my trades, the Piper signal, you get access to the previous lectures, but most importantly, you get access to the community where there's people in written chat and voice chat all day, just bouncing ideas off of each other. So if you want a group of like-minded traders, check out the Goonie Trading Discord. And when you sign up, if it's not for you, you still get a lot of freebie stuff, such as this newsletter. You've never had to pay for this. You're never going to have to pay for it. So even if you're like, no, the premium account's not for me, sign up on Locals, because at minimum, you're going to get this newsletter that has a lot of great information. I break down the week, all of the major earnings. Then I give you a little cheat sheet of the major macroeconomic events. For example, CPI, Powell is going to be testifying today. We have the 10-year note auction at 1, and then we have 2 different Fed speakers. Bostic and Waller are going to be speaking at 2 p.m. and 5 p.m. respectively. Tomorrow we have the PPI report, another inflation report, the normal initial jobless claims, and then we have retail sales on Friday. And this is probably the most valuable, but I give you the seasonality for each individual trading day. Over the past 27 years, had you bought at open and sold at close on this individual day, this is what your equity curve would look like if you engaged in the S&P 500 futures market, trending up, trending up, trending up, huge green day, and then over the past couple of years, giving it back. So because of this, like this part's bullish, this part kind of hurts that trend because there was one year that it really got hit. So it's still leaning bullish. The bulls have won this day 59% of the time, but judging from how the market looks right now, I don't think that the bulls are going to be in control on this particular day. Tomorrow, just so you know, it's leaning a little bit more bearish, and then it's more bullish on Friday. Really, about 12 years ago, Friday started to get more bullish. I do want to remind you that we are in a bearish time period, though, for the next 4 to 5 months, 4 to 5 weeks, not months, 4 to 5 weeks, the bears end up kind of dominating. Like late February, early March is where the bears like really kind of shine on the year. Early this morning, we had President Trump popping off on Truth Social. Biden inflation up 3 minutes ago. Dude, this guy, he's ripping it. He is ripping it for sure. He's just popping off this morning. This guy. Oh man, I would pay to be a fly on the wall when he's doing this stuff. Oh, geez. Trump posts CPI data drop. All right, we're getting that out into the world. So we have all of the key levels. I explained the trading plan to you. It's all going to come down to this 6,000 level. Is it held? Is it not held? That's what we have going on today. I suppose just to clean up the chart, I'm going to get rid of these for now. I think sometimes that makes it look ugly and tough to play. So I could always add them back in. But what you need to know is the yellow golden lines are key option levels. The green is yesterday's high. The red is yesterday's low. And the white is yesterday's close. So high, low, close, and then key option levels. That's what you have going on the chart, just to, I guess, help, I don't know, with any potential confusion. But what I'm looking at is basically, we know that SPX, the 6,000 mark, is just below where we're at. The SPY's trading at 598.70. So it's going to be around 598.25 is equivalent to that big SPX breakdown. So watch that 598.25-ish area. If that does not hold, we're talking about like They might find support at this 48 EMA, but we're really talking more about 593 potentially on the day. So that becomes a very real possibility if 598 does not hold. So mark that down, pay attention to it, write it down, do whatever you need to. But I'm so curious how the option players are going to get ready on the day. Actually, let me reload this to see if we've had any big changes in the options market. This player is about to get paid. Coming into this CPI report, some absolute Degen Chad was just long 4,000 puts at that 610 strike, and man, oh man, is he going to get paid. That guy, like I said, that absolute Degen Chad, he is going to make a killing this morning. This was created before the CPI report, so he was able to benefit off of a 70-point dump. He was buying 4,000. What a player. This guy just made millions. Hey, if that happens to be any of you in chat, quick congrats to all of you guys. Quick congrats to all of you guys, because that is a savage. Chad Brown. Hey, I heard my name. Hey, man, if that's you, that is incredibly awesome. Obviously, when the market gets going, I have the options flow. We're going to be checking that out. Once again, if you want this options flow, the thing that I trade with day in and day out, Spot Gamma is the name of the company. It's the name of the analytics platform. Right now, they're offering you 80% off on the first month. Pinned to the top of chat in the description of the video. Are they popping off on CNBC? I would only imagine. We have the SPY continuing to trend down. Tesla's now taking a hit. Bitcoin, remember that breakdown level is at 92,000. So we have Tesla. How's NVIDIA? Ooh, NVIDIA is turning south. Dude, this is getting bad today. This is getting bad today. So obviously, we're going to be watching the market. We're going to be watching the options flow. But then don't forget, in roughly just under an hour, around 10 a.m., we're going to be listening to Jerome Powell. Daddy Powell is going to be testifying in front of the House. And if he continues to go with this rhetoric of, hey, we are not cutting rates, on top of this reaction, that might be adding a little bit of gasoline to the fire. So I definitely want to throw that on everyone's radar. Obviously, the 5 minute, the 10 minute, the 30 minute, the 4 hour are all now red. They're all bearish. The 5, the 10, the 30, the 4. So we have all of the S&P 500 complex and then all of the NASDAQ complex. Right now, price action is favoring the bears. I don't really have access to the options right now. I'm waiting for market open, but I'm going to go out on a limb here and guess that it's going to be bearish. All I can tell you is that my lucky shirt is striking again because I was in this position for a while. SPY puts, I thought inflation was going to come in hot, but I was getting beat up. Theta was eating me alive. I'm so excited for this to bounce back. Same thing. I had big puts on the SPY, big puts on the Qs. I mean, we're talking about $18,000, $19,000, $20,000 worth of a position, and I was getting beat up to the tune of 50%, 59 and 60. So it was down about 11,000. I'm hoping that when this opens, I'm up 11,000. I think at market open, and I could do the math, but hey, that's not fun. I'd rather just be surprised. But I'm thinking that what we have going on here, we might be seeing about a 20K swing. So I'm hoping this account goes from 63 to about 83 or even higher. I would be stoked. And I suppose a fair question is am I going to take this out of at market open? No, I am not. I know that might sound crazy, and some of you might have the mindset of, wow, if you're down on a position and luckily go green, shouldn't you just get out? No, because I know that the risk reward here, if this does not hold, if 6,000 does not hold, we might be talking about a push all the way to 59.50. We might be talking about the SPY at 593 today. Do you know how much more valuable these puts are going to be if that doesn't hold? So, of course, I'm taking on a risk because we might just bounce right here. What we are currently seeing, true. That might end up just being the low. We might bounce off of that. 100% sure. Yes, that is a possibility. But, folks, I have on my lucky shirt. I don't think you guys are really taking that into account. I don't think you're really internalizing that yes, okay, risk reward, we're at support. Should you be preying on the breakdown? That type of a thing. Yeah, that's fair. But you need to remember how much luck is involved in this. There is an absurd amount of luck in this individual shirt. And I'm not the best trader. I think we all know that. If you guys have been watching me for any amount of time, you know that I am not the best trader. But I am the luckiest trader. So please take that into account when you're attempting to tell me what to do with this position. Because like, if there's a chance something does break in my way or doesn't break in my way, there's a better chance than not that it's going to break in my way, because once again, I am the luckiest trader on this side of the Mississippi. So please take that into any of your analysis. But right now, this is a bloodbath, an absolute bloodbath. It'll be interesting to see if ES gets all the way down to 6,000. NQ, I mean, we pretty much tapped 21,500, so I wonder if that's going to hold. But this is a mess. I wonder what the first minute reaction is going to be. Like, are we going to puke right out of the gate, or are we going to bounce? If you guys had to guess on minute one, just from 9:30 to 9:31, do you think that people are going to panic and sell? Or do you think there's going to be so much bearish monetization that we end up actually popping in the first minute? So if you had to guess, literally just minute one, from 9:30 to 9:31, minute one of the day, are you looking for a puke or a bounce? Do you think there's more people who are going to be scared and panic and they sell? Or do you think there's going to be so many bears locking in their profit that they're just like good to go and like we end up bouncing off of that? Bounce, only go up. Puke, if we have a huge gap down, I'm guessing first candle is going to be green. Pop, bounce, puke. You guys are all over the map. Pop, bounce, crab. Crab's not an answer. That doesn't really count. Going up, puke, green, stay. Sell, pop, bounce, popping, puke. Bearish will cash out. We're going to find out soon, team. We are very much going to be finding out soon. We are really lingering around these lows. You know what I'm going to do? I'll just set up an alert in case it's always interesting to mark out the pre-market highs and lows. That does give you a good sense of if the session is bullish or bearish. So I'll have an alert, but the pre-market low as of now, and granted we do have about 15 minutes ago, is 598.23 on the SPY, and it is 521.32. Let me see. I have this one app that does a breakdown of options. I want to see how much the complex has changed this morning on us. Dude, this could be a bad day. I mean, the SPY is already down 1.07%. It's down $6. Then you have the Qs that are down 1%. Right now, coming into today, the options complex was dominated by calls. So those people just got absolutely murked. And it looks, we have huge open interest at 6,000. The only thing that eclipses that, and it eclipses that by 3x, is 5,950. The more and more I'm looking at this, the more I'm diving into the options data, the more I'm realizing that 5,950 is a very real play. And if you guys are trading SPY, that's closer to 593 and some change. So once again, just to convert those levels of SPX to SPY, I use SPX mainly because I trade SPX over SPY. But yes, 6,000 is big, but 3.5 times bigger than that is the net delta, and almost the net open interest at 5,950. So the more I'm diving into it, this level, let me go to the 10-minute here, all the way down here, all the way down there, this is becoming massively important today. So the way I'm looking at it is we're going to open up around here. We're around 6,000, pretty much where the SPY is now, around 598 and some change. We're going to open up here. If we don't get a decent reversionary bounce, yes, there is a shot of it saving itself at 5,985, but really the longer we spend below 6,000, the more the odds increase of dropping all the way to 5,950. Just doing a little bit more of an in-depth breakdown of what in the world is going on. Dude, this could get brutal. Well, buckle up, Buttercup, because today is shaping up to be a fun one. So we'll wait for this to open. I have this little bit of green. Tesla is actually probably trying to hold the best right now. NVIDIA is also just getting some mashed. Today's going to be wild. We're ready with options. Do they have our boy Rick on? I don't know if he's going to. Trump says interest rates should be lowered. Okay, we saw that on True Social. Zelle payments top $1 trillion in 2024 as networks growth outpaces rivals, including PayPal. Do they have our boy? No building AI infrastructure. This is the Stargate. This has a lot to do with the current OpenAI fight that Sam Altman and Musk are having. A lot of it is going to be connected to Stargate project. Whoa. Dude, I just can't imagine. Imagine being in the room with this guy right now. 4,000 puts. What an absolute savage. So let me just a little bit of how Delta interacts with price and market making. When this player bought the 4,000, this player went long 4,000 puts. That adds a lot of negative delta to the system. If we were watching it in real time, it would be like one of these big dives right here. It's adding a lot of negative delta. So if this player chooses to remove his position, as in hit the cash register, take the money, aka sell his puts. If you're selling something negative, he added a lot of negative delta. So if he clocks out, if he takes his money and runs, he's going to be removing that negative delta, which once again would look like a reversion coming back up. When that happens, remember, market makers are going to be hedging their books by their delta exposure. So as delta drops and drops and drops, they're going to hedge their books by shorting the underlying, because that's how you protect your book when the delta is dropping. Now, when the negative delta is added, that's what they do. They protect themselves by shorting. And then obviously the opposite's true. When the negative delta is being removed, as in the delta is going back up, they no longer have to be hedged that way. So they get out of their shorts because they don't need to protect themselves anymore. If anything, that could add another issue to their book. So they're going to properly and this is legitimate. They're just going to remove the short. They're going to buy their short back, which can push that underlying up. There are certain circumstances, and I don't really see the market having that right now, where so many puts are getting closed out that's what induces a Vanna rally. So I guess from the point of teaching, I wanted to call that out, but I don't really see the options complex necessarily having that set up for today. But what I am watching is this player, because if this player ends up hitting the cash register and leaving, to stop beating around the bush and explain this directly, if this player decides to lock in their money, I would not be surprised if the delta pops by quite a bit, thus allowing price to pop by quite a bit. And then that might be more of the situation where we kind of rebound up to 6,030 or somewhere. We might get a 10, 20, 30 point bounce in SPX. So that's what I'm going to be watching, this particular position like a hawk, because that could really sway of, are we bouncing or are we going to break down? Because the longer that they hold, maybe more people are going to start to panic and get concerned about the market. So they'll buy short-term protection by buying more puts, thus adding more negative delta to the system. And then we get an additional breakdown. So that's kind of the main, obviously I laid out the levels that I'm going to be watching, but in terms of the current positioning, this play is my highest interest play. I clearly just want to know what they're going to be doing or not doing. We are about 7 minutes out, and we're seeing a little bit of a reversion right here. It's a baby reversion, but we're going to see how it goes. We're going to see how this one goes. Golly, man, this could get nuts. I think it's going to be a good day. If you're just joining in right now, you missed quite a bit, but the TLDR is we had a hot inflation report come out at 8:30. That's why the market puked, and there's a lot of legitimate concern for where we're going to go today. I would not at all ever tell you right at market open, buy the dip or short this puke. You just don't know how the market's going to react. If you do it, you're flipping a coin. You're going to have 50-50 odds. So if you're okay with a 50-50 gamble, hey, have at it. Have at it. But for those of you who maybe want to increase your odds beyond 50-50, you might want to pay attention more to how do we open, what's the trend, what's the positioning, what's the options flow, and then even a little bit past that, 30 minutes into the trading session, we are going to be hearing from Jerome Powell. So you might want to sit back and kind of wait till what he says. I mean, as a quick reminder from yesterday, I don't think I was trading myself until 10:30. I was just waiting to see how the market was really going to react to Powell. So like I said, if you want to trade out of the gate and you're betting either on a bounce because these put holders are going to be monetizing, or if you want to be short just because you think there's going to be a panic, like I said, as long as you know that the odds are 50-50, bet accordingly, and hey, good luck. But for the other people who are like, you know what, I'd rather take more than a coin flip odds, you might want to just be patient and really see how the flow starts to go. So that would be my tip coming out of this. But remember, I'm not your mom. You and I don't share a bank account, so do whatever you think's appropriate for you. I wish you the best of luck unless you're going against me, then obviously I hope that I'm right. But if we're on the same side of the trade, yeah, I hope we absolutely crush it. I very much hope that we crush it together. So we're going to see, but a little bit of a relief right here. Let me switch over to the 1 minute. We're around 610. We're right at the money for this guy. Dude, I cannot imagine how much money he's up. And this is a 0 DT. I don't think I've clarified that. This guy, it expires today. This was directly a CPI bet. This guy has balls, absolute balls of steel. Crazy. I'm curious what the VIX is going to be as soon as we open. So I'm going to bring that up. The VIX shot up to 17-ish. I'm actually surprised it's not a bit higher. I thought we would be getting in the flirting of the world of 20s. I thought we were going to be at least above 18. So the VIX shot up, and since then it's been holding steady. Remember, this is commonly going to be moving inversely to the overall market. So if you see the VIX popping, good chance you see the SPY dropping. The VIX is the volatility measure of the S&P 500. So generally more vols in the system when things are getting puked on, which is exactly why when this puked at 8:30, you saw the VIX absolutely ripping. So getting ready over there. And then I have Tesla up in the bottom right just because there's a lot of interest in it and for good reason. It's been a lot of crazy movement lately. So that's going to be up on the screen at least for market open. And I also have, you know what? Okay, I mean, marking out the pre-market high is kind of silly right now. So all I have on the SPY and the Qs, this solid blue line on the SPY and the Qs is the pre-market low. So obviously, if you hear those alerts going off, you know that things are getting even worse than they initially were from this reaction. So just wanted to call out exactly what those are. A lot of traders out there pay attention to the pre-market highs and lows, and they'd like to trade with a break of either of those because it shows more dramatic bullish strength or more dramatic bearish strength. So right now, obviously, we're kind of double bottoming off of those levels. Dude, Tesla's taking a hit as we're getting close. I'm nervous for today. I'm curious what today has in store for us, folks. I am very, very curious. Dude, Tesla is now diving from 331 down to 328. Remember, there's a downside gap fill that almost got filled yesterday in the high 324. So just beyond 325. So you might want to check that out on the daily chart. But we are about 3 minutes out. Obviously, I'm excited to see how this goes at open. I was down about $11,000 coming into this. Took a big bet, about a $20,000, $18,000, $19,000 bet on SPY puts and Q puts. Looks like they're going to pay pretty freaking nicely because the market just got murdered at 8:30. Maybe we have a huge reversionary bounce, totally possible. But on the flip side, if 6,000 does not hold, we're scheduled to open around 6,010. If 6,000 does not hold, I am looking for a potential puke all the way to 5,950. I should also clarify, if we do get to 5,950 today, I'd be more than happy to take profits at that level. It's such a key level. I think first of all, the odds of us getting there are not the highest just because it is so far away and just you don't get that many big movement days in the overall market. But if we do get there, the odds of breaking it and really puking below that are even lower. So you're taking a small odds situation of a small odds situation. So for me, I just don't like those odds. So in the extreme event that we get to 59.50, I'd be ecstatic to lock in my tendies at those levels, just to kind of clarify how I'm viewing the market today. So I hope that helps someone. I hope I didn't confuse anyone. And if I did, my apologies. I'm sorry. I'm more than happy to try to, explain myself a little bit better, but I'm just ready to go. Market's going to be opening in a minute and a half. Good luck to everyone. Stick to your plan. Today's going to have wild moves. Make sure you are waiting for those A+ setups. Obviously, you don't need to be taking random trades today. Pay attention to your size, but most importantly, stick to your trading plan. That is the major key thing. Whatever your plan is, do it, stick to it. Don't let just the craziness get to you. You have a plan for a reason, so please stick to it. Obviously, the market open is going to be brought to you by Spot Gamma. Use the link pinned to the top of chat in the description of the video, 80% off the first month. That's exactly the tool that I use to do all this options tracking. And man, oh man, what is going to be happening out of the gate? Oh, I'm excited. I'm hoping that this live play doesn't completely fuck me over. I'm currently down about $700. I'm doing all of this via Apex, and I do believe Apex is currently running an 80% off deal for the next week. So this is currently the cheapest offering for you to get into the world of sim-to-funded trading. If that's something you're interested in, obviously I'm trading on 20 of those accounts myself. That's exactly what I'm using here. I have some other ones, but as of right now, this is the best deal, this nice 80% off deal. I think that means per account, it's like $33 to take the test or something in that realm, maybe $34, just so everyone knows. But let's get rocking. Let the bloodbath commence in 10 seconds. We are rocking it today. 5, 4, 3, 2, 1. Dingity ding ding ding. The world's largest casino is now open. Play responsibly, and if not, have fun. All right. We're not done with the first minute, but the initial movement does appear to be to the upside. We're seeing a little bit of a pop, but is it going to hold? All right. We are 30 seconds in, and we just went red on the SPY, and we're almost about to go red. So there's 30 seconds of a flight, but I'm not seeing a clear uptrend or downtrend right out of the gate on options. Indecisive. Tesla's actually popping. It popped already $3. Let's throw up NVIDIA, just another big player. I'm still in this position. Not my smartest trade. In fact, kind of a stupid trade that I did this. I thought I could get a nice little scalp in. I didn't, but I'm trading with the overall trend. So obviously I hope it breaks in my favor. I think it just so happens that where I got in is also a key level. So if I can get back to break even, I actually think there's a really good shot of me making a good profit. So it just so happens my entry is now setting up to be kind of some support on NQ. So I'll be watching this a little bit more closely. But as you can see from my screen, I'm short at 21,517. I'm looking for the test of 500 and the puke below that. If it does keep puking, I actually wouldn't mind riding this all the way down. I might be able to go for a full 100 points here. Things legitimately could get that bad, but I'll go for 75. 75. You know what? I'm just going to put this here for now. 52, 50. We'll just do 50 flat. So just if a random puke happens, I might be able to lock in this nice trade. Roughly 40. Okay. All right. We're just doing some quick math. Looks like the market's turning against me a little bit right here out of the gate. We tried to get going, got hit. Now we're getting going. I'm assuming we have some puts covering. The Mag 7 options just started popping at 9:31. They waited for a minute. Mag 7, nothing. 1 minute into the day, started to pop right there. The S&P 500 dumped at open. 0 DTEs are flat, but now it's climbing back up as price is climbing up. I'm a little bit hesitant to really make any hardcore extrapolations here because we're only 2 minutes into the trading day. So still, the name of the game right here is patience. Patience. Wait till not only I just don't find that big of an advantage trading right out of the gate. Maybe you're a person who has a strategy that you're consistently making money. You're consistently, taking advantage of positive expected value. But I find that right at market open, it's just messy. It's just everyone's just slamming orders in. It's not just retail traders. It's hedge funds. It's banks. It's insurance funds. It's all the robots. It's just such a messy open, especially on big event days like this, that I find it's easier just to wait for a trend. why take the bet on what the trend's going to be when you could just be patient and wait for the market to tell you what the trend is and then just go from there? But once again, that's just my opinion. If you have a strategy, like I said, that is net profitable over a large data series and you're like, no, I just want to keep trading it, dude, have at it. Don't let me stop you. See, Mag 7 popped. It's now vomiting. The SPY puked, trying to recover. So the Mag 7 and the SPY are telling us two completely different things right now. The Mag 7 did pop, puked. SPY is actually still going. So be careful. Be careful. We don't have much data, but the data we do have is already very, very, very mixed information. Very mixed information. We're not even 5 minutes in and we're just moving like crazy. Oh, I never checked in on these. Oh, I'm still, okay, 76%, 51%. If basically what I need to happen is for this to break. I need 6,000 to break. That's what I need to pay. This is what I need to get paid. A nice snap of 6,000. Remember, the big put player is here at 610. So I'm hoping that he doesn't monetize, because if he does monetize, that could create a little bit of a miniature Vanna rally that might push us all the way up to 6,030. It's totally possible. I'm just hoping that that player holds strong and is also looking for this peak below 6,000. It'll be pretty evident if that player gets out. I don't think it'll go unnoticed. Heck, maybe he's going to do it in portions. All I could see is that the SPY longer duration, no one's really touching 0 DTEs yet. You could see that the green candles are pretty much flat. The green candles are the 0 DTs. The action is in this longer duration. And in the longer duration, people are buying longer term calls. No one's really touching puts on the 0 DT or on the longer. What we're seeing, the only thing really moving right now is longer duration calls. That's going to the upside on the SPY. But if you look at the Mag 7, the Mag 7 is just kind of getting smoked. Someone tried to buy calls and quickly reverted it. No one touched puts, but now that those calls are getting sold, it's dropping the delta, which is exactly why the market's turning a little bit right here. Let's look at the NASDAQ. The NASDAQ, someone sold a bunch of 0 DT calls. Once again, this is on the NASDAQ complex, NDX and QQQ combined. But when you see the giant green bar to the downside, that means 0 DTE calls are being dropped. They're selling it either to create a position or to get out of a position. Whatever it is, it's just removing a bunch of positive delta from the system. All right, here's the Mag 7. Was bullish, went bearish. Now it's indecisive. Looking at the S&P 500, that call buying has stopped a bit. It kind of ripped until about 934, maybe to try to kickstart a little bit of a recovery. Kind of got going right here, but it's at least as of now, it kind of flattened out. Not as much put stuff as I thought you'd see. Right at market open, someone bought a lot of longer duration puts. The delta dropped pretty clearly there. We're swinging back up. Some puts are being closed. More people are getting into calls. That is this push right here, right now. Right here, right now. How far is this going to go? How far are we going to go? It doesn't look like much on this chart when you, I guess, appreciate the size of the gap. I mean, that's pretty freaking far away. But when you're looking at it just from market open, we are getting a bit of that recovery. The question is it going to hold? I should clarify this. Just because we're bouncing right at market open, that tells you nothing about the day. If you're seeing this right here and you're like, I gotta be bullish, this is just going to be a full-fledged recovery. No. Take this from a person who's like seen a bunch of just these news events that cause a giant reaction. The initial move, it might be right. I'm not saying it's necessarily wrong, but I wouldn't take this as gospel, because if you have these call buyers stop, which they might be slowing down here, if this call buying stops, it's just going to get crushed. And then it could get even worse if people start buying puts, because right now I'm not really seeing many put buyers throw in the towel. I'm seeing some longer duration calls being bought. But if whoever this sentiment is, if this person stops, dude, that could be a problem. That could be a problem. So as long as the call buying holds, okay, yeah, there's that recovery shot. The Mag 7 did puke, recovering. So there's a little bit more of optimism right now in the Mag 7. You're seeing the delta really pop right there. But is it going to hold? That is the golden question. The golden question is in the event that we get a retest of 6,000 flat, in that event, will 6,000 hold? And actually at this point on the very short time frame, you can watch that trend line. We are getting higher highs. We are getting higher lows. From market open until now, the trend is bullish. So we puked right out of the gate for the first minute or two. Then we got a series of higher highs, higher lows. I'm on the 15-second chart. I'm really dialed in, so super short time frame. But regardless, you can see this nice trend to the upside. The question is this going to hold? Yes, no, maybe so.
Order filled.
Yes, no, maybe so. Is it gonna hold? Is it gonna hold? Obviously, you can just watch the key touch points. These are going to be important levels if we get this breakdown. But right now, we're just getting this nice grind to the upside as options. The Mag 7 stopped, but the SPY is still pushing. It looks like finally people started to buy 0 DTE calls. Yeah, right here. So some puts being closed, right, starting at 9:38, puts being closed, calls being purchased. This is the first bout of 0 DTE call purchasing on the day. Longer duration call buying has been going on pretty much since market open. I'm not convinced myself just because like the report we got was legitimately bad. So I need a little bit more of convincing before I decide to be switching teams today. As of right now, obviously, when I see the 5-minute, 10-minute, 30-minute, 4-hour bearish, 5, 10, 34. My bias is obviously going to be bearish on a bad report that also just legitimately destroyed price action. All the major timeframes are bearish. So I have no issue with switching my allegiance on the day. I just need to be really, really convinced of it. So I'm just going to wait. I'm going to be patient. I think that there is a good chance that this pop that we're seeing for the first 10 minutes gets completely faded. So I'm just going to wait to see if that's an accurate prediction, or are we actually going to build a solid base right here and stay above it, and then once again, maybe in the short term, go back to being truly bullish. So patience. Potential trend line breakdown. I wouldn't be too worried about it unless we start to snap 6,010 because that would be a whole new trend. So maybe a potential switch right here. Maybe we just see some options get exhausted, but doesn't look like they're getting that exhausted on the Mag 7. Tesla, decent recovery up to 336. I see the SPY and the Qs are up. But please remember, we are about 19 minutes out from Jerome Powell talking. From our friend Jerome Powell, chit-chatting, talking. He's going to get grilled by the House. He's going to be testifying in front of the House today at 10 a.m. So in about 19 minutes, obviously, we're going to be streaming that. I assume he's just going to be reiterating quite a bit of what he already said yesterday, if he chooses to do so. Clearly, at that point, it won't be that much of a surprise if it's the exact same thing. But what he said yesterday, just a very quick TLDR on it, dude, you're seeing some monetization. You're seeing dip buyers stepping in for sure. Whoever predicted bullish at open, technically not in the first minute, but by minute 3, it was a pretty good prediction. Tech is recovering a bit more strongly than the SPY right here. Like tech just keeps pushing every minute. It seems like we're making a new intraday high, which is unfortunate for my position. But wait, just wait. There's a lot of time left in the day today. Damn, we're not even back at VWAP yet. That's how big this sell-off was. Does anyone else, like, this is just a little bit too perfect of a recovery? Dude, my spidey senses are freaking out right now. But maybe they shouldn't be, because I mean the options market, it is strong. Like the Mag 7 truly is popping. This probably has a lot to do with Tesla, of a lot of the put players on Tesla just throwing in the towel. I got so fortunate that I covered my push yesterday. The SPY's back to 600. That might be psychological resistance. Nvidia is trying to get going. Tesla's up 2.8%. Palantir's up 1.2%. I would bet that a lot of this Mag 7 flow has to directly relate to Tesla. Let's just double check that. Yeah. Tesla's really going since 936. More specifically, call buying and puts being covered. It's the double whammy. It is the double whammy on Tesla right now. the Mag 7 is moving up specifically for Tesla, and then Tesla's moving up for very good reason. You're getting calls being purchased and puts being closed. That is removing negative delta. That is adding positive delta. This push, once again, starting around 934-ish, is for good reason. It is for good reason. It is, dude, we are just climbing up like no other today. Climbing up like, look, it's just so perfect. It's so perfect. It's so systematic. And what this is the positive feedback loop that you're going to get from market makers. We've seen it before. We're going to see it again. But this is exactly what happens. It becomes a self-fulfilling prophecy because as people are getting out of their puts and buying calls, it changes how the market makers have to hedge their book. So it pushes it up even higher because they're dropping their shorts and getting into longs. And then as it goes higher, people see that. So they want to jump onto the train. So then it keeps going higher. And that's why you get this perfect walk up minute by minute by minute by minute. It all directly comes back to how market makers have to hedge their book. Did that large player make any moves? I don't think so. I could double check. No. Still there. Still there. 60-60. All right, we are coming up to remember when I was calling out 60-30? We are coming up to this level. I find this to be of high importance, if you will. High importance, 6,030. We have some decent options positioning there. This might be resistance if it gets up there. That's another 5 points. That's another 5 points. So things are brutally red from yesterday's close, but from today's open till now, I mean, hell, we see the Qs pop from 522 to 525. We're seeing the SPY pop from 598 to, it basically just saved itself at 6,000. We got as low as 6,003. That's exactly why I called this level out to you guys. I said, hey, this is crazy important. If it breaks down, look out below. But it also might be major support. And we ended up bouncing, like I said, exactly at 6,003. So was it a perfect touch? No. But remember, when you're getting that close to something, it's a little bit more of an art form than a science, kind of like horseshoes and hand grenades. I think when you're trading at these quote unquote key levels, you just kind of get in that zone type of a deal. But nice recovery. I'm not sold on this being bullish yet. I want to be very clear. I know Jerome Powell speaks now in 15 minutes, but I'm still nervous because with that being said, we didn't actually touch 6,000. And I still see that large put player still there at 610. He went from being in the money to now he's out of the money. This is a nice walk to the upside. The Mag 7 keeps going. The SPY keeps going. Calls are still being bought. Some longer duration puts got closed out on the S&P 500 complex. You're getting the double situation right here. A lot of these puts on the Mag 7 are being closed out. So what you're seeing in this complex, Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, yeah, there is some bullish aggression, but it's more of that Vanna rally thing that I was referring to, where so many puts get closed out that the market makers just don't have to hedge as many puts. So when you don't have to hedge as many puts, that means you're buying back your short and thus pushing it up. So yes, there is some bullish aggression there. That's what you get from the calls, but it's also, they work in concert together. Like they're kind of playing off of each other. So this is crazy. Is it just going for this upside gap fill? Is it literally just going to clean up the chart and then vomit from there? Wild. Wild, wild, wild situation. Unbelievable. Wow, we might be getting one of the rare red bars on the day. We got really close to the upside gap fill at 528.83. The odds of it are high. They do drop, though, on news-driven days, so we might get there, we might not. I see Tesla turning a little bit. Nvidia is holding pretty strong. At this point, we're kind of doing two things. We're awkwardly waiting for Jerome Powell to give his testimony to the House today. And we're kind of waiting to see if this options trend changes. Because I do want to remind you, we're only 18 minutes into the trading day. There is a lot more time in this particular trading day. But thus far, from 9:32 to this moment, we just have systematic walking up. And we're seeing it perfectly play out in options. The SPY is actually now starting to turn. We might have a little bit of a topping situation. A little bit of a topping situation. We actually not only ran up to pretty much the upside gap fill, but we're also at VWAP, the volume weighted average price. So this is kind of an equilibrium point. A little bit of an equilibrium point, if you will. Is it going to hold? VWAP appears to be right around, I don't know, 21,660 on NQ. All right. Is this a peak or is this a healthy breather? Are we just going to drop a little bit and put in a higher low on NVIDIA and Tesla? And, well, the SPY and the Qs really didn't dip at all. Like, this is a baby dip, but I guess the fact that we even saw a little bit red when 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, a neutral candle, 12, like, it's just every candle has pretty much been green. Crazy to watch. The mathematical reasoning behind it all has to do with market makers hedging their books when so many people are getting into calls and closing out their puts on a vomit. You got to get used to these types of situations. They happen a lot. Like, it's just, it literally just is all because of hedging. It's all because of hedging. Bear trap, bull trap. Yeah, it feels like everyone's getting trapped in, regardless of which direction you're playing. The bulls got trapped this morning. The bears got trapped a little bit later. This might turn into a bull trap. Like, who freaking knows? Who knows? Who knows? All I can really tell you is early this morning, around 9:32, is where the market saved itself from disaster. Because if we broke down from this level, dude, look at that. We ran right up to my first bull target. This was called out and explained to you before the market even opened today. It was just a key options level. That's how I knew to call it out. And it looks like we're already reacting to it. Be careful. I would not be chasing long here because it's resistance. The same thing, you don't want to chase short here. You don't want to go long at resistance and short at support. That doesn't make sense. If anything, if you're already swinging a position into it, of course, you're just hoping it breaks in your favor. But if anything, you'd want to be playing the reversion off of it. So watch for this to be the top because that is a key options level. I now see the SPY starting to turn. I now see the Mag 7 potentially turning. It did take a bit of a hit, but maybe it's popping a bit now. But like I said, we ran right up to my first target, and now we're going to have to wait to see if it holds or not. If it holds and we get smacked back down, I'd be watching 6,015. But maybe we do get a breakout. I don't know. All I can tell you is it's a key options level. And when you come up to these key levels, the goal isn't to play the breakout or the breakdown. Maybe it does or doesn't go in your favor. It's not like there's some sort of model that's like, yeah, we're always breaking out here. Yeah, we're always breaking down there. That's just simply not how it works. A better way to describe it is more along the lines of it's a key level, so just pay attention. Pay attention to the breakout. So right here, okay, we're at a key level. Maybe we're showing some strength. One tool I could use, we could get a little bit more info. Let me log into this. Let me log into this. Let's go over here. Let's go over here. Okay, 6,030 resistance. Next level is 6,050. I thought I had that marked out. I do not have that marked out, but 6,050. If this holds and we keep going, we don't need this trend line anymore. And we also don't really need this or this. Next level is 6,050, all the way up to where my cursor is, which would be about another $2 in the SPY, roughly. But I'm not necessarily counting this as a breakout yet. I mean, just because we're above it for 30 seconds, that's not, in my book, a real breakout. But we are just being systematically walked up. The Qs did just get their upside gap fill, just perfectly tapped it at 525.83. So I wonder if this is going to be resistance. So be careful on the reversion back below 524.70. And then I suppose we could watch 647 on the SPY. So Tesla's looking good, higher highs, higher lows. NVIDIA just popped up, kind of sideways trading. A lot of red on the watch list, but from intraday, from the open till now, things have been clearly trending to the upside. Clearly trending to the upside. What a freaking day we have going. What a day we have going, folks. All right, I'm just waiting. I'm just waiting at this point. What's the flow look like? Mag 7 popped, gave some back, showing a bit of strength. Price is still walking up, but options are starting to maybe blink a little bit. We're not seeing a strong follow through as we were. The S&P 500, similar situation. What I find interesting about this push in the SPY, even though price has ripped from 598 to 601, dude, multiple dollar rip, no one's really touching zero DTEs. Look how flat the zero DTs, and this is the combination of SPX, SPY, XSP, and ES. This is the whole S&P 500 complex. The fact that price has gone this much and zero DTEs are not following suit, that should be a little bit of a red flag, folks. That should be a little bit of, whoa, what the fuck do they know that I don't? Like, you would think with this huge rip to the upside that zero DTE buyers would be ecstatic, but they're not. They're not. Look at this. This is just the zero DT calls and puts. The calls were kind of going up, and on a push in price, we didn't make a new high, and now they're getting closed out. And from 946 until now, people are starting to get into zero DTE puts. That's a red flag. Like, something's going on, and it happens to be aligning pretty much. I guess we're it is an overshoot of this key level, to be fair. I guess we're kind of watching this trend line now, somewhat. Yeah, I mean, it's just being perfectly walked up, higher highs, higher lows. I mean, this is size. This is size, and this is perfectly systematic. I'm not chasing it because I'm seeing too many things that make my spidey senses go crazy. So this is the zero DT look. People are dropping zero DT calls, and they've been purchasing zero DTE puts. And then if we look at the all expiration, this is where the market strength has come from, is all expiration calls have been going nuts. That's this orange line, just up and up and up. Since about 946, it stalled out. We're not seeing new highs in this, but we are seeing longer duration puts now being purchased since 947. The blue line's dropping. So this is a very roundabout way of saying I would not be going long here. Obviously, I am biased to the downside just because I have eyes and I can see red. But with that being said, I'm not married to the downside. I'm more than happy to switch my bias, but just objectively looking at this, the options market and the price action is telling us something funky is going on. Thus far, the market's been systematically walked up, and that relates to the options flow and how market makers are hedging their books, and that hedging is what's causing this pump in the market. The question is, what happens when all that hedging, or I should really say unhedging, what happens when that's over? That's what I'm kind of waiting for. And maybe it's going to be even more bullish, and maybe Powell pumps it, maybe he says something positive and we see another round of call buying. Or maybe as soon as this is all done and he says, what if he gets up and he's like, dude, we are not cutting rates. Did you see inflation this morning? That legitimately might be setting us up for another test of the intraday low that we saw at 931. So I'm closely watching this trend line. I am watching this pattern. Yes, we have higher highs, we have higher lows. We're kind of overshooting this resistance, and so if it gets knocked back below it, that's not so good. But I think the key thing here truly is to pay attention to the options levels, just watching this flow, because you can see the faucet got turned off at 947 on the S&P 500 right here at 947. Yes, price went higher. I'm seeing that with you guys. But since then, the delta is making lower highs and lower lows. When I see that mismatch between price, okay, why is price still going up, yet the options market is no longer that bullish? That should be a huge red flag. That should be a massive red flag for everyone. So I'm waiting to see how this plays out, but I know it sounds crazy to say right here. I'm not blind. I can see a lot of green. I can see a big pump, but I still think this might be setting up for a test of the intraday low that we saw at the first minute in the day. Am I a biased player? Of course I'm a biased player because I have a bearish position. So maybe I'm just convincing myself. I don't know. But I think I'm being kind of reasonable I'm seeing options just drop. I'm seeing options drop. I see that we're at a little bit of a VWAP test here. So maybe on a breakdown of VWAP, I had another contract in. Maybe that's how I'll play today. VWAP on the NASDAQ is 21,662. So maybe on the breakdown of that, I create a new position and get involved. Because I was basically short. Yeah, if I could short, I'll be cutting it in half. Tesla's catching a bit of a pop. Mag 7, S&P 500. All right, we're about 2 minutes out from Jerome Powell. So let me get ready with that because we do have to listen to this guy yapping. All right, where is that link? Where is that link? CNBC. Hearing entitled The Federal Reserve. All right, we have some awkward whatever music this is. Just the Committee on Financial Services. All right, let me get this up so you guys can also see it. All right, but we did find the link. They haven't started yet. I'm paying attention. I need to do this quick because I might need to throw on a trade here soon. I might need to take advantage of a potential reversal. Window capture, add source, nope. That was the wrong one. How do I do this? Window capture, add a new source. Okay, we did that. Public, okay. All right, we did this. Let me do a little bit of editing to clean this up a bit. Make it look a little bit better for y'all. I wonder if this is the peak of the day. You think Powell's going to just tank this? I could have done a better cleanup job. I know no one wants to see those borders. All right. Ooh.
Order submitted.
All right. Like I said, I'm going to take a stab at the reversion. It brought my average up quite a bit. So what can I go for? Hang on. I'm just doing some quick math to know where to place that. $31. So what I am targeting is the max I believe I can make today is 31. Something like that. So if the trend changes before that, I'll get out earlier, but I just need to obviously know where my math is. I guess I could get a little bit more fun. Let's go to 300 tick. But I just looked at this breakdown of VWAP. Obviously watching the market today, huge recovery all the way up to VWAP. Tapped it, tried to get going, couldn't. Lower highs, lower lows, failure at VWAP. And I wouldn't be surprised if something Jerome Powell says causes it to break, but we got this upside gap fill. I'm seeing options. Folks, I called this out to you. I don't know what to tell you. If this works out how I'm predicting it, I'm telling you, I think if options keep dumping, and the SPY might be catching itself right there, the Mag 7 is popping. But we got rejected. I was off by a rung on this one. I thought 30 would be the key level. Turns out it was 35. But what I'm looking for, if options keep going to the downside, if you see that delta keep dropping and dropping and dropping, do not be surprised if we revert all the way back down to the intraday low, which is the most important level of the day, or it's right above the most important level of the day at 6,000. I cannot articulate enough how fucking important this is. I mean, I don't know how, like, do I need to draw 19 more arrows for all of you? Like, I don't know what you guys need me to do, but this is the level of the day. I do not see how we get out of this day without testing this level. It is that important, which is exactly why in real time I'm playing this reversion, and you guys are about to witness the comeback trade of the day. Can he pull this off before Jerome even starts talking? Can he do it, folks? Can he do it, folks? You can see my risk. Actually, I should update my risk. Is he talking yet? Please yell it. Like, I'm already seeing that it's 10:03 and he's not talking, but if I'm just on the wrong stream, I believe I'm on the right stream. But if you guys see something funky happening, obviously, like, call it out to me. But I do need to update my risk. Okay, dropping my risk. Remember, my job, risk manager, lower the risk, lower the risk, lower the risk. That is my goal. My favorite comfort food. Recently, I've been eating so much Chinese food. I don't know if that counts, but like over the past month of my life, wonton soup is like, let's just put it this way. The wonton soup industry knows my name. If I'm going to be frank with you, the wonton soup industry, they know what your boy is up to on a daily basis. They 100% know my name. All right, I don't know. You see as many freaking arrows as I do. I know it. I called it out in stream. When we were pumping, I was like, I know this is crazy, but don't be surprised if we have a 30-point puke all the way here. And I'm going to make a crazier prediction is if this does not hold, don't be surprised if we're talking about 59.50 today. I'm fucking Mystic Matt. I'm reading you a script from the future. Maybe I'm right. Maybe I'm wrong. All I can tell you is that, what time is it? Nope. I was going to say by this time tomorrow, I'll have already a pitcher of sangria in my system, but that's actually just not true. But 36 hours from now, dude, it's going to go from the wonton soup industry being afraid of my name to the sangria industry being afraid of my name. Come on. Get your boy back in the green. Come on. Come on. I can feel it in my bones. It's going to be a 40K day. 40K. Come on, Matt. Make that 40K. Sorry. This is always the awkward part of the show where you see my head disappear and then awkwardly reappear. But hey, maybe it's fun. I don't know. All right. Are they talking? Why are they so late? It's kind of rude that they're late, honestly. It's a little bit rude. Oh, that's not so good for me. The Mag 7 just popped out of nowhere, but the SPY is still bleeding down. It is still bleeding down. Let's look at the NASDAQ. Nope. The NASDAQ is interesting. Some 0 DTE is going to the upside, but longer duration is getting smashed. So S&P 500 down until about 10:05. We're seeing a little bit of optimism right here at the turn of the hour. The NASDAQ 0 DT has been trending up, but the long all expiration is trending down. And the Mag 7 caught a pop at 10:03, but it appears to be being faded right now, kind of dropping back down. Let's go to the 30-second on all this. Let's not get too crazy. Let's not get too crazy. Come on. Bring me back into the green. Mystic Mac is gonna strike again. I can feel it in my bones, folks. I can feel it in my huevos.
Committee will come to order.
All right.
Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled The Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I will note that at the outset that this hearing has a hard stop at 1 p.m., which we will strictly observe. I'll now recognize myself for 4 minutes for an opening statement. Welcome, Chairman Powell. Thank you for being with us today. For the last 4 years, inflation has crushed Americans. Today, it takes $1.21 to purchase what just cost $1
Popping on the start of this.
2021, as measured by the Consumer Price Index.
Not the biggest
The erosion
fan.
of Americans' incomes and thereby their savings was caused by a combination of irresponsible fiscal policy, supply chain disruptions, but also by, in my view, the Federal Reserve fighting the last war, staying too low.
Don't get tricked by this pop.
Chairman Powell,
Options
you
are
and I
still
discussed
selling.
the previous
They're
hearings
selling
of the Fed,
into
like
this
many
pop.
others,
Don't
assumed
get tricked.
that the
No,
pre-pandemic era of
no
low
tricky.
inflation
No
and
tricky,
low
tricky.
interest rates would
Don't be
continue.
the sucker buying when
This
options are
belief is
selling.
one of the reasons the Fed changed its monetary policy framework in August
Don't
2020.
do it.
Only
I'll
7
yell at
months
you.
before inflation began its 4-decade steep march upward in March of
Come
2021.
on. We're going to cook up
In hindsight,
40K.
the adoption of the so-called flexible average inflation targeting appears ill-timed and ill-fitted for a post-pandemic world. As the Fed undertakes a review of its monetary policy framework, you must account for the lessons of the last 4 years and think about what's ahead over the horizon, not what has been. The Fed has made progress on inflation, but as the last mile seems the hardest. As Bank of America economist Stephen Juneau said yesterday, inflation is stuck above target with risks to the upside. In August 2022, with inflation raging, you gave a speech that echoed some of your predecessors as chair. You vowed to keep at it till we're confident the job is done. It's a vow you should fulfill. With this morning's confirmation that inflation is well above the 2% target at 3%, and making move upwards, other economic indicators are positive. As you reported yesterday, a low inflation rate, solid GDP
Don't
growth,
get tricked
and financial
here.
conditions
It's a
continue to
sucker's
support
bet.
expansion and investment. This is not a time to say that there are no risks, but some perhaps unseen. However, these risks, in comparison to the risk of a resurgence of inflation, are modest. Given the already high prices due to President Biden's inflation, Americans simply cannot afford further price increases at the grocery store and gas pump.
Sucker bet.
Such a
That's the
resurgence would
sucker
likely
bet.
force the Fed to begin another tightening cycle, making mortgages, credit cards, and small business loans unattainable for many. That's why I urge the Fed to forge ahead with its monetary policy duties until you're confident the mission is complete and price stability has been restored. The fact is, over the past decade, we've witnessed too many distracting additional mandates, diluting the Fed's core mission of price stability. This is the reason we formed the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity that will be led by Chair Frank Lucas. The task force purpose is to ensure that the monetary policy actions of the Fed are put under a magnifying glass and prioritized for this committee. And I look forward to our first hearing of the task force. I now want to turn to some of the other Fed responsibilities: bank regulation and supervision. The Fed was created by Congress to be an independent agency. The intent is to insulate the Federal Reserve's monetary policy from political influence. Unfortunately, in the last 2.5 years of the Biden administration, the Fed took on serious liberties with its independence in the areas of supervision. In law, Federal Vice Chair for Supervision
Almost back to green.
is to develop policy recommendations that then are been
Come
brought
to
to
me.
the Board of Governors for consideration. In my estimation, over the years, you and the Board have been too deferential to the statutory Vice Chairman for Supervision.
Options market is getting
Vice Chair
hit.
Barr turned the Basel
Pretty
III
good.
endgame rulemaking into a partisan attempt to propose a massive hike on capital.
Looking for the break
on
of
American banks, making
599.72,
them
and
less
the
competitive.
Q's
The Fed
already
has a chance
snapped.
right now to get back on the right track and preserve its independence for the long-term benefit of the American people.
Nvidia's going,
And
Tesla.
with that, I yield back.
Options flow is getting hit hard
Chair recognizes,
on Mag 7 and also on the
Mr.
SPY.
Lucas, the
I
chair of
told
the
you it was a
Monetary
sucker
Policy,
bet to go
Treasury Market
long.
Resilience and Economic Prosperity Task Force for 1 minute.
Thank you, Mr. Chairman.
Look at that.
While
It's
there are
just
differences of
diving.
approach in this room, a bipartisan guiding principle is that maximizing economic
Back to
growth
break
is the
even.
path
Let's
to
go.
economic
Let's
prosperity.
see some green over here.
It is the single greatest
Let's
factor
see
in
some
delivering
green.
opportunity and improving the quality of life for the folks back home. The actions of the Federal Reserve and the machinery of monetary policy play an important role in economic stability. With the 5-year review of the monetary policy framework underway,
There we go.
I hope this will be an opportunity to evaluate the effectiveness
Oh,
of the Fed's
it's
toolkit
flirting.
and its vast
We're
influence on
flirting.
the lives of every American. The creation of the new monetary policy, Treasury market resilience, and economic prosperity task force will afford us the opportunity to dive deeper into this topic.
Spies
Chairman Powell,
bouncing
thank
a
you for
little bit
being
right
here.
there.
There are real issues that deserve our attention.
We're taking
and I
out
hope,
support.
today will be productive.
Next support.
I look forward to hearing your testimony on the state of the economy, where we're at,
6,010.
and where we're headed. Yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes Mr. Vargas, the ranking member of the Monetary Policy, Treasury Market Resilience, and
Look
Economic
for 5 more
Prosperity
points
Task
down to
Force
610.
for
If that doesn't hold, we're talking 603.
Thank you very
if that
much,
doesn't
Mr.
hold,
Chairman,
6,000
and
flat.
Thank you, Ranking Member. And thank you, Chairman Powell, both for your years of public service and for appearing before our committee
Spies
today.
catching relief.
As a ranking member of the newly formed Monetary Policy, Treasury Market Resilience, and Economic
Puts are being
Prosperity Task Force,
monetized.
I look forward
Calls
to
are
working
flat.
with Chairman Lucas and the rest of my colleagues to
Puts are
address
being
these
locked in
important
right
issues.
there.
The research is clear. Independent central banks perform better in carrying out their mandates than politically motivated central banks. The independence of the Federal Reserve is crucial to achievement of this dual mandate goals to maintain both maximum employment and stable prices. And although this dual mandate has been criticized by some, it continues to serve Americans well. It has not prevented the Fed from making substantial progress on driving down inflation, all the while avoiding a recession, which many saw as inevitable. I look forward to your testimony, Chairman Powell, and I yield back.
Gentleman yields back. I'd like to turn to the gentleman from Michigan and yield to him for a point of personal privilege. Mr. Heisinger.
Thank you, Chairman Hill. And as we all know, all good things must come to an end. And I want to take a minute to recognize someone who is leaving the committee, but has been an integral part of the oversight work Republicans have done over the last 5 years. Although Nicole Vo is all of 29 years old, something that we tease her about on a fairly regular basis, I quickly realized that despite her physical stature, she was a force to be reckoned with. Her dedication to my team, this committee, her colleagues, and this institution are something that we all should aspire to achieve. And Nicole has effectively
Let's give it up for Nicole.
in various roles, from professional staff member right out of law school to now deputy general counsel.
Come on,
this
folks. Let's
particular
get
Congress.
Nicole.
And her
We
time
all
with
know
the committee,
Nicole.
Nicole has worked on or led investigations into Sam Bankman-Fried, the bank collapses of 2023, terrorist
Nicole crushes,
financing,
dude.
culture and corruption at the FDIC, and the SEC's climate disclosure rule, just to name a few. And I've sat through her questioning, and it's fierce and tenacious and directed. Myself, my team, and frankly, the whole Financial Services Committee team can't thank Nicole enough for her work and what she has done on behalf of this organization. And like all good staffers, she has become a confidant, a sounding board, has the ability to say
Mag
no
7
in a very
popping
nice
a little.
way, but in a very tough
NASDAQ
way
as well.
And
SPY
although Nicole will be
is actually
leaving the
trying to
committee, her
recover
contributions will not
with
be
this
forgotten
options
and
flow.
are deeply
What is it?
cherished. So thank you,
It's
Nicole.
more
We
puts
deeply
being covered.
appreciate all
This is
your
not
work.
bullish people entering their arena. These are bears taking their money. So bulls. This is not bullishness. This is a lack of bearishness.
Mr. Chairman, we welcome your testimony. Chairman Powell, you'll be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statement will be made part of the record. You're now recognized for 5 minutes.
Chairman Hill, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment
Delta's
and price
still
stability
popping here.
for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled
Options
from
are
their
popping,
formerly overheated state
taking out this
and
recent
remain
high.
solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy.
Dude, this is the same shit from yesterday, and the
Recent
market's
indicators suggest that
surprised. Like,
economic
come on.
activity has continued to expand at a solid pace.
This might just be a
GDP
higher
rose
low.
2.5% in 2000.
Mr. Chairman, can we ask you to pull your mic a little closer, please? Thank you so much.
Sure. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP
Options
rose
are still going.
2.5% in 2024.
It's just
bolstered
call
by
buying did
resilient
start.
consumer
It
spending.
was mostly puts
Investment in
being
equipment and
closed,
intangibles
but call
appears to have
buying did
declined in
start
the
when he
fourth
started
quarter,
talking.
but was solid for the year overall. Following weakness in the middle of
We're
last
seeing the
year,
same situation on all
activity in
three.
the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady since the middle of last year and, at 4% in January, remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices
Options
rose
are
2.6%
still
over
going
12
up.
months ending in December, and excluding
I'll
the
let you know if I
food and
see it
energy
turn.
categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as
Damn, my
reflected in a
position
broad range of
really
surveys,
turned.
households, businesses, and forecasters, as well as measures from financial markets.
Definitely a stronger pop than I
Our
anticipated
monetary
off
policy
Powell.
actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of progress on inflation and the cooling in the labor market.
Cannot
Meanwhile,
see
we've
these
continued to
bar
reduce our
colors.
securities holdings. With our policy stance now significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy
NASDAQ
stance.
turning south. Mag
We know that
7
reducing
still
policy
very
restraint
strong.
Too fast or too
Huge
much
pop there
could
at
hinder
1018.
progress on inflation.
SPY
At the same
potentially.
time, reducing
Nope, I was
policy
going to say
restraint too
potentially going
slowly
flat, but now it's
or
popping.
Too little could unduly weaken economic activity and employment. In considering the extent and timing of additional
5
adjustments
minutes
to the
to
target
6
range
minutes
for
of
the federal funds
craziness
rate,
right now.
the FOMC will
I have to
assess
now
incoming data,
check out the intraday
evolving
high.
outlook,
This was
and the balance
a
of risk.
strong pivot.
As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals.
Mag
If the
7.
economy remains strong and inflation does not continue to move
NASDAQ,
sustainably toward 2%,
SPY.
we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks to both sides of our dual mandate, and policy is well positioned
10:15.
to deal
Right
with the
when he
risks
started
and
talking,
uncertainties that we face.
the market popped.
This year, we're conducting our second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally assigned goals. The focus of this review is on the FOMC's statement on longer-run goals and monetary policy strategy,
10-12,
which
we
articulates
bought
the
him and
committee's
just
approach to
popped.
monetary policy, and on the committee's policy communications tools. The committee's 2%
Wow.
longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board the lessons of the last 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to
Just a
achieve
rocket
dual
right
mandate
there.
goals
1, 2,
Congress
3,
set for
4,
monetary
5,
policy.
6, 7 green
We
bars
remain
in a
committed to
row. No
supporting
questions
maximum
asked.
employment, bringing inflation sustainably to our 2% goal, and keeping longer-term
It's
inflation
actually kind of
expectations
fucking
well
idiotic that the market reacts like this, and this
Our
is just
success in
robots.
delivering
This
on
isn't
these goals
people,
matters to
because
all
this is the same shit as
We understand
yesterday.
that our
But
actions
yet the
affect
robots are
communities,
acting as if
families,
this is a new
businesses
thing.
across the
It's not a
country.
new thing.
Everything
Any
we do
human
is a
knows
service
we
to our
heard
public
this
mission.
yesterday.
Thank you, and I look
Like,
forward to our
the robots are just
Thank you,
so
Mr.
fucking
Chairman.
stupid
Chairman
sometimes.
yields back. I want to recognize the
As
ranking member of the
advanced
full
and as
committee,
good
Mrs.
as they are
Waters
at
of
some
California,
points,
for
and
a
as
4-minute
quick as they are,
opening statement.
some of the times this shit is just fucking
Good morning,
dumb.
everyone.
Fuck this
Welcome,
lady.
Chair Powell, to
Does anyone like
our
Maxine
country
Waters?
is on the precipice of an economic disaster unlike anything we've seen in recent memory. While Trump promised lower prices for working class families, we're seeing the exact opposite. In fact, grocery prices are rising. According to the Labor Department, eggs are up 40%.
Damn, I might need to bail here.
Than they were even a year ago. In my home state of California, we've seen eggs as high as $9 and more for a dozen. Inflation is rising, and it is up to 3% for the first time since June. And other staples are about to get more expensive as Trump levies new taxes on steel and aluminum. America's consumers and businesses are facing uncertainty and chaos. This is all because Trump and his unelected billionaire co-president Elon Musk are taking a sledgehammer to our economy and democracy. In recent days, they attempted to illegally kill the Consumer Financial Protection Bureau.
We're dumping again in options. Mag 7's actually holding. NASDAQ is dumping. SPY is flat. So NASDAQ down, Mag 7 up, SPY flat. Mixed messaging again. We don't, like, there's no clear path right now.
Banks and predatory lenders, and not to mention returned $21 billion back to families who were swindled.
A, B, C, D, Jesus Christ.
Powell, you explained yesterday that with the CFPB shutdown, there is no agency to supervise big banks to ensure they follow consumer finance laws. In the face of these illegal, cruel, and relentless attacks,
I just got knocked out. Fuck, I just got knocked out for a big loss.
It is urgent and critical that you immediately convene a long overdue hearing with CFPB acting director.
Look at that pop.
Members of Congress,
huge options. Huge options play right there.
Answers as to why Musk and his Doge minions are in possession of
big options move just hit the tape.
Information and what they are doing with it. Additionally, Trump is
look at that volume.
Threatening import
hit
taxes
everything at
on
once.
US companies
hit the SPY, the NASDAQ, and the Mag 7. 1024.
Trump is freezing funds for housing assistance and community development and whittling down the federal workforce so that his billionaire boys club can suck any of these workers' salaries into their own pockets. This is all part of Trump's Project 25 playbook. You know what else he's taken from Project 2025, Chair Powell? Their plan to eliminate the Fed.
Almost getting the upside gap, Phil.
Play out as Trump doubles down on his efforts to gut the independence of the Fed. As we've seen with demands that you drop rates immediately. In fact, his co-president Musk attacked Fed independence in a tweet earlier this year. Chair Powell, I know you have been adamant about the independence of the Fed and have, thus far, resisted pressure from Trump. But after your decision to eliminate DEI initiatives, following Trump's illegal order, I'm concerned that Trump has more influence over you than you let on. I speak for all of my colleagues on the Democratic side when I say that you must stand firm
5 minutes
in defending
testing.
the Fed's independence. Reject any attempt by Elon
5
Musk
minutes is actually now
and his
bullish
Doge
on the NASDAQ.
minions
Let's see if this holds.
to
We have 3
gain
minutes.
Access to the Fed, its systems and data, and speak forcefully about what's at stake for our economy. The American public must hear from you, our central bank, today.
Gentlewoman yields back. I yield myself 5 minutes for questions. Thank you again, Chairman Powell, for being with us. Let me start with the Fed's bank regulation and supervisory function. As I mentioned in my opening statement, over the past 2.5 years, the outgoing Vice Chair for Supervision has pushed new regulations that would move the United States towards a one-size-fits-all approach to prudential regulation that disregards the congressional mandate that's been quite clearly established for regulators to tailor bank regulation based on an institution's size, complexity, and risk profile. Earlier this year, the Fed board announced that Michael Barr would be stepping down from his position as vice chair on February 28, 2025, or earlier, should a successor be confirmed. Significantly, the board also announced at that time that it does not intend to take up any major rulemakings until a vice chair for supervision successor is confirmed. I've discussed this with you. I've got concerns about that. You're not abdicating your supervisory response while we wait around for a vice chair for supervision. Do you agree that it's the Board of Governors that has the responsibility for bank supervision policy?
I do, and I would also agree that we need to carry on with our regulatory and supervisory duties. We can't take a holiday, and we will proceed with the things that we should be proceeding with.
You testified in the Senate yesterday, and I know you enjoyed time with the senators, and you talked a little bit about Basel III Endgame. And again, in my opening statement, I talked about that the intent was to harmonize those rules, true, for the largest institutions in the world, but also do that in a way that's capital neutral. And many of us here in Congress on both sides of the aisle felt like Vice Chairman Barr's approach was gold plating already high standards for American banks. You testified yesterday that you think bank capital levels are about right for those large institutions. Would you tell the committee today that it's your intent to repropose a Basel III endgame approach, just speaking on behalf of the Fed only, not the other supervisors, and that it be take into account the comments, and that it be generally capital neutral?
We do intend to repropose Basel III Endgame, and we intend to do that just as soon as we can get together with the new leadership at the two other banking agencies. And as I mentioned, I think we can do that pretty promptly once those people are in place. I look forward to doing that. My long-held view, as I've said in many of these hearings, is that capital in the banking system for the largest banks is at about right. And that would be my starting point on going into these discussions. But I do want to defer. I do want to, leave it for my upcoming, new
Mag 7 strong, but now flat. NASDAQ is tanking. So even though the NASDAQ popped, we're at the lowest delta reading. Big mismatch
I do want
here.
you to take into account
And the SPY did pop,
Basel
went flat,
III
giving some of
endgame
it back now.
proposal interacts with other pending rules, whether they're on liquidity or the other things like operating risk in the companies. I think that was a lot of centrality of the comments that we saw on your Barr proposal. Turning to monetary policy, looking back at 2020 and 2021, I was looking at all the principal monetary policy rules that you report in your semi-annual report. And had you followed any of the monetary policy rules that you track, they would have had you tighten sooner in the cycle rather than waiting. And I think that could have reflected, maybe not seen us have a 40-year high in inflation. Using the benefit of hindsight, do you think you should have looked at those rules more closely in the open market operations and tightened sooner?
I will say, and I've said before, that hindsight suggests that it would have been good if we had tightened earlier. I don't know how much difference that would have made, but I'd be very careful with those rules. Those rules in the middle of last year suggested that our policy rate was a couple hundred basis points too high. So we need to. They're a starting point, not an ending point.
Right. But we've had this conversation before. The point is that they do offer a roadmap, and you do mention them in writing in your monetary policy reports, except for one time during the pandemic. And I think, though, that you're adding that to your reference point in your forward guidance and in your communications, I think would be important. Can you tell us about the review of the inflation targeting and when you expect to complete that?
Expect to complete it by the late in the summer this year. We're just beginning it now, and we're going to look at all the decisions that we made, why we made them back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate, discrete adjustments.
I thank you for being with us today, and I turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump, he wants to do away with the Federal Reserve altogether. He said he knows interest rates much better than you do. I want you to know that some of us here have been fighting to make sure that everybody understand the importance of the central bank.
Resistance at 60-50, support at 60-20.
Central bank is
resistance,
involved.
support.
But,
support is 60-20, resistance
and the
is
opposite side of the
60-50.
aisle fought us And that's one of the reasons we were not able to come together with a bipartisan agreement on stablecoins. You previously said that you would not resign if Trump asked you
Watching to see if the
do
VIX
that.
picks up.
Do you
This
stand
vol
by
picks
that
up.
commitment?
I have no changes to that.
NASDAQ is at the lowest reading of the day.
Yes.
Mag 7 is
Thank
flat. SPY is popped,
let the
gave some
record
back, but now flat.
Record that adequately. I appreciate that because you have a right to your position not to be interfered with by law, I believe, or even Constitution. When Musk comes knocking at the Fed's door, are you going to let him in?
I don't have anything for you on that.
Would you like to tell us today that you won't let Doge into the Federal Reserve or have access to the systems and the data?
So I don't have any, we've had no no contact, and I don't really have, I have nothing for you to
Options showing a
report
little
today
bit
on
of
that.
life
Well,
here.
you know what happened at Treasury, and you know what happened over at the CFPB, and the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts, everything that in our lives. So I want to protect it in the Fed. Mr. Powell, the last time you testified before this committee, you said, and I quote, "Really successful institutions in the United States generally are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table. That is the way we feel about it. And at the Fed, and that is what we've been doing and will
Does
continue
she know how to
do.
read?
Chair Powell, how will you ensure that the Fed continues to attract the best and most diverse employees?
You know, we're institutions like ours, private and public, are in a constant contest to hire the best talent in the country. And we've all learned, I think, and certainly we have, that we will go anywhere to find that talent, and including places that we didn't go 25 years ago. And we'll just continue to do that. You know, we're recruiting, as you know, at many, many, many universities and colleges, including historically black universities and colleges, and others. And that's what we find, and that's our practice. We think that's the best way to go about it.
Thank you very much. And that's what I've always felt about the Fed. No matter what they call it, you only attracted and hired the best qualified people in your operation, no matter what they refer to it as, what they call it, whatever way they define it. Is that right?
Yes.
Thank you very much. Chair Powell, are you willing to provide my staff with an immediate briefing from your agency on the status of your OMWEs and equal employment offices?
Yes.
Thank you. I believe that you know that the OMWEs were created with the Dodd-Frank reforms. It's in law. And as I understand it, any attempt to dismantle OMWEs would have to come before the Congress of the United States of America. Is that your understanding?
Mag 7's holding.
Yes, Section
NASDAQ
342
still
of
looks
Dodd-Frank,
bad.
which is the
SPY is
OMWE
still
section,
flat.
is the law.
Indecisive.
Thank you.
I know
Chair
price
Powell,
is going
to what
up, but the
extent
options are
have you
indecisive.
consulted with other board members in determining how your agency
5
is
minutes
complying
testing.
with Section 342
5 minute
of Dodd-Frank
and 10 minute are
and
testing
as
on the
well
NASDAQ.
as any other federal anti-discrimination law?
I think we've consulted with senior staff and board members quite a bit.
Chair Powell, days after his inauguration, President Trump issued an executive order on digital assets, which includes a prohibition on central bank digital currencies, or CBDCs. The executive order banned any, quote, form of digital money or monetary
SPY
value
options popped.
denominated in the
pops
national
from.
unit of account that is a direct liability of central bank, end quote. I'm concerned that this extremely broad definition could go far beyond CBDCs. Well, thank you very much. My time is up, but I appreciate your presence here today, and I appreciate your willingness to stand up for your right to be
Gentlewoman's
the
time
chair.
has expired.
And I now yield back. Thank you.
But I do invite the chairman to respond to the gentlewoman's question on CBDCs in writing. And now we turn to the vice chair of the full committee, Bill Heisinger, the gentleman from Michigan.
Thank you, Mr. Chairman, and Chair Powell. Good to see you again. You had talked a little bit about your review. I'm going to start there. Obviously, a lot has changed in the last 5 years. Pandemic, inflation, higher interest rates, name a few. However, I believe your dual mandate of maximum employment and stable prices should remain the ultimate objective. I assume
Order
you agree with
filled.
that.
Options popping.
Let the record reflect slight head nod on that. This committee is going to be very focused on monetary policy, and with my good friend from Oklahoma, Mr. Lucas, chairing a task force that I'm happy to be a part of. We're going to be addressing some of those issues. Chair Hill touched on some of the rules that have been discussed. I, for one, have always been
Tesla's going, ball is dropping.
Taylor rule, but there's a number of rules. I know you go through those. At one point, I suggested that we could call it the Yellen rule with Chair Yellen. But there needed to be some sort of public declaration of what to benchmark against, and I still feel that is of some importance. You outlined your timeline on this particular review, but I'm curious, do you believe that the last policy framework limited the Fed's response to raising inflation?
Big
something
pop
that
there.
you and I have talked about over the years?
What was that?
No, I'll tell you why we didn't raise rates. We thought the inflation was transitory. I can show you forecasts from the end of
Options
2021 by us, by staff, by the blue chip. Everybody thought it was going to be transitory. That's why we didn't raise rates.
And I also distinctly remember a hearing where you and Secretary Yellen at the time were sitting next to each other, and it looked like you visibly scooted away when I asked you both whether it was still transitory, and you had, for the first time ever, a separate answer. Her answer was yes, it still was transitory. You gave a very Fed speak answer of, we no longer believe the data shows that. So no. And to kind of go to Chair Hill's point, we think that might have been a little late on that. On back to the review, I'm curious, what sort of input are you looking for from the public and from Congress as you go into that review?
So from the public, we'll do a series of Fed Listens events, which were very successful the last time. And it involves us sitting down and meeting with people, some of whom know a lot about what the Fed does, some of whom just tell you what's going on in their communities. It was really, it was a very successful part of our outreach last time. In terms of Congress, we'll keep you informed of our progress. We welcome anything you may offer. But it's a public. We're open to the public on this. It's a public review, as distinct from what we were doing before, and so we're welcoming views from all over.
And not to get ahead of the chairman, but I look forward to us having more conversations about that with the working group. I want to switch topics and focus a bit back to the bank supervision. Michael Barr has stepped down from his position as vice chair for supervision, effective at the end of the month. And whether, frankly, President Trump fills that position is entirely up to him. But in the absence of a vice chair for supervision, you're still working, I think, on it. I think your quote to the chairman was,
5 minutes
there's
now
no
bullish,
time for
10
a
minutes
holiday.
testing, 5 minutes bullish,
this
10
vice
minutes
chair
now
of
bullish.
supervision is a Fed
I
governor
wonder if we're
that
going to get
has,
this
frankly,
recovery.
extraordinary powers and responsibilities. And ultimately, my question to you is, does the Fed really need a separate vice chair to complete its work?
Mag
Now,
7 still
I got
strong.
here in after
Nasdaq
the
pop,
2010
now
election,
pause.
2011,
SPY
shortly
pop,
after
now pause a little.
Dodd-Frank was passed. I know this vice chair position was created by Dodd-Frank. I've just been dealing with the echo effects now for the last going on 15 years of Dodd-Frank. Do we really need to have a separate vice chair of supervision?
So for many years, as you know, we did our business without a vice chair for supervision. What that means is everything goes through the full board.
And it was effective?
I think it was, and also there was less volatility.
Explain that. Why was there less volatility?
Well, because you've got a group of 7 people on the board, and there will be some as appointments change. There'll be some changes in the approach to regulation, but putting it all in a single
After that
person,
big pop, market like
admittedly
kind of
just to recommend to the
indecisive of
board
if it wants to hold, but
can
we
lead
did get
to-
the upside
can
gap
lead
on both
to
the SPY and the
some
Qs.
volatility in
Crazy.
these things, which
Today's
is really
just fucking
larger
nuts.
swings in
Yeah, larger
policy.
swings in the kind of things, and that's not great for the institutions that we want to regulate. We want to have a good set of regulation that doesn't swing back and forth very much. The question of whether it's a good thing to have in the law is really one for you. But I will tell you, we will once Vice Chair Barr completes his term
NASDAQ
in a few
dipping
weeks,
again.
we will continue on until there's a new Vice Chair for supervision, and we can very much get our work done.
Or if there is one. So with that, Mr. Chairman, my time has expired.
I thank the Vice Chairman. Mr. Heisger yields back. Recognize the gentleman from California, Mr. Sherman, for
Messy
5
day.
minutes of questions.
Chairman Powell, you are the only
Jesus.
bipartisan person or thing left in Washington. You were appointed by Obama. Trump gave you a promotion. Biden reappointed you. And you are the only Biden appointee not to hear the words, "You're fired," from our president. So I hope we listen to what you have to say, because you're the only person that I can identify in Washington that has support on both sides of the aisle. Mr. Huizenga mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that you focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible for me to say.
Does the fact that you focus on employment as one of your dual mandates lead to lower unemployment, higher employment in our country?
It may do so. We do balance those things.
Thank you.
To some extent, that may be right.
Chair Hill spoke about how important it is that you maintain your independence. I noticed that in light of the hiring freeze, the Fed has removed all its job postings. I'm hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the president's statement at 7:58 this morning, where he said interest rates should be lowered. He said it. Will that influence what the Fed actually does?
I, as a practice, never comment on anything the president says, but I think people can be confident that we'll continue to keep our heads down, do our work, make our decisions based on what's happening in the economy, the outlook,
And
the balance
statements
of risks.
by elected
No
officials
change.
are not among the things that cause you to act one way or the other.
That's correct.
Thank you. And he went on to say, he said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute says that the policies that the president ran on will raise the CPI by between 4 and 7.5 points. And I think the biggest element of that is the proposed tariffs. If we have
Running
higher
right into
tariffs
that
across the
resistance
board,
at 60-50.
say 10 to 25%, would
If this
that
gets
increase
rejected,
the
we
cost
might
of
fall all the
living?
way back to 60-20.
And would an increase in the CPI or related indexes of the cost of living lead to higher interest rates?
You know,
Ran right up to 49, called out by GEXPOT as resistance. Like I said, if this gets rejected, we're talking about 60-20.
What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of living, does that lead to higher interest rates? The CPI goes up, or CPE, excuse me?
Well, if inflation goes up in general, forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back down to 2% over time.
Okay. Yesterday, you told the Senate we're going to release the stress test scenarios before we implement them. Will you take a holistic look at large bank
Order
capital
submitted.
requirements, including the risk-based capital ratios like Basel III Endgame stress testing, to make sure that you don't have a contraction in the ability of credit to Main Street businesses?
Yes.
Great. There's a proposal in Project 2025 that we abolish Fannie and Freddie. If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Since you're no
I
longer
just took a short position on the
credit of
NASDAQ.
the United States, in other words,
Just
so
in
Fannie
case
and
this
Freddie would
really
be
is the top.
privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, as has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
The CFPB has been put on ice, but all the regulations remain in force. So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into practice a CFPB that enforces all the regulations that the Trump administration has tried to eliminate. Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could. Yeah.
I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Chair Powell, let's talk about the balance sheet. As we've discussed several times before, the consistent and massive growth of the federal debt creates long-run challenges for both the United States and saddles future generations with an onerous burden. But it also creates a challenging environment for the markets as the Treasury market expands in kind. As the Fed engages in quantitative tightening, allowing the Treasuries to roll off, the Fed is careful to ensure that there are ample reserves for the balance sheet. Could you briefly discuss the conditions that determine the ideal level of reserves?
Sure. So let me say that we intend to slow, and we have slowed, but then stop the process of shrinking our balance sheet at a time when we think that reserves are somewhat above the level that we judge to be consistent with our ample reserves framework. So what that means is we want reserves to be ample, meaning we don't want them to suddenly appear to be shortages of reserves. So we're going to think of
if this rejection holds,
shortages
we're
might appear,
seriously
and we're
talking
gonna put a buffer on top
60-20.
of that, because nothing good happens when there's not enough
right
liquidity.
Here.
So that's our
what we saw
overall
at
framework.
10-16.
And right now we feel like all the evidence suggests
60-30 doesn't hold. I think it's an easy shot to 60-20.
As you know, in early 2021, the Fed stated
Mag
that
7,
it would invite comments
flat
on the
dipped,
supplemental
kind of
leverage
drifting
ratio.
down.
That
S&P
has
500's
not
been
happened
drifting
yet.
down since
I've made the point that
1038.
the growth of
Delta's
the U.S.
just
Treasury market
drifting.
paired with a decreased willingness of banks to act as intermediaries is a major issue on the horizon. When former Treasury Secretary Yellen was before this committee last year, I asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying the SLR. She said it's something that the banking regulator should consider. Does the Fed plan to finally look at the SLR?
Yes, I believe we will. I have, for a long time, like others, been somewhat concerned about the levels of liquidity in the Treasury market. The amount of Treasuries has grown much faster than the intermediation capacity has grown, and one obvious thing to do is to reduce the effective supplemental leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers. The Federal Reserve is not immune to politics. You, like every Fed governor, go through a lengthy confirmation process in the Senate. And of course, you're required to answer to Congress in hearings like this. I can trace a major political turning point at the Fed to the passage of Dodd-Frank, which greatly expanded the Fed's regulation and supervision authority. Chairman Powell, do you worry that the independence of the Federal Reserve's monetary policy function is in any way hindered by its role as a bank regulator? Can you do both?
Well, we can and we do, and we'll continue to do that. Clearly, the regulatory and supervisory side is more contentious in political circles, but we will continue to carry it out as best we can and to do so in a non-political way as best we can.
And clearly that'll be a major discussion topic in the task force. In my remaining time, could you discuss the Fed's 5-year review of monetary policy? What are the categories of issues you think that will be helpful to receive feedback on?
So a good part of it will be looking at the changes we made in 2020, which were made in an environment where we had been stuck at
the delta's
effective
still
lower bound
bleeding
at
off
0
right here
for 7
after that
years.
like big pop.
And the highest we got our rate really was sustainably was 1.5%, and that was the highest of any advanced economy central bank. So the concern was that at the slightest downturn, we'd be back at the 0 lower bound and we'd be stuck. So we were looking for ways to make up for that. So then the question is, we got this inflation out of the pandemic and the events related to it. Are we in a different place now? And I think the chances are pretty good that maybe the effective lower bound is still a concern, but it's not the base case anymore. So we need to look at that and decide how what are the implications of that for our framework.
Thank you, Chairman, and I look forward to several more discussions on these topics. And with that, I yield back the balance of my time, and I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today, and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. In fact, around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war had caused commodity prices to move sharply back home. Does that sound correct to you, if unfamiliar to you?
Yes, it does.
So, just to reiterate, in this interconnected world that we live in, would it be safe to say that economic instability in other countries has the potential to impact economic factors here in the United States?
Sometimes, yes.
And so, given that fact,
Mag 7 climbing
would
up,
it
but the
seem
spy
like a
isn't.
smart move for the United States government to remove one of our most effective strategic tools that, by mandate, assist U.S. commercial interests by supporting developing countries' economic growth and building countries' capacity to participate in the world trade? Would you agree with that?
It's not for me to be the judge or to say on that.
Well, we do know that a number of, like USAID, they buy a lot of their agricultural products, et cetera, from American farmers. And in fact, it helps the U.S. economy when you look at the volume of agricultural products that are being bought so that we can continue to be a part of the rest of the world. Would that be correct?
Might just be putting in another higher low here.
So, today we find ourselves facing a situation where the president
Indecisive.
and his Dodge buddy Elon Musk seem hell-bent on dismantling USAID, no matter the consequences, even if they are dire. To me, the assault on this congressionally authorized body represents an attack on the rule of law and should outrage every member of this body. Every member.
Big
Democrats
pop in
and
options.
Republicans alike. And I know that your interest is squarely within your dual mandate and not foreign policy. I sit on both committees. I'm here, but I'm also the ranking member on the Foreign Policy Committee. And so I can't sit here today and pretend that what we're doing won't impact employment and economic stability right here in the United States of America. Weakening USAID will fuel global crises, endanger American security, embolden other nations like China and Russia, and leave us here in the Trump administration solely responsible for the fallout. So I have to take this opportunity to urge my colleagues on the other side of the aisle to also stand up for USAID. Anytime we travel, we go visit what they do. We go visit the good
Isn't
that
that
they do.
all the
We
money
go visit
laundering?
what their and how their economies improve so that they can be part of the global economy. So if not because people just care
This guy's just wasting
about the
everyone's
rest
time.
of the world,
Like, fuck, dude. Come
then
on.
because we care about our country and recognize that instability elsewhere threatens our stability right here. It is extremely important in an interconnected world because the economy is interconnected around the world. We cannot isolate ourselves from the rest of the world. I thank you, Mr. Chairman, and I yield back the balance of my time.
Gentleman yields back. The chair recognizes the gentleman from Texas, Mr. Sessions, for 5 minutes.
Mr. Chairman, thank you very much. Chairman Powell, welcome. We're delighted to be here, and I hope that this comes with greetings from every single member that we appreciate and respect you taking the
Tesla
time.
picking
even
up
though you're respected
again.
Here. We think you show up, and we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about
Mag
the
7
term
picking up
debt
pretty
versus
nicely at
growth.
1052.
Debt versus
SPY,
growth, about
same
this
thing.
amount of money that
Not at
sits
new
out
highs,
there
but obviously that bleed
on
off
the debt
stop.
side. Could you please take a minute and discuss this
Tesla looking good.
issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during the...
We are. We're
Okay.
talking about when the Fed went and sold
QE.
treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries.
This guy did his homework.
You know, it was a situation, I'll tell you why we did it. You know, we were just out of the worst part of the pandemic, and we didn't know how, frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging.
Options just got another
it
pop.
Actually, you know, had a very strong wave right into
there.
22. But we wanted to just, we didn't want to stop buying treasuries too soon because, I mean, that has a stimulative effect on the economy because we didn't want to
Tesla's
provoke
looking good.
an unwanted
Bullish,
tightening
I should say.
in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and
You moved it from about 120 a month to 110.
Well, we're down now. We've been tapering for 2 years now, and we're down
That's
more
correct.
than $2 trillion. So, and we're still going. We're still going. So that's why we did what we did.
Tell me what that looks like in the longer term aggregate versus with what the chairman said, debt versus growth.
Are we just putting in?
Because we
are we putting in a
believe
higher
that
low or a
debt
lower
remains
high?
and
Which
growth is
what
not
way are we breaking right now?
That ability to pay it back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're reducing. We're
In the
retiring
event
Treasury
of snapping
securities,
this
and the effect
recent
of that is
low,
to drive
watch
down
this trend line.
long-term rates.
I'm
That's
also
the whole
watching this
reason for
super trend
QE.
here on
What
the
are
1
you
minute
paying
of
for
NQ.
those long-term rates?
Market rates. We're paying exactly the market.
And what would that market be approximately a year ago or to now?
Well, you know, the 10-year, we're not, of course, we're going in the other direction now, we're shrinking now, but
We
were
are.
buying, you know, the 10-year was yielding a very, very low, yield on it was quite low during the pandemic, extremely low because, you know, growth was slow, there was a lot of demand for treasuries. So we were pushing down rates to support economic activity. When you can't lower your policy rate anymore and you want to do more stimulus, that's really the main thing you can do. It's actually the forefather of that was Milton Friedman, who came up with that thought way back in the past. But that's what we did, and then, as I mentioned, we turned around as soon as we lifted off and started raising rates. We immediately started shrinking the balance sheet, and we've shrunk it a lot, $2 trillion, and still counting.
You have shrunk it $2 trillion?
Yes, we have.
Okay. And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go. Actually, the level of reserves, which is the thing we're focused on, hasn't really changed. All of that has come out of what's called the overnight reverse repo facility. I'd be happy to spend some time with you on this. This stuff is very complicated. And
yes, I've tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very,
called
very big changes since then.
127.22. And
Yeah.
so the changes that you speak of are important.
Yeah.
And so I would appreciate that time.
Be happy to do
because
that.
Great. I want to
SPY
thank you for
options are
being
taking a
here.
bit of a
The
hit
confidence
right
that
here.
this-
It
that the American people
got
have
going,
will
but
turn
at 11
not
at the
just
turn of the hour, a
economics
little bit of a
of
drift
their
down.
lives,
Nothing
but
as
of
big
the
as what we
country
saw
is
this
very
morning.
important. And I
But
today spoke about the
big
country.
pop, bleed,
And I wanna thank
kind of a
you for your
recovery.
service and
Now
time.
super indecisive. Are we putting in a
Gentleman
higher
yields
low
back.
or is
The
this a
chair now
lower high?
recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman, and welcome, Chair Powell. Chair Powell, I'm worried about these tariffs.
Dude, how old are these people?
I want you to kind of share with us your thoughts on these tariffs. I'm worried about it. I think the president is wrong here.
Holy fuck.
Tariffs can cause a terrible situation to the economy.
Is this the first
I'm
politician
concerned about
ever?
the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost to these tariffs.
I remember
And
the first
we
tariff.
need not move into this area blindly. And some of these costs will be absorbed by business companies, but there are other costs that will be borne by the American consumers. We don't even understand this. And yet you have the president
Well,
just using
you
these
might not
tariffs
understand it.
as a means of fight or like a war. And this is going to do it. Everybody is not going to be Mexico or Canada. And while we got a little time, I want your thoughts on the dangers of these tariffs.
He's not going to comment, dude. He never comments on
The
this.
stock market is anticipating rate cuts.
I don't comment
What will these
on
tariffs
policy.
do about that? Does the Fed see financial market stability as a factor in its decision-making process?
Mag 7 still very strong. SPY back to drifting down,
And
but we haven't
here
taken
is
out a high or a
specifically
low.
what I want you to get to. In light of the president, and politely I will say, his
SPY,
ill-crafted
watch this trend line.
tariff strategy,
Watch
do you
60-30,
foresee
and if that
future rate
doesn't
cuts
hold, the
as
next
a result
support's
of
at 60-20,
or
right there.
due to a weaker labor market? And
Yeah,
what do
60-20.
you consider
Watch
to
60-30,
be
doesn't hold, watch
promising
60-20.
inflation data? That's our big fight. And these tariffs are going to just add to inflation like a rocket ship. Your thoughts?
Jesus Christ, dude, get it out.
And share with us. Give us your opinion of the danger of these. There's a cost here. Tell us what you think about this.
The president has certain authorities over tariffs. Congress has authorities over tariffs. The Commerce Department is involved in some ways, but the Fed has no role in setting tariffs. And we don't comment on decisions made by those who do have that authority. We try to stick to our own knitting. In this particular case, it's possible that the economy would evolve in ways that, because of tariffs, or partly because of tariffs, that we would need to do something with our policy rate, but we can't know what that is until we actually know what policies are enacted. And remember, it's not just tariffs. There are significant changes to
Options are
immigration
still
policy,
kind of drifting
fiscal
down.
policy,
We
and
might
also
be taking out
regulatory
this delta
policy.
low at
You put all
1052.
four of those, and all four
I'm
of
more
those are
interested in
things
this delta
the
low at
president was elected
1030
to do.
though.
We will then
Mag
try to
7
make
is
an
still
intelligent
strong.
judgment about the overall effect on the economy.
NASDAQ is kind of weak. It puked at 1050, dead cat bounce. We might be heading back down.
To comment on the
Mag
wisdom
7 though, completely different
of
story. I believe
policies
because of
that are
Tesla.
enacted by Congress or by the administration.
Well, he have an effect on whether or not you will resume your plan to cut the interest rates this year or continue to hold?
So we'll make our decisions as we go about what to do with interest rates based on
Options
the
trending
data
down,
that we see,
taking out
the
this
outlook,
low,
the evolving outlook,
tied
and
to
the
that
balance of
low.
risks. And we'll be considering all of those things. We won't
Calls
be
are being
focusing
sold,
on
and
any
now
particular
puts are being
policy,
purchased.
and
The double
I can't tell
whammy.
what we'll be doing because it will really depend. It's fairly
Mag
uncertain
7's crazy
environment
strong.
right now.
Yeah.
The underlying economy is very strong, but there's some uncertainty out there about new policies. We're just going to have to wait and see what the effects of those policies are before we think about what we can do.
Well, all I want to say, God bless you. I know your strength. We've worked together over the years on many things, and this nation is grateful that we have you, your wisdom and intellect.
Super trend almost went bearish on the
I agree,
Nasdaq
but
1
the gentleman's
minute.
time has expired. Gentlemen, you're back. Chair now
Watching
recognizes the gentlelady from
525.50
Missouri.
on the
Ms.
Qs.
Wagner.
Watching
I thank the
601.25 on the
chair,
SPY.
and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit with a huge stealth tax from, as we've spoken about, inflation. That drove up grocery prices and led to high rates on things like mortgages and car loans. Since 2021, the average Missouri household is paying about $1,100 more per month due to inflation. To put that number into perspective, the median family income in Missouri is $69,000. These families have had to spend $13,000 more of their annual income on the exact same goods. What specifically is the Federal Reserve's plan for making life easier for everyday Americans?
So the best thing we can do for Americans is to vigorously pursue both stable prices and maximum employment. We're trying to get back to a long expansion where prices are stable around 2%.
You seem to be there on labor, as you've pointed out, so tell me what else?
Sorry?
You seem to be there on labor, so what else?
I would say we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now so that we can see.
We're definitely not there for 30-year mortgages, upwards of 7%, Chair Powell. So let me switch topics. I continue to believe that as we've spoken about, and as was brought up prior colleagues here, that the federal banking agencies, including the Federal Reserve, should scrap the
5 minute is back
Basel
bearish.
III
10 minute failed
proposal
its
and start
breakout
over.
at 10:30.
You talked a little
5
bit
minute
about
is
how you
testing
plan
on
to perhaps
NQ.
do
10
that,
minute is also testing.
And,
30
and
minutes bearish.
a timeline
30 minutes
potentially.
bearish.
But how will the public, Chair Powell, be able to provide comments on any revised proposal as required by the Administrative Procedures Act?
So I fully expect, and I think it's a good idea for the United States to finish Basel III in a way that's in keeping with Basel and also with what other jurisdictions are doing, comparable jurisdictions.
The key there is end game. This has been going on for 2 decades.
Where's the end already, right? So,
Right.
We'll put all of that out for comment again and welcome the comments for all commenters.
I should make sure we're following the Administrative Procedure Act.
Oh, yes.
As you move forward.
We will.
Chair Powell, I understand you are interested in making the stress test scenarios that assess how a bank will perform through a crisis more transparent. As things stand now, while the Fed may make some information public, it doesn't show its math, which makes it difficult to assess the robustness and analytical rigor of the stress tests. Recently, the Federal Reserve announced that due to the, quote, evolving legal landscape, it would begin to take public comment on its stress test models and annual scenarios. Can you describe the changes in the legal landscape that have caused the Federal Reserve to suddenly seek public comment on its stress test regime and why it did not seek public comment from the beginning.
So we're an agency that's strongly committed to following the law as written by Congress and as interpreted by the Supreme Court. In the past few years, we've seen a string of administrative law cases from the Supreme Court, which are
trend change,
dealing with different issues, but there's a common theme, and that is significantly less deference to the views of agencies.
Potential trend breakdown.
So, as compared
Mag
to those
7
of courts.
turning, SPY
Also just
still
a
bleeding.
raised
There's a little bit of a
expectations for
reversal
compliance
here,
with the
but
Administrative
bleeding
Procedures
since
Act.
then.
We take that very much to heart, and this is one of the things that we're doing because of that.
And
we
now
feel the
we're at a
Look at things
potential
like Chevron
VWAP snap on
deference.
NASDAQ,
You can
watching
look
this
at
closely.
the EPA ruling by the courts, and they are returning the power back to the people and the Congress, not the administrative state, not those agencies and rulemakers.
So because of those things, we are putting, as you went through it, we're putting the models and everything else out for comment and taking similar steps.
Well, I'm glad to see that. I understand the Fed intends to complete a comprehensive review of its monetary policy strategy, tools, and communications practices. You mentioned that. What is the timeline?
We expect to complete our work and announce the results by the end of the summer.
End of the summer. Thank you. I yield back.
Gentlelady yields back. The chair recognizes the gentleman from Massachusetts, Mr. Lynch, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Powell. Good to see you. Thank you for your good work. Chairman Powell, the Senate just filed a bill called the Genius Act. I'm always worried about anything that comes over from the Senate with the title Genius in it.
Zinger.
But it is an attempt to
I'm telling you,
provide a
watch
regulatory
this
framework
right
for
here.
cryptocurrency.
If we snap
In
this,
that proposal, which is
we're at the
similar
trend line
in
on the
some
SPY,
respects to the House proposal,
Tesla, Qs
it
are
would
coming
allow
out.
individual
We're at a
states
big test point.
to oversee
60-20.
issuers.
Like I said, if we snap
and
60-30,
there
I'm looking
would
for
be no
60-20.
central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern is that
Trendline snap.
that with that spread of an expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern
Watching
is
this.
that the spread of an expansion of crypto will infect the traditional banking system because it's,
Right
it's
at
a
VWAP
volatile,
on NQ.
speculative asset, and we've
Probably
seen
gonna
some
serve as support or
very sudden
resistance.
disasters.
Mag
with
7
crypto.
tilting.
I'm just
SPY
wondering,
still
are there
slowly but surely bleeding down.
backstops that we can use, any firewalls that we can put in place that might
What
insulate
goes up
the
must
traditional
come down.
banking system, because they have access to the discount window and they're FDIC insured. So there may be, second order impacts if we have a collapse of a major crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes. So first, I would say there are really two things that are happening. One is banks are serving crypto customers, and we don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any
Are
particular.
you speaking to custody?
Well, custody is more, the second thing is
Right.
undertaking activities
Okay.
on their own, right? And in that case, I do think it's appropriate to as usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity
Mag 7
they're taking
slowly
inside an
bleeding.
insured depozitory.
SPY
On the other hand,
still
you don't want to go
bleeding.
too far. I think there were a bunch of disasters, as we all remember, and we don't want to, and we were reacting to some extent to those. You don't want to go so far as to overplay your hand on that. So I think we need to be mindful
5
that
minute
many of
try
these
to go
activities
bullish,
can very
got
well be
smacked
done
back
inside
bearish.
banks. In custody,
Same thing with the 10
may well
minute,
be one.
30
In
minute
fact, in
stayed bearish this
Fed-regulated
whole time.
banks, there are lots
5
of
minute try to go
crypto
bullish,
activities
smacked.
happening
10
now.
minute
They
tested,
just
failed.
happened under a
30 minute
framework
staying
where
bearish.
we made sure that the bank understood and we understood exactly what they're doing.
Right. We also have the example of, Silicon Valley Bank and Signature Bank, First Republic Bank. One of the triggering events there. I mean, obviously the risk management was very poor in that respect, and They got on the wrong side of interest rates.
I personally need
There were
68 to
also
snap
some
here, right where my cursor
failures
is in
of
the lower right.
issuers who had huge deposits at Silicon Valley, I believe, or Signature, or maybe both of them. And the suddenness of their collapse caused a run for the exits. And luckily, with the scramble, we were able to sort of save that situation so it didn't create a greater contagion. But are there steps that we can take that might strengthen our ability to respond to that type of collapse as well?
Yes, so in the wake of Silicon Valley Bank, we did work with many medium and sized banks that had any of the characteristics that we saw. And you mentioned, a long position in long-term securities that was underwater, along with a very unstable deposit base made up mostly of uninsured deposits. And in the case of Silicon Valley Bank, it was a lot of
Tesla potentially breaking its trend line in the top right here.
Private equity and venture capital and hedge fund.
NASDAQ, first, second, third attempt not breaking the VWAP.
Bank runs are very destructive.
I am seeing options pop a little bit here.
We work with companies who had any aspect of that
Mag
pattern.
7
and
flat,
we were
though.
successful, I think, in not having that crisis spread very broadly, and that was a good thing. Looking forward, though, we need to not forget that lesson and make sure that funding bases are stable and that we're focused on the basics of banking, which is credit risk, interest rate risk, liquidity risk.
Gentleman's time has expired.
Thank you. I yield back.
Gentleman yields back. Chair recognizes the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Tesla might
Chairman
be
Powell,
losing
let me
its
ask
trend.
you a quick monetary policy
SPY
question
did
and then
lose
turn
its
to bank
trend.
regulation
The Qs
and
have not
treasury
tested
market
yet.
structure. I know hindsight is 20/20, but it's important to learn from mistakes, as you know, and you've conceded that the Fed miscalculated on inflation and mischaracterized inflation as transitory in 2021-2022 time period. Given that inflation remains stuck above the Fed's 2% target, will you commit to scrapping the flexible average inflation targeting framework? And if not, why wouldn't you commit to returning just to a simple 2% target?
So we're just beginning the review. It'll be done, as I mentioned, by the end of the summer, and that's the exact question we'll be asking. I can't commit to a particular outcome. I need to respect the process and the views of the other 18 participants on the FOMC.
Yeah, I appreciate that, and I just hope that in that process that you and your colleagues recognize that framework allowed rising inflation to persist and allowed the Fed to mislabel it
NASDAQ is still
as
weak.
transitory. Let me turn to bank regulation.
60-20 is the
October
target.
Of last year, I led a
60-20
bipartisan
is the target.
Codel to Basel,
We saw that at
Switzerland, met with the
10:15.
Basel Committee on Bank Supervision. And there, the committee actually conceded to us, agreed with me, that the Michael Barr proposal of July 2023 actually gold-plated bank capital requirements. And instead of actually promoting international harmonization, actually made American banks less competitive. They conceded that to us. So I applaud the Fed for not moving forward on that July 2023 proposal that would have made it harder for large banks to, among other things, facilitate the smooth functioning of the U.S. Treasury market, including holding treasuries on the balance sheet. A couple questions. One is, should the goal of our bank capital rules, should it be regulatory harmonization internationally, or should it be American economic competitiveness?
I mean, clearly, the goal is to have a strong banking system that supports American economic activity and growth. That's the ultimate goal. What you get from Basel is a global floor so that the other banks can't run on less capital and sort of have a short-term advantage. That was the whole point of Basel, was to get everybody to the same kind of level so that it wouldn't be the race to the bottom.
And I see that utility, but I think the goal of our regulatory system should be America first, and it should be about American economic growth and competitiveness. But let's talk about the Treasury market issues. Obviously, we're issuing a ton of debt right now. In fact, according to BlackRock, we're issuing $573 billion of Treasury bonds every week. To put that in perspective, The entire national debt of Australia is $573 billion. So we're issuing Australia every week in this country, if you want to think of it that way. Would reducing excessive capital and liquidity requirements on U.S. banks for intermediating U.S. Treasury market take the heat off of U.S. capital markets and increase Treasury market liquidity?
Snapping
and stability?
VWAP.
I strongly think it would help.
Come on, take out this
Well, I
trend
think
line.
that's especially an important comment in terms of your regulatory approach, because as you know, maturing bonds were being financed at an average of
61.
near
Take it
zero
out.
during COVID, and now they're about double
Options
the cost
dumping,
of the average
flow
of about
alert, bearish flow alert,
3.5%. So
dump,
now is not
Mag
the time
7
to make
flat,
it more difficult for banks to hold treasuries.
NASDAQ
Let me
lowest
just drill
delta
down,
reading of the day.
With a little bit more detail on this Treasury market structure issue, do you agree that the supplementary leverage ratio and the enhanced supplemental leverage ratio, the ESLR, are problematic as they create a disincentive for banks, especially large banks, broker-dealer affiliates, to serve as
Bounced
intermediators
off of
in the primary,
VWAP,
secondary, and
bounced
repo
again,
markets for
bounced
US
again,
Treasury
broke
securities.
it, and now we're retesting it. So the
So you
NASDAQ
would commit
is just
to
getting sucked to
reviewing the
this
SLR
VWAP level, right around
framework
like 69.
Create greater capacity for our banks to provide liquidity in the Treasury market?
I think it's time to move on the ESLR. And, we proposed doing so several years ago. We just didn't follow through on it. So I do think
Such
it's time.
fucking whipsaw, dude.
Thank you for that. And finally, yesterday, during your appearance in front of the Senate Banking Committee, Senator Warren asked you about the future of consumer protection laws if the CFPB is abolished. Isn't it true, Chairman Powell, that prior to Dodd-Frank, consumer protection laws were implemented by financial institutions' primary prudential regulators?
Yes.
And so if there were a decision by the Congress and DOJ or whatever to repeal the CFPB, we could return the consumer protection law enforcement function to other financial regulators.
You could, yes.
Thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member as well, and would like to associate myself with the comments of the ranking
Bearish
member.
target 1, 60,
Mr. Powell,
20.
I would like to compliment you for standing up to the president, for literally preserving the independence of the Fed.
Delta
it was
still
one of those pivotal
burning.
moments in time. It would have been more than your simply resigning.
Some puts being bought, but it's more so calls being sold.
With one of his Pluto puppets. Mr. Powell, I'd like to speak to you now about the process.
VWAP test
of
again on the
collecting
NASDAQ.
Tariffs. When the tariff is collected, at what point does that actually happen? If we impose a tariff, product is coming into the country, where is that tariff collected?
Great question. I'm not an expert on that. I'm going to say the Customs Bureau collects it, but I stand to be corrected by anyone who.
I believe you're correct. That's what my research reveals. Permit me to extend this.
All right, potential
When it is
breakdown here
collected,
on the
it goes
cues. The
into
SPY
a
has already
coffer.
broke down.
I
The
believe
next
we call that
test
coffer
is
the
this
general
10-12
fund.
low.
Is this correct?
I don't know, actually.
It does. The tariff goes into the general fund. A tariff is another way of saying tax, I believe, for many people. Is that a fair statement?
It is sometimes characterized as a tax.
So if the president imposes a tariff,
Stay below
which is a
VWAP.
tax,
Stay below
and the
VWAP.
tax is collected by some entity before it actually, on the product before it gets into the country, then the president is putting tax dollars into a general fund such that they may at some point, and these dollars, by the way, are coming from the consumer, at some point, they may be used to cover some of the appropriations of this very House that the president has enormous control over. So in a sense, what the president can do is aid with the payment of what he would call a tax break, but aid with putting dollars in the pockets of his billionaire buddies.
The Qs are right at their
that he
test point,
collects
now below VWAP.
on the tariff
Mag 7 option
that
flow is
the
flat. SPY is
people in
still
this country
dying.
ultimately have to cover. I think that the
NASDAQ
president,
bouncing off the low of the
while
day
he
barely.
seems to always avoid the question of how the tariffs are going to be dispersed. He knows that he can, at some point, use that money to help pay the taxes that he
Vol's
plans to
picking up
return
again.
to his billionaire buddies. I think that's a very sinister way of doing business, to require the consumer to fund tax breaks. I think this president knows what he's doing. I think he believes that the very wealthy need more to do more, and that the poor can do more with less. I don't agree with it, and I will do all that I can to prevent it. I yield back the balance of my time.
Gentleman yields back the balance of his time. The chair recognizes the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman, and over here, Mr. Powell, thank you. Good to see you.
How are you?
All right. The Federal Reserve recently withdrew from the network for greening the financial system, stating that this work had extended beyond the Fed's statutory mandate. While I agree with this decision, I still have concerns with how previous Fed policies may have discouraged lending to traditional energy sectors like oil and gas, and it should not be the role of the government and the Federal Reserve to be in the business of picking winners and losers. So my question is, can you clarify whether the Fed will ensure that financial institutions are not pressured to making lending decisions based on political or climate considerations?
Back to
rather than
VWAP.
sound financial
Surprise, surprise.
risk analysis?
I confirm that is not our policy. That would be inappropriate, and
We hit 20 perfectly.
not something we should be
The
doing.
exact level I literally called out
The
to you.
Basel,
Wicked it,
Committee
wicked
on
it.
Banking
Now we're
Supervision
seeing if there's
intended for the
support.
Basel III endgame
This is just a key,
proposed
like,
changes
I know
to be
it right
implemented in
here.
a
Just
capital-neutral
major,
manner
like
to ensure
major
a level
support.
playing field
Next
for US
level would
banks.
be 10
Following
points
this
even
intent,
lower.
the previous Federal Reserve Vice
2010,
Chair for
which was
Supervision
that big
initiated
player from this
implementation
morning.
efforts
So
with
if
capital
this
neutrality
doesn't
in
hold,
mind.
you're
However,
kind
his
of
successor
looking
politicized the process, imposing harsher
this
requirements
level right
that
here.
exceeded BS
The
recommendations. This
932,
approach not only made the
933 low,
proposal
but
more difficult for banks and their customers, but also weakened U.S. banks' global competitiveness.
some support's coming in
Ultimately,
right
he
here.
took his eye off the ball and went in the wrong direction. So, Mr. Chairman, will the Federal Reserve commit to conducting a more thorough economic impact analysis before finalizing any capital requirements to ensure that they do not hinder economic growth?
Yes.
Regulatory overreach disproportionately impacts community and regional banks, which do not pose systematic or system risk, for yet they face many of the same capital and compliance requirements as the largest institutions. So many of these banks serve as lifelines for small businesses, rural communities, and the
Qs are
first-time
trying to
home
save
buyers.
themselves here at this
It's key
trend
for the
line.
Federal
It's
Reserve to
also the
protect these
VWAP
institutions and
on the
ensure that they are
NASDAQ
not
futures
subject
market.
to one-size-fits-all
We
regulations.
bounced off of it. We
Mr.
broke
Chairman,
below
what
it. We
steps
got
is the Federal
rejected. We're
Reserve taking
recovering.
to ensure that new regulations do not force consolidation in the banking industry, therefore make it a little harder for smaller institutions to compete?
So like everybody else, we see the consolidation that's happened really over the last 30, 40 years, and community banks going out of business, and just fewer and fewer banks. And we know that may be happening due to technology and various things, but we and also just people moving to cities and away from rural areas. But we don't want our regulation to in any way foster that. So we try hard, I try as hard as we can to make sure that we're not letting the heavier regulation that we apply to the GSIBs and even to the regionals slip down to smaller institutions that are serving their community and generally doing a good job at that. And we try hard to do that. This is tailoring. It's very much of a basic value that we have, and it's also what we're instructed to
Bouncing
do.
literally right off of that support, 60-30
I
turning
won't say
into
we're perfect,
resistance.
but we do keep this in mind.
Support bounce, next
I'd like to
resistance
say
is
thank you for being here.
60-30.
Good to see you. And with that, I yield my time back, Mr. Chairman.
Gentleman yields back the balance of his time. The chair turns to the gentleman from Missouri, Mr. Cleaver, for 5
Missouri.
minutes.
Thank you, Mr. Chairman. Thanks to our very capable and courageous.
Who the
ranking
fuck
member.
are these people, dude?
Mr. Chairman,
Did we find
thank
the
you for
oldest
being here
people in
today.
America to represent us?
As you know, my words, the CFPB has been disemboweled over the last 10 days or so, which probably people, there may not be much concern here on the Hill in certain quarters. But there are two things that I want to ask you about. You know, rules over at CFPB must be from time to time updated. Right now, there is no system for updating any of the rules. And one of the other issues is that is there a regulatory gap, or are there regulatory gaps that you can see clearly, that people can feel, because there is essentially no CFPB for the first time since the end of the Great Recession?
So I don't think we know where this comes to rest. You may have seen last night that the administration nominated somebody to be the permanent head of the CFPB. So I don't know I'm not sure what the end intention is here. But if you assume that it goes away, then yeah, there would be a gap. There wouldn't be any federal agency that can examine banks above 10 billion, whether they're state member banks or state non-member banks or national banks. That would be the case. But I'm not sure we know what the end game really is here.
In terms of regulatory...
NASDAQ dying, Mag 7 turning south,
that
SPY also turning south.
When the agency was essentially
if you're
shut
trying
down
to catch this falling knife, good luck.
I'm assuming that there's been somebody appointed.
I'm looking for a retest of 6020. If that doesn't hold, I'm looking for a test of 610, 6010.
So if I'm correct, that means that there are some there have to be, or either or they've been tricking us all these years that they were not doing any regulations. But that's my political position. I was very proud in my community to get the Hispanic
VIX
Chamber,
kind of
Black chambers
unimpacted.
to come
Interesting.
together. We got a building; they're functioning. Big celebration all across my congressional district in Missouri.
It is holding that trend line.
And then,
bit of a pop in the SPY
about 2
here.
weeks ago, I started getting these phone calls, as I think many of us on both sides of the aisle have received.
Quickly faded.
64% of small businesses
Not in price, but in options
have
flow.
invoices unpaid for more than 60 days. And the Fed now, the Fed's
quick pop was faded.
Real-time payment system allows individuals and small businesses to send and receive money instantly, which is a step in the right direction, Mr. Chairman. What is the status of the Fed Now adoption for financial institutions?
So it's coming along, as was the case with ACH back in the day. It takes quite a while. There's investment that has to take place on the part of banks, and so we're working with with a lot of small and medium-sized
Apple's
banks
having another pretty good day.
Get them comfortable with the requirements.
Tesla's up the most,
of
3%
FedNow,
recovery.
So that this can build up over time. It's it's something that we expected to be slow in terms of uptake, and it has
Bitcoin
been
at
very slow.
96.
Well, is technology adoption a barrier for smaller community banks and mission-based lenders?
Yes, it is, and so we work with there are non-bank service providers that do reach out and do a good job with smaller institutions, and we encourage that. Those institutions can't actually have direct access, but their business is to.
The NASDAQ is fighting like hell to hold VWAP.
They can go to smaller institutions and show them how to do this, and there's a lot of that going on. So, and we encourage that.
Thank you. Let me just say, I've been here on this committee for 20 years, and I've seen chairmen, Republicans and Democrats, and whether they are Republican or Democrat, they need to be independent. Thank you, Mr. Chairman.
Gentleman's time has expired.
I think it's going to knock me out of my short at break
Gentleman
even.
from Ohio, Mr. Davidson, for 5 minutes.
Thank you. Thanks for joining us today, Chairman Powell. First, I want to reflect on our hearing on February 24th here in this same room, frankly, via Zoom for a lot of people because it was in the height of COVID. And during my 5 minutes, you felt
Strange
confident
pop in
that
options
inflation
just now.
being at 1.4% would stay under control And it wouldn't
of
be an
nowhere,
issue
just
despite
a
the very
random
large
big
increase
pop.
in the supply of money. We talked about M2. In a subsequent meeting,
It was calls
frankly,
being
my
purchased.
office,
Zero
we discussed
DTE
Milton
calls.
Friedman's quantity theory
I just
of
got
money in
knocked out at
depth,
break even.
and you believed that it was no longer relevant, that inflation would not hit consumers. We debated asset prices during the hearing, and you claimed that the Federal Reserve's massive purchases of treasuries did not distort the market. Lastly, during the Biden administration, you were actively calling for more fiscal stimulus at times. And at some point along the way, more dollars chasing fewer goods seems to have actually resulted in higher prices. All of these things, inflated money supply, inflated asset prices, inflated consumer prices, happened on your watch. In light of the actual outcomes, have your views changed?
Well, I think
5 minutes trying to go bullish.
I think we've learned
This is all still
a
bearish.
lot, but maybe not the lessons you think. But I do think we've learned a lot from the situation.
Popped right back up to 60-30.
We and essentially
30
all of
and
mainstream
35 are now
macroeconomics
resistance.
thought
I'm not
thought that
chasing this
would be
to the upside.
transitory. And what that meant was it would go away fairly quickly as the supply side healed and as demand came down. And it didn't. It actually did go away, and substantially for those reasons. But it took 2 years.
And to that point, you felt like in the fall that it was going away and things were going to be under control and you had achieved your soft landing, but the market pretty quickly spoke. I mean, frankly, rates went up over 100 basis points where you guys were going down, and now in today's reports, we see that inflation's actually trending up quite a bit from where it was in the fall. So again, would you, in light of the facts, would you reassess what you're doing with the central planning?
You're right that long-term rates went up, but they did not go up because of expectations of higher inflation. There's no evidence of that. It's actually different things. It's not about inflation.
Well,
look at markets. Markets are pricing in break-evens. I'll show you the.
So
chart.
the markets don't believe there's increased risk with massive fiscal spending in the market, and they're not demanding a higher premium because there's more risk.
More risk, yes, but not more risk of. It's not mainly about.
And when you
higher
see asset price inflation and rate inflation, doesn't that result in consumer price inflation?
It's not a question of that. You're saying that the rate increases at the long end are caused by expectations of higher inflation.
They certainly influence the inflation.
That is largely not true.
And if they don't influence the inflation, why do you guys try to steer inflation by controlling the rates? I mean, the reality is you've got pressure, including from the president, to lower rates. Are you going to be able to get lower inflation with lower interest rates?
I think our policy's in a good place. I think inflation has come down from high levels to 2.6% last year. My colleagues and I are holding where we are, awaiting further evidence of inflation.
A lot of the data that you guys are looking at lagged, just like when you said it was 1.4% and everything's fine. I think a lot of people said, it's not fine. You got to go out and talk to regular people. And constituents in Southwest Ohio, just like all over the country, aren't saying they're fine. And they might go that the rate of increase has slowed down a bit, but they know that the prices aren't going down. They're still getting hit pretty hard. And meanwhile, you guys still continue some of these policies. Like you're paying banks still not to put their capital at risk in the market. Interest on excess reserves going back prior to the 08-09 financial crisis, you didn't even pay banks for reserves. Now you're paying them for an unlimited amount of reserves that they want to hold on it. To what extent is that distorting the market by pulling capital out of the market?
None, not at all. You're right, though. People are unhappy about the price level, and that's what we need is several years of real wages moving up higher than inflation.
Okay, so if they're having no impact at all, why is the Fed paying the interest? What is the rationale for the policy? Is it monetary policy or is it regulatory policy?
It's how
because as Chairman Barr pointed out, you guys are effectively gold-plating the standards, and the U.S. is actually holding way more reserves than we're required to. And part of that is IOER.
So what's your question?
If it's not distorting the market, what's the purpose for doing it? What if it has no impact on the market? Why are you doing it?
It's the way we control. It's the way we exercise interest rate control in the market. I didn't say it doesn't.
Because it has an impact, and so I
Gentlemen,
will have questions for the record, and I yield back.
Gentleman yields back. The chair recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Good morning, Chairman Powell, and thank you for being here. I want to thank you for your leadership at the Fed over the last 7 years, which I've had the pleasure of being here that entire time. Under both Republican and Democratic presidents, through an unprecedented pandemic and certainly an uncertain economy, your apolitical guidance is a testimony to the historic independence of the Federal Reserve, which is absolutely essential for you to carry out your mandate, keep prices stable, and achieve maximum unemployment. Over the last few
potential
years,
bullish trendline recapture
has
on the
come
SPY
down from a high
and on the
of
Qs.
9.1% in 2022 to about 2.8%. During your tenure under President Biden, we saw the unemployment rate drop to a staggering 3.4% in 2023. Its lowest rate that we've seen in some 55 years. And now it sits at around 4.1%, which is still low by historic standards. Although the economy has a way to go, and American families, as we've heard throughout today, are still struggling to pay for expensive groceries and gas, and the list goes on. It is truly remarkable what the Fed has managed to achieve over the last few years.
Mag 7
Chairman
picking
Powell,
up.
I have sat on this committee.
SPY
You and I
doesn't
have
look so good.
frequently
I'm a little
discussed the
confused on
importance
this
of
pop.
representation at the Federal Reserve and the benefits of recruiting the best and the brightest
People
that
are
this
buying
country
calls,
has to
but they're
offer
also
by
buying puts.
broadening the talent pool. The Fed has been a great partner to this committee on this issue, which, as everyone knows, has been very personal to me. However, the White House recently attacked on these very basic concepts are incredibly concerning to me, as many of my Democratic colleagues. So I'm just going to ask you a few questions, and you may answer them for the sake of time, yes or no. Will the Fed continue to follow existing law as passed by Congress that requires all financial institutions, reform, recovery, and enforcement agencies to maintain offices dedicated to recruiting from a broad talent base and fostering an inclusive workplace? Yes or no?
Yes.
I am pleased to hear, as my ranking member mentioned OMWI and also talked about implementing it under Dodd-Frank Section 342. But I also am pleased to see that the Fed recruits from Ohio schools, and I'm from that great state of Ohio. Institutions
just
like
keep taking out
the
previous
Ohio
highs.
State University or Case Western Reserve University, Denison University, Kenyon University.
That's a
and
big
Oberlin.
pop after the
Do you
VWAP
agree
save
that hiring
right here
the
from
best and the
11.27
brightest,
till now,
whether
just
it's an
up,
economist,
up.
Whether it's an analyst, a lawyer, a
Ripping
researcher,
through
or
resistance at
IT professionals,
35,
that this
going up to
country
the low
has
from yesterday
to
at
offer means
42.
that you don't have to recruit just from Ivy League schools, but you can find
Mag 7 is strong,
these
but the SPY looks
individuals,
like
whether
shit.
it's an HBCU or it's also a state
This
school.
price
Have
push,
you
the
found
options
success
market's not
in
agreeing.
recruiting
Be
from
careful.
those,
I know I sound like a crazy
Yes, we have.
person saying it because it's
Thank you.
popping.
Do you agree
but, like,
that these recruitment
I don't know what to tell you.
programs
The
at
SPY's
their
getting
core
faded.
do in fact
People are just buying
prioritize
puts.
merit
They're also buying
and
calls,
skill
but they're
and
buying more
simply
puts.
expand the pool of candidates being considerate?
Yes.
Do you agree that the Federal Reserve has directly and concretely benefited from initiatives to attract, hire, and retain a highly skilled and diverse workforce?
I do.
As I mentioned at the top, the United States economy has come a long way since the pandemic and peak inflation, but hardworking families still are struggling. Last night, I was in a store night before last, eggs here in Washington, D.C., $14.99. So I am concerned
Where is she
about how
shopping?
recent
That eggs are
policies from the executive
$14.
branch would impact the Fed's dual mandate. We're seeing reports of Kohrs from the Department of Government Efficiency's attempt to conduct massive layoffs. Do these
Might be running
policies,
into
whether
a bit
you
of
agree with them or
resistance here.
not, affect the labor market, unemployment in the United States economy? And how does the Fed plan to achieve maximum employment during these circumstances?
We have 170 million people in the labor force. So these are, they would affect the numbers technically, but it's not clear that it would be material.
5 minutes trying to go bullish, 10
thank you.
minutes
My
still
time is
bearish.
up. I yield
5 minutes
back.
trying to go
And
bullish,
thank
10
you
minutes
again for
testing,
being
30
here.
minutes still bearish.
The
Super
gentlewoman
choppy.
yields back. The gentleman from Georgia, Mr. Loudermilk, recognized for 5 minutes.
Mag
Thank you,
7
Mr.
is still
Chairman,
strong,
and,
but
Chairman
the
Powell,
SPY
thank you
looks
for
like
being
shit.
here.
I cannot say this enough. Be careful.
Before I ask my questions, I want to
This
spend
whole
just a
pop
moment on
options
data
did not
privacy. I
care.
find it very ironic that my colleagues on the other side of the aisle and the ranking member in her remarks take a sudden interest in data privacy, and especially information regarding individuals' transactions, when in the IRA bill, they worked very hard to force banks to report the financial transactions of individuals at $600. However, data privacy is something that I have been very serious about since I've been here. I've been fighting
Apple,
the Securities
Meta,
Exchange
Tesla,
Commission with
Palantir,
their
all looking pretty good.
unconstitutional acquisition of PII from individual investors. We're attempting to reform and modernize the Bank Secrecy Act to limit the amount of information taken from individuals. And, they often turned a blind eye to the abuses by the CFPB. But it's encouraging to know that they're finally interested in some level of data privacy. I bring that up because there's something about data and data security I want to ask you about. The U.S. Department of Justice announced that it was prosecuting a senior Federal Reserve official for economic espionage.
We do have a higher low, but we also have lower highs. Price is not really trending that well
had access
intraday.
to sensitive
Higher
monetary policy
highs,
documents allegedly provided
higher
non-public
lows,
information to
lower highs.
representatives of the Chinese Communist Party. And I know you're limited in what you can share
Mag
about
7
this case
highest
in public
delta
setting,
reading of the
but
day.
to say that
Well,
I'm concerned would be
maybe a little bit of a pop here.
as others be an understatement. In what you can share with us, if you will, please answer a few of these questions. Do you know what kinds of sensitive, non-public information would this individual have access to in his role at the Federal Reserve?
Him personally, no, I don't. I mean, honestly, I really don't know the facts of the case, and I couldn't comment. But
okay, just assuming certain types of information from the role he's in, is there any idea if information was provided to the CCP, what advantages would that give them?
Without knowing what it is, I can tell you what staffers generally get, which is kind of the economic analysis that we do in advance of an FOMC meeting. And, in modern central banking, we try to be as transparent as possible. So I don't want to sound like I'm dismissing this case, which we take very, very seriously, just as you do. But we really, the truth is, what we have that is secret is knowledge of what we're going to do in the future. And in modern central banking, the whole idea is to be transparent about what you're going to do. So nonetheless, we take this case very seriously.
So
to your question.
Yeah, and I appreciate it. And this is not adversarial at all. I'm really just trying to get to what possibly the Chinese could have done and if they've done anything with it. Of course, if you're unaware of the type of information to access to, you couldn't answer that question. But does the Federal Reserve have an insider threat program designed to combat this kind of espionage?
So we have very, very strict information handling requirements. We do background checks on every Federal Reserve employee when we start those before they start working there. We do everything we can on this, but
obviously, certain things do happen, and people slip through the crack. Do you see that does this open the door for a more strategic analysis of the Federal Reserve and how to protect critical economic information?
Yeah, I do think that, once we see this unfold a little bit and know what the facts are, I think we'll absolutely look and make sure that our controls and that employees understand the consequences of this, and I think they do. But, with a few thousand employees, there's going to be one sometimes that breaks the rules. And I can't comment on this case.
And I understand it's sensitive, but as things move forward, I'd ask if you could at some point share with me and this committee more information so we can work with you to make sure that our nation's policies are kept just to those, more so kept away from our adversaries. And with that, Mr.
Be glad to do that.
Gentleman yields back. Gentleman from California, Mr. Vargas, ranking member on our Monetary
Mag
Policy
7
Task Force,
still
recognized for
going.
5 minutes.
Probably
Thank
Apple,
you very much,
probably
Mr.
Tesla.
Chairman. Chairman Powell, thank you. I
Even
don't
the
want to
SPY is
insult
actually
you in
starting
any
to
way,
pick up
but
here.
I hear you're a deadhead.
I'll own up to that.
So I assume that with
Big
a few words,
SPY.
oftentimes you could
Big volume pop
know
right
one
there.
of the songs of the Grateful Dead. So I'm going to give you here a quote to see if you know who
Battling
said
it out
this.
now at yesterday's low
The
value.
risk of a dispute over the position could be a distraction, to our mission. You know who said that?
No, I don't.
Michael Barr did. And I would be remiss if I didn't say and mention that what Governor Barr did recently was very selfless and noble. The rest of that quote, by the way, is, in the current environment, I've determined that I would be more effective in serving the American people from my role as a governor. So I think he himself took the position that it would be a distraction to continue in that role. I personally think he's a person of great distinction that always managed himself in a way that was appropriate, and I appreciate the role that he played. I didn't always agree with him. He was always agreeable and certainly was able to communicate with him our disagreement. And again, I just want to thank him because I think what he just did is what a lot of people can't do, and that is make a decision that for the betterment of the situation that we're in for our country, he would purposely do something that wasn't necessarily
Big options
beneficial to
movement
him
right there.
personally. But anyway, I'd be remiss if I didn't
Big
thank
pop
him.
in options.
But since I am asking tough questions, I do want to ask you another tough question. See if you know this one.
Hold.
Do you know what the Ponte del Sospiri is?
I do not.
Okay. You might know it in English. It's called the Bridge of Sighs. Are you familiar with the Bridge of Sighs?
Rings a bell. I can't.
Okay. In Venice, the Doge, who was the leader of Venice, had a palace. And across the palace, he had his prison. And oftentimes, a prisoner would be taken into the palace and interrogated in a very rough way.
Ten's trying to go bullish.
And then be tortured.
Ten
And
is
then
now
after
going
he
bullish.
confessed to something he normally didn't do, he would have to walk over the bridge and then into the dungeon and oftentimes die there. However, before he completed the task of crossing the bridge, there are 2 windows there. And he would stop at the windows and he'd look out over the magnificent city of Venice. And it's the last time, oftentimes, that person would get to see Venice. And so he'd sigh. And that's why it's called the Bridge of Sighs, the Ponte del Sospiri. The reason I bring that up is I think a lot of Americans feel that way right now, that they're crossing this bridge and maybe it's the last time they've seen the beautiful America that we've had. And they're worried. They're worried about the usurpation of powers. They're worried about the balance of powers. Now, I was very proud of you when you stood up and said, I can't be fired. The president can't fire me. I'm staying. Can anyone up here fire you?
Anyone up
Yeah.
there? No single person can.
No single person can, right? I hope you continue with that independence because I think at this moment is very important. Someone mentioned it earlier, and I think it is very, very important. So, with that out of the way, I did want to talk about the dual mandate, especially the employment issue. For a lot of people in America,
Apple's the one that's
their
really
job
going.
really is the most important thing for them. Not even their investment, their job. And that's why employment is such an important position, I think, and it's so important to be part of the dual mandate. Are you looking at changing in any way the dual mandate?
So we don't have that authority. That's
Who has the authority to do that?
Congress.
Only Congress?
Yes. Well, Congress would have to pass a bill, which would be signed by the president.
Say that again. Sorry.
Congress would need to pass a bill to change the dual mandate that the president signs.
That's right. And so I hope that you maintain your independence and at the same time follow the law that there's a dual mandate. And that's, I think, very, very important to most Americans. And with that, again, I thank you for your service. I thank Michael Barr for service. I know he's going to continue to serve. I know he'll serve honorably like he always has. And with that, Mr. Chairman, I yield back.
The gentleman yields back. We recognize the gentleman from Middle Tennessee, Mr. Rose, for 5 minutes.
Thank you, Chairman Hill and Ranking Member Waters, for holding the hearing today, and thank you, Chair Powell. Always good to see you here with us. Chair Powell, you may recall the last time we spoke,
About
I
to
brought
be
up
at a
the
new
issue of
intraday high.
credit risk transfers, CRTs, and urged you
Mag
to
7.
allocate more resources to
I don't
ensure
get
that,
this at all. This makes
to
no
ensure
sense to
that
me.
that
We're
framework
pushing, but
applicants
options are
were
being
receiving
faded.
decisions
Something
from the
is
Federal
very off.
Reserve.
Look at this picture.
Recently heard back from stakeholders
We're at a new
that they
high,
are
and the
receiving
options are
decisions
all the
from
way
the
down
Federal
here.
Reserve regarding CRT applications. I hope that the Federal Reserve team continues to be focused on cutting down the backlog so that financial institutions can take risk off their balance sheets. Thank you for that. However, I still have concerns that we are not fully optimizing the use of CRTs. In the case of mortgage risk, CRTs have successfully shifted risk from taxpayers.
Something's going
to
on
private
underneath.
capital, including
Doesn't make
capital
sense.
markets and global
Even NASDAQ just came off the low of the
while
day in
government-sponsored
Delta,
entities
but we
have
just hit high of the
clear
day price.
regulatory treatment
There's a
under the
big
Federal
mismatch
Housing
going on.
Finance Agency. Financial institutions lack similar clarity, particularly under Basel III. I understand that the Federal Reserve has begun to provide guidance, but more is needed to ensure that financial institutions can effectively manage risk, stay competitive globally, and serve their customers. Chair Powell, do you believe that there should be greater alignment in CRT treatment between banks and GSEs?
That's a great question. I will take your feedback back. Honestly, I don't know the answer to that.
And I just wonder what steps is or could the Federal Reserve take to clarify and harmonize capital rules to promote financial stability and competitiveness in this space?
Again, I'll take back your feedback, and that is our objective: is to be timely and
Qs are about to go
in that
green.
work.
Thank you. I
That's
appreciate that.
insane.
In April 2024, Synapse Financial Technologies, a fintech company that provided
Now options are
banking as
picking
a
up a
service
bit more.
solutions, filed for Chapter 11 bankruptcy. This event significantly impacted its partnerships with various fintech firms and banks, including Evolve Bank and Trust. To this day, I have constituents in Tennessee's 6th District who are not able to access thousands of dollars of their funds, and there has been no communication regarding the timeline for resolution. Chair Powell, since the Federal Reserve Board is a supervisor of the Evolve Bank and Trust, could you provide any updates on what you are doing to ensure that my constituents receive their funds and the expected timeline for
Kind
them
of
to
in
receive
no
their
man's land now,
So
honestly.
As their supervisor, as you point out, we've been pressing that bank to get money back to their customers, and we're actively engaged with the bank as they take steps to do so and return that money. We're deeply concerned about the complaints that we've heard and aware of concerns raised during the bankruptcy proceedings. And to the extent there are violations of law, we'll follow up on that.
Thank you again. And are there any specific steps that my constituents could take to expedite the process or ensure that they receive their rightful balances?
Bitcoin's still going.
I'll have to come back to you on that. There may be, I don't have anything for you though on that today.
Thank you. And Chair Powell, is there anything else that the Federal Reserve Board is considering to prevent situations such as this on a going forward basis?
Well, I think when we see things, it's a lot of pattern recognition. So we'll be looking to avoid things like this happening in the future.
All right, thank you. I think there has been a lack of appreciation for the work that President Trump has done to restore the American workforce. It is his example of calling federal employees
Options
back to
popping
the office
again.
that we are now seeing corporate America follow as well. Chair Powell, as the federal government and companies move to end work-from-home policies and bring employees back to the office, how do you anticipate this shift will impact key economic indicators such as productivity, urban commercial real estate markets, and consumer spending patterns?
That's a really good question. I'm not sure of the answer.
Five, six, seven.
I've always felt that I am personally more productive
Just
in the office.
7 green
and
bars
that's
in a
where I
row.
work,
Just
except
dump,
on
dump, dump,
weekends
dump,
when I work
dump,
at home.
pump, 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 pump.
But in terms of productivity, I think there are different views. I know a lot of CEOs feel strongly that people are more productive in the office, and we'll just have to see. I also think, though, that on the other side, work from home did allow very high levels of labor force participation among, for example, women, we had all-time record high participation by women. So I think there are benefits from work from home. I hope we continue to realize those.
Gentleman's
Thank
time's
you.
expired. The gentleman
yield back.
from Illinois, the ranking member on our Financial Institution Subcommittee.
Mag
Mr. Bill
7's
Foster,
still
5
going.
minutes.
It has to be Apple.
Well, thank you, and thank you for everything you do. I'd just like to get some sort of level setting
Yeah,
on what
Apple's
you've
just
been facing.
pumping, dude.
It's my understanding that your Inspector General in the Federal Reserve has not yet been fired. Is that correct?
That is correct.
Okay, and
Tesla
you've
as
not
well.
also had
Palantir
high-level
as well.
resignations of senior personnel. As
Even
they've been in
Microsoft's
Treasury.
picking up.
Nothing like
Broadcom.
No, nothing like that.
No, as of yet, no.
Apple,
And so no
Meta,
examples of, junior
Yeah,
personnel being given
Netflix,
administrative access to your
Coin,
systems, your technical systems.
MSTR.
Are you talking now about the payment systems that
No,
we
payment systems or other technical systems?
No.
Email systems,
No.
anything like that?
None of that.
Okay, all right. So far, you've not suffered through what Treasury has. Have you had any inquiries from other central bankers or commercial bankers from around the world about, what can we, uncertainty about whether the Federal Reserve will be able to continue doing its job if you suffer the same sort of intrusion that Treasury did?
I haven't, no.
So you haven't, they haven't called you up and said, what the heck is going on? Do we have to defend ourselves against, unknown software being installed on the system? So
I haven't had any such calls.
Okay, all right. Let's see. We've also seen calls to resumption of calls to audit the Fed. All right, which is, as you can remember
Dude,
from
the
that
Mag
gentleman up
7
on the
is
wall
just
there. This was
rip
a
it.
big thing.
Has to be Apple.
And first off, the Fed does
Apple's
get audited.
looking strong.
We are audited. in the sense
Microsoft,
that
not
everyone
so
understands
much.
That word
Amazon's looking
mean,
decent.
Which is we have a big four accounting firm who looks at our books and
Tesla's looking
gives us
strong.
an opinion, does an audit, and publishes that opinion. That's all.
Meta's looking
public.
strong.
Right, and it's my recollection there've never been any big problems on
Google's
No, we
fine.
actually have quite a simple business model, although we have a large balance sheet. We're
Jesus.
we're like a big community bank, only with no credit risk and very simple.
So in the ordinary sense, talk of auditing the Fed
Fully
makes
audited.
no sense. It makes no sense. But what was really meant, certainly during the time when we were
Tesla.
a decade ago, I guess, it was really all
Explains
about
why the Mag 7's so
micromanaging Fed
freaking
monetary
strong.
policy. That they said we want to audit the monetary policy, which doesn't really make sense since it's a policy thing. Do you have any indication of whether the resumption of calls to audit the Fed will be, audits or some new effort to politically micromanage the monetary policy?
I have no way of knowing. Really what it is the GAO is free to work on every area of the Fed except monetary policy and does so. We have GAO reports, all over the place over many years, but they don't audit monetary policy. And, what the threat would be if that were to go away, you'd have investigations into decisions on monetary policy, and, that would be a different thing. I think it was designed by its designer to be a step on the way to eliminating the Fed.
That is correct. Yeah, the calls to end the Fed came from the same wing of the Republican Party, and I guess still exists. I think we're up to something like 20 Republican sponsors of the end of the Fed bill. Let's see, I was sort of surprised to see that the word tariff only occurred twice in your monetary policy report, whereas if you look at financial trade journals, it's mentioned 5 times above the fold. And for those that read hard copies. So, this must be a very hard thing for you to deal with because, as you're aware, Trump's tariffs and other trade policies put us in a manufacturing recession a year before COVID.
Dude.
And so this is not a small thing if these resume.
This makes no sense.
but you
Mag
have
7
to
is
sort of filter out
non-stop
the
running,
chaotic
just
noise and the
non-stop
guidance that
ripping.
varies
But
hour
then
by
the
hour,
SPY is
week
actually
by week.
fading.
So
like
how
kind
do
of
you actually
noteworthy how much
filter
it's
that?
fading.
You say correctly that, well, let's wait to see what the actual policies are. But then that depends. If you listen, one day you get these are the actual policies. At some point you have to feed these into your macro models of what happens. And how do you do that filtering when there's just so much random noise on the signal?
Well, I think it's straightforward now in the sense that no one knows pretty much what the exact policies will be. That's still evolving, and so you can't really take action. You can do analysis of various hypothetical things, and we've been doing a lot of that. But ultimately, it matters what happens. What's tariffed, for how long. Are there substitutes? There's many questions that will have to be answered. And even then, the question will be how much of that will transfer to the consumer. As you know, that can fall on the exporter, the importer, or the retailer, or the consumer.
Or in my case, manufacturers are on both ends of this.
Yeah. So we really just don't.
So if that sort of analysis.
Gentleman's time has expired.
Congress, it would be great. So thank you.
The gentleman from South Carolina, Mr. Norman's recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell. I appreciate you coming and addressing our body. In 2011, Vice Chairman Yellen made a statement about the concern about the long-term debt situation and the imbalance that we have with our budget. In the fourth quarter, when she made the statement, the federal debt held by the public was, as a percentage of GDP, was 64.75%. Now, the same debt to GDP as identified by CBO was 99% at the end of 24. Do you express the same concern that Ms. Yellen had about the severity of where we are with our continued long-term imbalance?
I have done so on many occasions. And essentially that the U.S., we're on an unsustainable path. And the debt level isn't unsustainable, but the path is sustainable, and certainly it's past time for Congress to work on that. But that's what I can say. I can't say more than that.
What do you think the benchmark would be? We're in the middle of the budget situation now, trying to debate, particularly with reconciliation. What would you say is a benchmark that would ease? What level of cuts, in your opinion, would ease your concern over what we're doing? We're $37 trillion now, but when you add the the mandatory spending we have on Social Security, as an example, it's going bankrupt in 35.
Fucking wild.
Highway Trust Fund running in balance. What level do you think will give you, I guess, some assurance that we're going to get our house in order?
So I don't have a specific number. It wouldn't be appropriate, but I will say this. In having looked at this, the successful programs to get back on the right track, they tend to make progress over a long period of time. And in other words, you've got to get to a place where the economy is growing faster than the debt, and then you need to stay on that path for 20 years. This is not the kind of thing where we can fix it overnight. We just need to be making progress. And right now, we're running very large deficits at a time of full employment. So we need to start moving. You're either making progress or you're not. Right now, we're not. So the key thing is to just, is for it to become a big issue, and then people work together. The things that need to be done are things that can only be done on a bipartisan basis. Only. These are the things that need to be dealt with, cannot be dealt with by one political party. I'll leave you with that.
It's going to be a tall order.
It is.
To get bipartisan.
The order only grows. It gets taller every year.
Yeah, it does. That's one of our issues we're having now. The level of growth, you think, with what President Trump is doing with giving Americans confidence with the Dose Commission, which is giving Americans hope that we're seeing things that are being spent of the taxpayers' dollars that we never imagined that we couldn't get to. Now he's exposing that. What level of growth do you think, with the confidence growing under Trump, that we will be able to reach this year and the years after? Because the 20 years you're talking about, we've got to have a pretty solid, it can't be.
That's ridiculous. This is fucking insane.
Would you say 1.8, 2% growth of GDP?
For a long time, people thought that U.S. potential growth was a little bit below 2%. I think we've had we've had 5 years of good productivity growth, and we hope that'll continue. If that does continue, then it might be 2 or 2.25. If you're talking about long-term budget assumptions, though, I'd be conservative and say 2%.
You think that's doable?
2%, yes.
Order submitted.
On the order pending.
On another note,
just in case this
stress
turns here.
tests that banks run and that public has been given information on everything but how that stress test relates to them. Why is it not further, why is it, most people don't understand what it is. Why is it not broadcast more, in your opinion?
Why the stress tests?
Correct.
So
options have been
the theory
turning
from the
since
beginning
1201.
Was to not to disclose
on the S&P
whole
500
models in the way that they
Mag
work, because
7
in
is
a
the
way that
strongest
felt like
of the
giving
day.
a test in
This
advance.
market makes
This
truly
was
no
a brand
sense.
new initiative that started coming out of the global financial crisis, very successful generally, but over time, the argument for not giving away the models, giving the models out, has, I think, weakened, and also the law has moved. The Supreme Court has moved
Meta
to
alert.
Reduce the level of deference given to agencies.
How many times has
and
he gone for
increased
now?
our
What do you,
obligations
I don't
to
even have a
transparent
position on
Administrative
right now. What the
Procedure
fuck
Act.
are you
And
talking
so
about?
it's time we
Gentleman's
think
time
for us
has
to disclose
expired.
the
Meta,
models.
Thank you so much.
all-time high.
Thank the gentleman. Gentleman
Well,
yields
we
back.
see where
The
some
gentlewoman
strength
from
is.
Texas, Ms. Gonzalez, is recognized for 5 minutes.
Thank you, Mr. Chairman.
Dude, some people in
And,
chat are
thank you,
just so
Chairman Powell,
fucking
for
dumb.
joining us this morning.
So dumb.
As you know, the United Kingdom, European Union, Mexico, Brazil, India, and Japan all allow non-bank payment service providers access to their instant payment services. This allows improved access to liquidity for users by ensuring they can send and receive payments instantly without waiting multiple days to access their money. I believe this is especially important for those who have tighter cash flows and for those sending payments to loved ones abroad, both which happens quite frequently in South Texas and across the country. With that in mind, does the Federal Reserve plan to allow non-bank payment service providers access to FedNow payment rail?
We don't plan that right now. What we really want to do is to have
Spy,
the consumer
huge pop,
not care. You know, the
showing some
consumer can
life.
have an access, but our payment rails go through the
Calls
banks,
being
and
bought.
So you have to go
Zero
through a bank.
DT calls being bought
So
right
there's no
there.
plans on changing that?
No.
Um,
Not that I'm aware of.
Getting on the consumer price index, what consumer price index reading would cause you to cut rates? Is it 2% exactly, or is it a trend closer to 2%? How much more movement downward do you need to see in CPI for the Fed to start looking at rate cuts?
So remember, we're looking at two things. We're looking at the labor market and inflation. And so headline inflation last year was 2.6%. And we've said, assuming the labor market remains solid and strong, we want to see further progress. We didn't actually make much progress on core PCE inflation last year for reasons that I can explain, but nonetheless, the progress wasn't there. So we want to see a resumption of progress. I'm not going to put a really specific number on it. I mean, the truth is the economy is strong, the labor market's solid, and we have the luxury of being able to wait and let our restrictive policy work to get inflation coming down again, and that's what we're doing.
Is there any concern at the Fed that deporting millions of undocumented workers that do a lot of crucial work in the agriculture industry, in construction, in the hospitality business will create upwardly pressure on inflation in this country?
So we don't, we don't have concerns about policies. We just look at the data, and labor supply has actually, the new labor supply from immigration has actually come down quite sharply over the second half of last year, and there's every reason to think that will continue. Demand has also come down, so that the unemployment rate has actually been flat since July. We're going to look at
but would
supply
it
and
taking
demand.
1 million workers out of the economy have a direct impact on
It could. We'll just have to see how supply and demand match up. In any case, we don't. We're not here to comment on immigration. We're here to achieve.
Right. No, I totally get that. I'm just figuring if you take 1 million people out of the workforce, how do we make that up, and how would that have an upwardly inflationary pressure on our economy? But moving on, recently the Cleveland Fed's new tenant rent index tumbled to a negative 2.4 year-over-year rate. Does that type of deflation in shelter make you more positive on future interest rate cuts?
So, yes, but the thing is, what we're really looking at is, in the aggregate, housing
is
services
incredible.
inflation. I believe that's a measure of current rents, so market rents that are happening. And market rents have not been showing much inflation for a long time.
Q's new
Market
intraday
rents
high.
don't make their
Wow,
way into
what a recovery.
rents until leases turn over.
Q's are
Existing leases
officially
turn over, and
green on
that's
the
been
day.
the slow
That
part
is
of the process.
impressive.
We have seen a lot of progress on that, but we're not there yet. We're not back to levels of housing services inflation, which is what I described. But we're getting there. We're making clear progress.
You recently said
SPY's
that
about to hit
employment
a new
prospects
high.
are solid.
SPY hit a
and,
new high.
Construction employment, which represents 6.1% of all private employment, is falling significantly. Does this concern you?
What a fucking
We look at the aggregate
day.
numbers. There are always industries that are growing and not growing. I think the last few job reports have been significant job creation. You saw the one here.
The Mag 7 is
Which
disgusting.
revised up the last 2 months. And
The
just
Mag
job
7
creation.
is
In fact, it looks
definitely
like
where the party is
job
at,
creation may
folks.
actually
Look
have
at
picked up a
that.
little bit around the end of the year. Last
Thank you. And
couple
just
months.
very briefly, given what we had had a business capex recession, the last time the economy faced uncertainty with large tariffs, are you monitoring capex developments closer this time around?
We're monitoring them carefully, yes.
Thank you. I yield back.
Gentleman yields back. Chair of our Oversight and Investigation Subcommittee is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you very much, Chairman Powell. Good to see you. I did recently chair an oversight subcommittee hearing on debanking. During our hearing, we revealed evidence
Next logical
that
target, I
FDIC
suppose,
directly
is
pressured banks to debunk
6068.49,
bank
yesterday's
crypto.
close.
What do you think of that situation?
So it's
We're making
I
clear
think
progress
we're all
on housing
struck
service
at the
inflation,
number
but
of
we're not there
complaints and
yet.
the breadth of
He's
them.
saying everything he needs to
And,
say.
Want to understand. We want to take a fresh look at this area. It's not something we're not telling banks that they can't bank certain people from certain institutions, anything like that. Nonetheless, we're hearing these things, and I take at least some of it is real. So we need to understand it and stop it from happening because. And if you look at what the banks are saying, they're really saying that a lot of this is that the enforcement of anti-money laundering is so tough that at any sign, any flag at all that gets raised, they just cut people off, and they can't explain. So that may be part of it, but I think we need to do some work, get to the bottom of it, and address this.
Thanks,
I
Chairman. There were
appreciate
hundreds of
your-
letters, by the way, that were pretty clear that
Yeah.
banks should avoid doing business with crypto companies. No such pause letters, as they're referred to, or communications of this coming from the Fed?
Not that I'm aware of. No, it's not been our policy. Our banks are doing business with crypto companies, and they're doing crypto inside the bank. Some of them are. We've been a little bit careful with it, but I really don't think we've been telling people they can't do it.
I think a lot of people, including us, would appreciate you doing a careful review of that. The banking industry itself is concerned that there's no vice chair of supervision to provide clarity on the multiple issues from Basel III to Reg II and debanking. Do you expect to have an acting vice chair of supervision? When do you expect to have an acting vice chair?
We don't have. We need to have a confirmed vice chair if we're going to have a vice chair. There's no such thing as acting for us.
Okay.
But I don't know. That's up to the administration. I'll tell you the way we look at it is we're going to do our jobs, and I think there are a number of things that can be done that'll be very constructive. And if there is a new vice chair for supervision, I will welcome that person and do everything I can to make them successful.
Okay, thank you. Yesterday, you noted that Basel III Endgame could be finalized fairly quickly. Given last year's extensive public comments, will you ensure the rule does not restrict access to capital and fully incorporates industry feedback? And as you stated, you felt that the capital reserves for banks was about right. So I'd imagine you're not looking for anything too drastic there.
No, that's right. Yeah, that's correct.
Okay, great. So the CPI this morning came in a little hotter than expected at 3%. Did this surprise you?
It was the CPI reading was above almost every forecast, but I would just offer a note of caution on this. 2 notes of caution. One is we don't get excited about 1 or 2 good readings, and we don't get excited about 1 or 2 bad readings. The second thing, though, is we target PCE inflation because we think it's simply a better measure of inflation. And so you need to know the translation from CPI to PCE, and we get more data on that. Tomorrow we'll get the producer price index. So I think it's always wise, and the people who follow us closely know this, that we'll know actually what the PCE readings are late tomorrow.
Okay. So in the past, as you well know, you called inflation transitory. Then the Fed signaled 3 rate cuts for 2024, and the market's priced in 6. Now that you're saying that there's no rush to cut rates, do you find this forward guidance stabilizing markets or fueling volatility?
So this is the summary of economic projections, the dot plot. And, I think markets like it. It's kind of the only, it is the forward guidance that we give. We don't really mean it as forward guidance, but markets do take it. Sometimes they take it too seriously. I think most market participants understand that it's highly conditional and dependent on what actually happens in the economy.
And that's the feedback that you do receive? That
Yes.
They find it
yeah.
helpful?
And when we talk about getting rid of it, market participants will tell you, please don't do that.
Okay. If Doge found $1 trillion in wasteful, unnecessary spending, the Department of Government Efficiency, of course, and wouldn't that have a positive effect on
Buy
inflation,
options are popping.
allowing you to perhaps lower interest rates and, of course,
there.
reduce our deficit spending?
So this is if $1 trillion of spending were eliminated, you'd have to run that through a model. But ultimately, it would hard to say exactly how it would affect the economy.
You got a $6 billion budget at the Fed. Would you welcome Doge to have a look under the hood?
We haven't heard from them, and I've got nothing for you on that today.
Thank you, Chairman. I yield back, Chairman.
Gentleman, time has expired. The gentleman from Illinois, Mr. Caston, is recognized for 5 minutes.
Thank you, Mr. Chair. Chair Powell, always a pleasure to see you again. I want to start, and I don't expect you to comment on the policy here, but there's been a number of actions from the Trump administration of scrubbing or limiting data that the private sector has historically relied on to understand the direct and indirect impacts on the economy, public health data, information about breaking things down by gender, by race, that we need to understand granular shifts in the economy. I realize that you don't rely exclusively on government data, but has there been anything that has happened since the Trump White House was sworn in that has limited the Fed's access to information you need to fulfill your dual mandate?
Not that I'm aware of, no.
If there was, will you commit to sharing it with Congress so that we can fulfill our oversight responsibilities?
Sure.
Okay. When you were here in July, I'd asked you this question. I just want to confirm that you still feel the same way. Is it still your view that the Federal Reserve that climate change constitutes an emerging threat to U.S. financial stability?
I guess I would say it this way. I wouldn't say that climate change is currently a threat to U.S. financial stability.
An emerging threat.
I would say that it may emerge over time as such.
Okay, so $250 billion of losses in California. We've now got multiple states where the insurer of last resort is insolvent, reporting today that California is having to bail it out. I know we have a difference of opinion on NGFS. I don't want to go into that. But is the Fed monitoring what is happening to our financial system as those insurers pull out, as insurance rates goes up, and people's both access to property insurance and the cost of insurance are going up? Are you monitoring what's happening systemically in our economy as a result of that?
Yes. The question, though, if the question is it a threat to the financial stability of the United States? That's really the question. And of course, we're following that very, very carefully.
Okay, so if you're monitoring it, where is the risk that was being backed by the insurance industry moving? Where in the economy does that risk now live?
So insurance companies, as you know, can cancel policies and not issue them, and they can leave states, and they're doing a lot of that. So where do those risks fall? They fall on homeowners and other beneficiaries, and they fall on state governments and to some extent the federal government. But they don't cause large financial institutions to fail.
Are you seeing shifts in mortgagers, mortgage servicers, their willingness to provide loans to homes as those insurance rates go up or disappear?
Implicitly, if you can't get insurance, then there won't be a mortgage. So
Okay.
I can't point to episodes where that's happening, but that's certainly where this looks like it's headed.
Okay, because there has been reports going back several years now that the more prone your property is to flood risk, to fire risk, the more likely you are as a bank to offload that onto Fannie and Freddie.
60 is a bit of
seen that data
resistance.
happening. So that then raises the question
32 is now support.
And this is maybe just purely academic and wonky. If you own a set of cash flows and you want to sell them to me, and we both have full information,
I'm only going to buy them from you at an accretive value to you to the extent that I have a lower cost of money than you do, right? Just, I mean, sort of like Econ 101, right? So if we own Fannie and Freddie right now because they're in receivership and they are throwing off a string of cash flows to the Treasury, setting aside the nuances of how the CBO scores all these sorts of things, isn't the sale of Fannie and Freddie on the assumption that the buyer and seller have perfect information, the same information on both sides of that transaction, if that's accretive to the American taxpayer, doesn't that implicitly assume that we have to sell to somebody with a lower cost of capital than we do?
That's I followed your logic there. Yeah.
Okay, and that would only not be true to the extent, I suppose, either that the buyer violates every rule I had in my M&A career of paying for upside, as they say, or that the buyer
Lots
lacked
of zero
information that the
DT
seller
calls
had.
now being purchased since 11/26.
Okay. So what I'd like to understand from you is, does that create a conflict of interest for the United States government?
Max 7 is so
Because
strong.
if we have if we have information about climate change being scrubbed from our data sets, and we have a White House that would like to sell Fannie and Freddie, are we committed to efficient markets that depend on accurate, transparent information, or are we committed to making a quick buck, in which case we might want people not to be uninformed? Is the Fed committed to transparent markets, I guess, is the first question, and then the second one, do you feel that conflict?
I think we're getting a little away from our mandate at the Fed. I mean, the idea of privatization is to get this off the balance sheet of the Fed and get private capital back.
We've literally done nothing
Sure,
for 30
and there would be
minutes
good reasons
now.
for that, but if that is coming at the expense of value to the American taxpayer, we need to be transparent about that.
Right, but we have private sector banks. You know, we could make all credit could be made cheaper if
Look at
offered by
Tesla.
the central
Tesla's just
government,
ripping.
right?
Gentleman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized for 5
Apple's
minutes.
looking good.
Thank you, Mr. Chairman, and thank you to Chair Powell for joining us today. Yesterday, in an exchange with Senator Warren on stress testing, you said that the Fed
Bitcoin's
has had to change
ripping,
their approach,
Tesla's
quote,
ripping.
because the ground has shifted very substantially in
Apple's
administrative
ripping.
law, end quote. And while, yes, the ground has certainly shifted since last year, I'm
Meta's
slightly
ripping.
confused because after reading up on the banking industry's lawsuit against the Fed, I do not see a direct connection between their case and the loss of Chevron deference. Their case seems to center on the Fed not complying with the long-established process laid out by the Administrative Procedures Act, and while some at the Fed may not classify stress tests as a rulemaking, when they require banks to alter their capital levels, they have the effect of rulemaking. So, Chair Powell, I'm hoping you can clear this up for me. Is this a matter of adapting to a post-Chevron world, or was this the Fed unlawfully using stress tests as a backdoor to increase capital requirements on banks without issuing a formal rulemaking and having to go through the legally required notice and comment APA process?
Pretty good chance that the next sentence I say would be evidence in the court case that we're having. So I'm not gonna get into just debating what the law is because we're in litigation. I will say it's not just Chevron, though. I think it's clear from other cases that expectations under the Administrative Procedure Act are also raised, just generally speaking. And so we felt that, like, overall, that really has changed the playing field.
Okay, well, any changes in capital requirements is very disruptive, and having a more predictable process is helpful for long-term stability of the U.S. economy.
Well,
On to
that
the
little
next
miniature
question.
dip was
foreign
bought.
banks, many of which are
Low
smaller
alert.
than their domestic counterparts,
Dropped
play a
and then
larger role
quickly
in providing
popped.
financing in the Treasury market. U.S. banks, on the other hand, are less involved than they could be, primarily because regulators have made this activity less profitable for them. Stricter capital requirements, liquidity
Zero
buffers,
DT
and
calls
compliance
bought on that
costs
drop.
stemming from regulations like Dodd-Frank make it more costly for
And
U.S.
puts
banks to engage in
sold.
Treasury market operations, particularly in repo and securities lending. As a result, foreign banks facing fewer regulatory hurdles have stepped in to take on this crucial role, providing the liquidity and financing needed. This shift has significantly altered the market landscape, with foreign institutions now holding a larger share of financing operations that were once dominated by U.S. banks. So my question is this: why are we setting up a system where the U.S. Treasury market needs to rely on so much on foreign banks for proper functioning, and do you see that as a national security threat?
I see the trend that I see is that we have very significantly raised the capital costs of supporting market activity, and especially for low-risk activities that are low-risk, low-return. What's happened is the amount of treasuries has grown much greater than, it is now much greater than the capital that's allocated to intermediate. So that's why you see low intermediation and relative lack of liquidity, and I think it's appropriate to do something about that. And that's something that we'll be looking at, is to
We are now watching
reduce
paint dry, folks.
The enhanced supplemental leverage ratio to account for that. This is something that we proposed before, which I think is intended to increase liquidity in the capital markets for banks subject to it.
Thank you for that. I want to end on a positive note. I want to discuss the optimism among the American public. Small business optimism experienced its largest increase in 40 years following President Trump's recent election, with continued positive momentum in the months since. This surge reflects growing confidence in the economy, spurred by expectations of favorable policies and reduced regulatory burdens for small businesses. The index is not only well above its 50-year average, but also reached its highest point in December since late 2018. This shift has caught the attention of many across the economic landscape. Back home in South Carolina, I frequently speak with small business owners who are enthusiastic about the future and eager to help their businesses thrive under the new administration. So my question is this: how do you see this significant jump in optimism translating into tangible outcomes in terms of investment, hiring, and overall growth for small businesses?
So we know that sentiment really matters. It's really hard to model it, but you do think about it when you're thinking about your forecast. You think about optimism and that kind of thing, because that's what supports investment. All the investments that companies make, they have to have on some level optimism that it's worth shelling out this money to do what it is they're doing. So it's a key part of how economies work.
And given the potential for increased investment, are there specific policy adjustments or economic factors that you're watching closely to ensure that this optimism leads to sustainable growth in the long term?
Best thing we can do is achieve price stability and also full employment, maximum employment, and then create a stable environment where businesses and households can not worry about inflation, and we have steady, sustainable growth.
And as one of the millions of Americans about to get a mortgage, interest rates going down would be helpful. Thank you, Mr. Chair. I yield back.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Chairman Powell, we're at an inflection point, and we need leaders who are courageous enough to speak truth and who are committed to helping every person who calls this country home. There are many who wrongfully justify Trump's presidency and the lawless work of Doge as good for the economy. Well, Chairman Powell, you actually know something about the economy. The Federal Reserve has a dual mandate, maximizing employment and stabilizing prices. And it is clear to me that Donald Trump and Elon Musk's actions are impeding your work. The threats of tariffs against our allies are not helping the Fed do its job, nor will they help people across our country. The Boston Federal Reserve put out a report last week which estimated tariffs would be inflationary and raise prices. Chair, I ask unanimous consent to enter into the record the report titled "The Impact of Tariffs on Inflation." Additionally, Donald Trump has threatened mass deportations. He seeks to terrorize immigrant communities and separate families, claiming it will help the economy. I don't think so. And neither does the Peterson Institute for International Economics, who estimated that employment would drop 7%. Chair, I ask unanimous consent to enter into the record the report titled "Mass Deportations Would Harm the U.S. Economy."
Without objection.
Now, Chairman Powell, I want the Federal Reserve to be successful. So if Elon Musk and his Doge bros were to walk into the Federal Reserve, intimidate staff,
The Doge bros.
access classified data, and take control of the agency, the same way they did USAID and the Consumer Financial Protection Bureau, would that help or hurt our economy?
We don't have that happening. I'm not going to speculate.
Well, on your own website, it says, quote, "The Federal Reserve is accountable to the public and the U.S. Congress," unquote. So I would like to see a clear answer on this. Your staff are watching, Wall Street is watching, Donald and Elon are certainly watching, and we all want to know, what is your view if Doge does to the Federal Reserve what it has already done to other independent agencies?
What we're going to do at the Fed is keep our heads down and keep working, wait to see what new policies emerge, and try to make a thoughtful, sensible set of policies on our part once we understand the implications of those.
If Elon Musk or anyone from Doge attempts to access the Federal Reserve's private data, will you immediately alert the members of this committee?
Sure.
Thank you. This is as clear to me as night and day. Donald Trump and Elon Musk are not trying to help working class people. They're trying to help themselves. They want the Fed to be a tool that helps the rich get richer, banks get bigger, and regulations disappear altogether. But that is not your mandate. The Fed must maintain its independence and integrity. Put the interests of the public before Elon Musk. The world's richest man does not care about the price of eggs. He doesn't have to when he has already bought the presidency. I yield back.
The gentlewoman
What a
yields
line.
back. The gentlewoman from California, Ms. Kemp, recognized for 5 minutes.
Thank you, Chairman Hill and
My
Chairman
bot's
Powell.
going to go
Thank you
short
for
if this
joining
breaks
us
down
today.
here.
And I want to commend you again for ignoring the outside noise and staying true to Fed's dual mandate. Chairman Powell, it seems the advent of artificial intelligence and other emerging technologies has helped the United States increase productivity when compared to other countries around the world. That makes our country more competitive and envy of economic growth. So do you believe that this boom in productivity is sustainable in the long term? And if so, how does that increase in productivity affect your models to forecast inflation, therefore monetary policy?
We have had a boom in productivity. It is most welcome. And of course, it would be great if it were sustained. I think if you look at the candidates that try to explain it, some of them are kind of one-time things, and some of them could be more sustained. You mentioned technology and AI. To the extent that's part of it, that could be a sustainable increase in the rate of growth and productivity. To the extent it was more about job reallocation, people switching jobs coming out of the pandemic, that's kind of
A little bit of a
one-time
turn,
thing.
but nothing
Also,
to
we had a wave
tell
of
mom about.
startups, a wave of early stage companies, startups. That also tends to be linked to productivity. That too could just be a one-time increase in productivity. Literally, no one has the record of being able to successfully forecast productivity for very long. But again, it's going to depend on many things, and it's as long as we have this increased productivity, it's most welcome and important.
Thank you. Over the past decade, we've seen Fed intervene with more regular frequency to maintain the orderly functioning of the U.S. Treasury market much more than decades before. It seemed like the private sector was able to manage this without too much Fed intervention pre-financial crisis, and a long-standing and growing bipartisan consensus that the SLR and other regulations may be causing this. If so, what do you think the solution is to reduce the need for frequent Fed intervention?
So I do think we need to work on Treasury market structure, and part of that answer can be, and I think will be, reducing
Mag
the
7
calibration
is actually
of
the strongest it's been all day.
supplemental leverage ratio, as you mentioned. That's
SPY
something that
was
I have
really strong, but now
long
just flat.
Supported, and for the reason that, the quantity of treasuries has grown really significantly, and the capital allocated to intermediating trades in treasuries has not, in fact, has shrunk. So we need a liquid treasury market, and this is one of the things that we can and should do is to reduce the calibration of that measure.
Thank you. I want to go back to March 2023 in response to the fallout of Silicon Valley Bank. It is my understanding that the Fed is analyzing ways to create a more efficient process for financial institutions to access the discount window. One issue that has come up is that it can take extended periods of time to assess and determine the lendable value of collateral, potentially denying the institution's ability to access liquidity quickly. Is the Fed looking at ways to streamline the process to assess and determine the value of collateral at discount window?
We are. We are looking at, so there are sort of impediments to the efficiency of the discount window. And those are things we can work on and we're working hard on. There's also the question of stigma, though, that banks are reluctant to use it because of the so-called stigma of using it. And that is a very hard problem to solve. We're also working on that one.
Regarding the Fed's review of the discount window operations, can you give us an update on what problems the Fed was able to identify, what solutions you're pursuing, and what the estimated timeline is for any action?
So the study is ongoing right now. The work's ongoing. But, essentially, you touched on some of this. It's inefficient, it's slow, and we need to have
my bot's about to kick
processes
I believe.
that are very quick and very efficient because they need to be quick and efficient in a crisis. So that's part of it. Just general modernization, investing in technology, modernizing the discount window. That's part of it. The harder part is really turning it into something that banks are comfortable using because they feel it's not stigmatized. And we're working on that too.
The opening the discount window 24/7 could really help the banks in California, especially the state that I represent, the Southern California that I represent. Thank you.
Thank you.
Gentlewoman yields back. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you, Mr. Chair. President Donald Trump has been asserting among the most aggressive and expansive claims of presidential power that we've seen in our nation's history. He's taken the unitary executive theory to new extremes. He's claiming to have the authority to defund whatever agency he wishes, to abolish whatever agency he wishes, and to fire whomever he wishes, even if it means violating an act of Congress.
Wow.
Mr. Chairman, suppose for a moment the president were to ignore the congressional statute that establishes the independence of the Federal Reserve. What economic consequences would result from the Fed losing its independence?
30 minutes.
I think research over many years in many jurisdictions
60
shows
is very important.
Some degree of independence is very important in keeping inflation under control. And the connection is obvious. If politicians are going to want to be reelected and things like that, they're not going to be focused on the longer term. We have the mandate to remain separate from all of that, to stay out of all of that, so that we can just focus on, not on election cycles or helping or hurting any political party or politician, but just on serving the public as
Ran
a
into
whole.
this wall
That is
here
essential,
at
and,
60,
it's
maybe
uniform,
support
I think,
found at
across all
45,
advanced
maybe at
economies.
35. If 35 snaps, we're
Much
talking
like
20
the Bureau
again.
of Fiscal Service, the Federal Reserve has highly sensitive payment systems. President Trump and Secretary Bessent granted Elon Musk and his team of outsiders access to the central payment system
He's
of the
really
federal
in
government, a
there, Mike.
system that is often described as America's checkbook. Would you, as the Federal Reserve Chair, ever grant a team of outsiders access to the Fed's central payment system without sufficient vetting and sufficient security clearance?
Well, no, but let's remember, we're the Treasury's fiscal agent. Everything we do is under their direction, and there are Treasury payment systems, and then there's our side of the wall, which is the actual payment to the recipients, and so we control access to that very, very carefully.
Right, the Treasury issues the payments, and then you process them.
They order us to pay someone, and we just pay. We don't have any. We don't question payments. We just make the payments, and we control access to those payment systems very carefully.
And what would be the danger of lightly granting access to the Fed's payment system to outsiders without sufficient vetting? Like, what could go wrong?
Well, the reason why we're so careful about it is just, for one thing, the possibility of mistakes and someone coming in and changing the code and things like that. So we have very careful access. Another one is just you open it up to more cyber risk and things like that. So, I mean, I think all, really important computer programming is subject to very, very careful access restrictions, and we're no exception.
Right, so you believe, as I do, that granting an insufficiently vetted team of outsiders access to the payment systems of the Treasury or the Fed would radically raise the risk of a cyber breach at the hands of foreign adversaries like China and Russia?
So we're talking hypothetically here. I can tell you that is not something that's happened relative to, we can speak to the systems that the Treasury has asked us to operate on their behalf, and that has not happened in those systems.
I represent one of the poorest congressional districts in America. I have cash-strapped constituents who pay exorbitant fees simply to transfer their own money, often to loved ones abroad. Access to FedWire could play a role in radically reducing the cost of remittances and payments for the lowest income Americans. What is your position on expanding FedWire access for the purpose of reducing the cost of remittances and payments?
So we do, FedWire is really between banks. These are very large wholesale transactions. It's one of the world's most important, if not the most important, financial market utility. I don't think we're looking to open it up to, to retail customers. I think, faster retail payments and particularly cross-border payments are a subject of a lot of work in the international sphere, and I think we all understand it's important to lower the costs and the risks of those.
The commercial real estate.
Mag 7 is still just going. SPY was tilting and then caught itself at 12:44. There is a bond auction, though, at 1 p.m., just so everyone knows.
I think it's still true that this is a problem that's been with us, and it's going to be with us for a while. If I can say something modestly constructive, it doesn't seem to be getting worse.
Okay.
So there are a lot of embedded losses, and they're just going to need to be realized. So we're working with financial institutions to make sure they have a plan and understand their losses and can manage them.
I see my time has expired. Thank you.
Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, it's good seeing you again. I want to start with just a broad-based conversation. I know the Fed has been making adjustments to the Fed funds rate over the last several months, and what we've noticed is there's not been a lot of, although there's been movement on short-term rates, there really has been minimal impact on, in my view, intermediate to long-term rates. Can you expound on why you think this phenomena is starting to exist with respect to Fed rate monetary policy versus the general
Mag 7
borrowing
is still
rate,
strong.
borrowing
SPY
rates
is actually now
for
going.
businesses and consumers?
Right. So you're right, of course. We've lowered the federal funds rate, and as sometimes happens, longer rates have gone up. They've gone up and come down and gone back up. They moved around, but they're higher. And the reason is that, we don't control long-term rates. They react to a whole bunch of different things, including a sense of more deficit spending coming, including expectations of more growth and of risk of higher inflation, but not. So markets aren't pricing in higher inflation, but maybe pricing in that the risk of that is there. And that could be a reaction to new policies or not. But ultimately, though, the increase in longer-term rates is really mostly not about Fed policy or our job of maintaining price stability. It's about other things, the term premium in particular.
So Jerome Powell, this ends at 1 p.m. and simultaneously at 1 p.m. is when we have the 10-year note auction.
I would love to do that. One of the concerns I have,
so might want to be paying attention here at the turn of the hour.
Is there is but so much that the Fed can do with respect to rate policy, and I fully acknowledge that. Wanted to get your views on that, but I think it's also the desire and this conversation happening right now, obviously with with Doge and Elon Musk, and the desires for efficiencies, but then also stability in federal spending and even bending the cost curve. Fiscal policy from Capitol Hill. Do you think that would yield positive results in medium and long-term rates, borrowing rates, not just for the federal government, but for the American consumer?
When you say fiscal policy, you mean fiscal policy that would reduce deficits over time?
Yes, fiscal policy that will reduce deficits, fiscal restraint, I would say fiscal common sense over the intermediate and long term for the United States.
Yes, well, so I think part of what market participants think about when they buy our treasuries is how much more of this is coming? Are we going to get on a sustainable path? And they want to get paid. If the answer to that is, wow, we don't have a lot of confidence in that, then they're going to need, so the term premium, the so-called term premium goes up for that reason. And there's no question.
This guy seems to be a lot better spoken than most.
I do think rates would be lower.
No, and I appreciate that testimony, because one of the things that
Mr.
while we do talk
Donald.
about obviously tax policy in another committee, regulatory policy
How's
throughout
flow?
the entire federal government.
Mag 7 is still strong. SPY had a weird pop there, and then it settled.
Does have to be fiscally responsible.
Maybe picking up right
and
now.
If we are not, and I say all of Washington, if we are not, then the risk premium, so to speak, for borrowings in the marketplace are going to increase, not because of the American consumer, not because of the strength of the American
5
engine,
minute, 10
but
minute
simply because
bullish, 30 minute testing,
the amount of
5 minute,
treasuries
10 minute
that we
bullish,
are putting
30
out
minute
to
actually
market
bullish on the
are just
NQ.
demanding a higher premium for every new dollar that we borrow, because simply people want to be paid back. And it's just something where, Chairman, you don't have to comment on that. It's something I think is important for the American people to understand. That is the major.
The Qs are really running
issue,
into an issue at yesterday's
for the
close.
next 20 years, 10 to 20 years for the federal government, that we have to get our fiscal house in order if we're going to give the American consumer, who might be poor, trying to make a way in this country, middle income, trying to just take care of their children and figure out what the next stage in life is going to look like. People who are in the upper middle class, who are now forming businesses, building some real wealth for themselves and for their family, all of that is at risk if the United States government does not take its fiscal health as serious as any other family and any other business would do. Real quick, Chairman, you said yesterday that as long as you're chairman, the U.S. will never have a central bank digital currency. Is the Federal Reserve or any of its member banks currently conducting any studies on CBDCs, either for retail or wholesale purposes?
I mean, we're not doing any work that is designed to lead to a retail CBDC. That's not happening. When we don't support one, we don't have legal authority to do one. So no, the notion of a wholesale CBDC is really not one that we think about or
What
accept.
a recovery on Tesla.
Take FedWire. FedWire is a real-time, digital
upside gap though,
process of trillions of
350.51
dollars every day between banks. Is that a CBDC? Some people would say that's.
Gentleman's time has expired.
So
Thank you, Chairman.
Thank
I
you.
yield back. Thank you, Chairman.
Gentleman yields back. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thank you so much for being here today. It's always a pleasure visiting with you. I'm going to talk about a topic that both Congressman Gonzalez and Representative Preston brought up, which is something that's, I think, does impact our federal economy, but I know certainly does impact my district in Texas. I'm really concerned about President Trump's mass deportations efforts and their impact on your dual mandate. I believe the last time you were in front of this committee, I asked you about the impact immigration had on monetary policy, given last year's Congressional Budget Office estimates. As a reminder, the report estimated that the labor force in 2033 will be larger
Order
by
canceled.
5.2 million people,
just got out.
largely due to the immigration surge. Since then, there have been more reports and research about the impact the immigration has on our economy, both in maximizing the employment and stability in our prices.
And now it went long.
Order
example-
submitted.
Bought, was
immigrants are
short,
fulfilling
cut it, and then
lower
just flipped
paying
long.
and oftentimes dangerous jobs more frequently than U.S.-born workers. They earn more money, pay taxes, invest back in our economy through everyday goods and services, and help create even more jobs. A study done by the National Academies of Science, Engineering, and Medicine found that foreign-born workers, or as some people say, immigrants, pay $237,000 more in taxes over their lifetime than they receive in benefits. Let me say it again, $237,000 more. So these mass deportations will have a massive impact on both our economy and workforce, leading to a drop in production and spending. We're already seeing some of that in my district. Chairman Powell, I recognize that the Federal Reserve does not weigh in on policy, and so before you say that in your response, I already know that. However, immigrants' impact on our economy does impact both the unemployment and prices, as Representative Gonzalez detailed in terms of some of the work that they do. Does the Federal Reserve account for immigrants in its interest rate decisions?
Indirectly, yes. So we're looking at the labor market, and part of what drives growth in the labor market is population growth, and part of what drives population growth is immigration. So sure, it can matter, and sometimes it matters a lot.
Right. And do you look at the consumer price index in terms of the immigrants as consumers, and if they're afraid to go out because they may get deported, they're buying less. That's what I'm hearing from businesses in my district.
I think things like that would show up in the aggregate data, but we don't single out any particular group for that.
Okay. So can you quickly list some of your Federal Reserve responsibilities, and do you have capacity to assume the role of being our consumer watchdog as the president now is focused on getting rid of the Consumer Financial Protection Bureau?
So before Dodd-Frank, the OCC, the FDIC, and the Fed all conducted consumer exams and enforcement for the banks that they regulate and supervise. So for us, it's state member banks, and for the FDIC, state non-member banks, for the OCC, national banks. Dodd-Frank took all banks over $10 billion in assets away just for purposes of consumer examinations and enforcement, gave them to the CFPB. Statutorily, you could give that back to us or not, but it's certainly possible to restate the old order, but that would have to be something.
No, I realize you've also said that your team will be there to get the job done. You've got your nose to the grind.
We sent a bunch of people over to CFPB. We would need those people back. We don't have the people now who could take that over. They moved many people from the Fed and the OCC and the FDIC.
So there would have to be a reallocation of resources.
Yes.
Okay. All right. So sounds like you're obviously willing to do it, and we may have to convince the president to make that reallocation of resources. So thank you for that. And Mr. Chairman, now I'd like to ask for unanimous consent to submit for the record 3 articles. One, the Brookings, the labor market impact on deportations, and the other, the Federal Reserve Bank of Dallas, migration to Texas, fills critical gaps in workforce, and the second one on unprecedented immigration surge boosts job growth.
Without objection.
And I yield back with 2 seconds.
No one yields back. Last member to question the chairman today will be the gentleman from New York, the vice chairman of the Subcommittee on Capital Markets, Mr. Garbarino, and you're now recognized for 5 minutes.
Mag 7 is
Chairman.
just too
Chairman Powell,
strong.
it's good to see you again. After the last open market committee meeting, you said that the labor market conditions remain solid, unemployment has stabilized, and conditions in the labor market are balanced.
We're heading up to
This comes on
yesterday's
the heels
close.
of the
Watch
jobs
the
report
market's
this past
reaction
Friday
to
that indicated the economy added
6068.49.
140,000 jobs during the month of January. Yet, when you peel back this data and look at recent employment data for the smallest of small businesses, the mom and pop shops, so firms without, not with 100 employees like those included in the jobs report, you see that small businesses are actually consistently losing jobs. In fact, the latest Intuit QuickBooks Small Business Index showed that employment for U.S. small businesses with 1 to 9 employees decreased by 42,000 jobs compared to January. Last month, in my home state of New York, small businesses employment decreased by 0.33% and revenue decreased by 0.62%, which is a decrease of $350 per small business on average. Do you believe that we are seeing the same economic and business trends between companies with fewer than 10 employees and larger companies?
I guess not. No, I mean, I think it's always the case that there are differences between sectors and size companies and all that, and we're really left with looking at the aggregate numbers.
Do you take into account the current macroeconomic trends of the smallest of the small businesses when setting policies?
We do.
You do?
Yeah. I mean, for one thing, we read the same data you do. The Reserve Bank presidents come in, talk about their districts at length, and they talk about, if you read the Beige Book, they're going to talk about small businesses, nonprofits, everything. So we look at everything, but at the end of the day, there's only one national unemployment rate, but there are many, many subtle changes in the data that we monitor too.
We all know small businesses drive the economy, and I know there's a company in my district, Brinkman Hardware, 40 years ago, they started with less than 10 employees. Now they have over 200. So they are able to grow, and they do great work. But I think just making sure monetary policy really does focus on helping small businesses grow is key to making sure the economy continues to grow. I'd like to move on to a topic that we've discussed on a few different occasions, Basel III Endgame. It is well known that I had some serious concerns with the initial proposal. One of those concerns that we haven't discussed is how the proposal would have impacted the securitization framework. At the time of the proposal, there was no narrative explanation, data, quantitative analysis, or financial modeling rationale for why the P factor was doubled.
While I understand that Mr. Barr promised we'd see an economic analysis to support the proposed change, I believe that was never released. So, Chairman Powell, I'm wondering, in your opinion, have you seen any market pressures or changes that would have necessitated such an increase in the P factor?
I can't point to anything. I will say that we're going to look at all of that again when we get together again with the other agencies and try to move this forward.
Okay, well, the proposed doubling of the P factor would significantly increase the amount of capital required for securitization exposures, making securitization more expensive for banks to participate in and raising the cost of limiting the availability of credit for households and businesses. I appreciate that you will look at that, but given how this proposed change may negatively impact a bank's ability to act as market makers in the securitization markets.
Okay, 1 p.m. The bond
again,
stuff is probably coming out right now.
Can you commit
I'll see if I can find that.
to review this substantial increase given its outsized impact?
Sure.
I appreciate that, Chairman.
It's a Dutch auction, so
And I
it
just
takes a
wanna
little bit of time.
Expand on one other topic.
The auction is actually
that my
happening
colleague,
right now
Representative
for the
Lucas, brought
10-year.
up earlier. Over the past decade, we've seen the Fed intervene with more regular frequency to maintain orderly functioning of the U.S. Treasury market, much
Yield's
more
actually
so than
picking
decades
up.
before. It seems like the private sector was able to manage this without too much Fed intervention pre-financial crisis. Do you think regulation like supplemental leverage ratio, which some of your colleagues have commented on, is causing this? And if so, what do you think the solution is which will reduce the need for frequent Fed intervention?
10-year note bid to cover was 2.48. Last one was 2.53. So the bid to cover came in lower than expected. That's generally not thought to be good.
But that's one of them.
That's one of the solutions.
But the
think
high
there's
yield
other
was
things
lower
that
than
you'll
expected,
work on that.
4.632 versus 4.68. So
appreciate that,
the
Chairman.
high yield was better than
Thank you
expected.
very
The
much
bid to
for
cover
being
was
here
worse
today,
than expected.
And I yield back.
Gentleman yields
And that's
back.
for
I
the
wanna thank
10-year
Chairman
note
Powell
auction.
for being with us today. Thank you for your testimony. Without all objections, all members will have 5 legislative days to submit additional written questions.
Mag 7 taking a bit of
for
a
the witness to
breather.
the chair.
S&P 500 taking
Questions
a
will
bit
be
more of a
forwarded to the
breather.
witness for his prompt response. Chairman Powell, please respond no later than March 31st, 2025. This hearing is adjourned.
This hearing is adjourned. All right, let me find that. Let's get rid of this. Let's get rid of this. Things were looking good for a push all the way up to this close, but the market not reacting that well to the bond auction that's going on right about now. Not reacting well to the bond auction, folks. What do we have going on? All right. Mag 7 still kind of coming down. This is right when the 10-year note auction came out. It starts at 1, sometimes takes a couple minutes. Let's see if it could pull itself out of this miniature give back. Obviously, on an intraday basis, the price action very evidently strong right now. Higher highs, higher lows. I was looking at the 1 minute here to see if this 800 is going to hold. I'd love for this to push. I mean, fuck, at this point, higher and higher. So watching the yield, this is the auction that just occurred. It is pushing a bit higher. Once again, what was good about it was the higher yield was less than expected, but what was bad about it was the bid to cover. So there wasn't as much aggression of people wanting to buy the 10-year. Not a huge miss. 2.53 was last time, and this time it came in at 2.48. So it wasn't like catastrophic, but that's what just happened at 102, why we dropped a little bit. Probably the market, a little bit of a reaction to the weaker bid to cover number. And now it's to the point that my long position, I'm now long NQ. My bot went from short, cut the short, seconds later went long. That ended up, now I'm just break even on that. So that's a bit of a bummer. I liked it better when I was up 20 points. Come on, turn it around. Mag 7's already picking back up, so there's a little bit, okay, this might just be, I don't know, a little intraday breather, but the Mag 7 has not really stopped. It started going at 10:15 today, so about 45 minutes of the day into the session. Things were weak, they were questionable, but since then it just broke, and when it took out this delta high, it's never really looked back. Popped, took a bit of a breather, popped again, bit of a breather, huge pop right here, little bit of a breather because of the bond auction, but still overall pretty strong. Same thing with the SPY. SPY was really messy. It seems as if it bottomed around 11:30. Kind of noteworthy in how different it was from the Mag 7. Obviously, bottoming way later. Since then, picked up, was looking lethargic, but then it kind of changed all around 12:15. Whoever threw this order on right here, technically 12:13 was the exact time, pops there, and since then going up and up and up. According to GexBot, we ran into resistance at 60.50, got above it, it turned into support, bounced off of that. Now we're battling out at a little bit of a messy area, but because it's messy, I guess using some of the stats that I know from Edgeful, I am looking for this test of now 6068.49, which was yesterday's closing value. So that would be the test of the S&P 500 going from red to green. The Qs have already done that. The NASDAQ has already done that right here. We closed out yesterday at 527.99. It's already pushing above that, so in the green territory. Tesla having a beautiful, strong day. Apple also having a pretty freaking strong day. These are obviously heavily weighted in the S&P 500 and the NASDAQ 100. So when you see Tesla, which was getting its like face kicked in, that's a nice 4.8% recovery. The NASDAQ is getting hit right here. Shit. What are we doing? What are we doing? Is this actually legit getting hit? My long is going to get taken out here. It doesn't want to take on much risk at this point in the day. This bond auction might be messing everything up, folks. This bond auction, I don't know. I'm going to give it a second, but my longs they're getting pressed. I just didn't really want to take on that much risk. It actually almost just knocked me out right there. Interesting day. Very, very interesting. I would say unexpected is the best way to explain what the hell's going on, but that's another fun day in the market, folks. That's what the market gives us. All right, I'm trying to think of anything. Right now, I'm just waiting to see if we're going to continue with this trend or if we're going to get that upside gap fill in the S&P 500 or if this bond auction is now going to mess things up. Obviously, this intraday recovery is, I think, way more impressive than most expected, but hell, we found some. What was that major support at 6,000 on SPX? We found support right at 6,003, and we bounced off of that, and we were chopping up for the first 45 minutes, and then since then it was the Mag 7 that really led us back to the promised land. So definitely wild, absolutely insane how today's been playing out. Very impressed with the intraday recovery on Tesla. Apple's been super strong for 2 days. The daily chart I think is impressive. Palantir, not a Mag 7, but obviously still a very strong popular tech stock. So that one's looking good at 115. There's a lot going on. A ton going on. So I think there's still going to be moves. I think there's still going to be action between now and the end of the day. So whatever you choose to do, please be careful. Please stick to your trading plan. Please respect your risk. And I will attend. Yeah, the Mag 7 is still strong. It's still going. Oh, man. S&P 500 giving a little bit back. But look at that strength. The Mag 7, a little bit of a breather. Nope, I'm good. And just is going back to pushing higher and higher. People are, by definition, buying this dip. They got freaked out at first from the CPI report and all day just fighting back. Puts being closed, calls being open, aggressive positive add to the delta on the Mag 7. And even really overall, no one's quite touching their puts. I guess they're just going to let these die. But look at all this call buying on the S&P 500. Interesting to see how the market really reacted to this. So like I said, please be careful. I bet there's still moves for the rest of the day, but interesting day nonetheless. That's what I have for you. We'll be posting some content later on today, and then I'm not going to be streaming tomorrow or on Friday, and then don't forget that the market's closed on Monday, but your boy's got to get his butt on a plane and get down to Mexico. So very, very, very excited for that. Anyway, I appreciate you guys stopping by. It was a very, very long stream today. Kind of reminds me of the days when I used to do 8 hours every day. So kind of getting back into our roots there. But thank you. I appreciate the good vibes. Don't forget to check out Spot Gamma, pinned to the top of chat in the description of the video. You can get a fat discount if you use that link. We are the only community that they are giving 80% off on that first month. If you're curious what that platform is all about, I truly couldn't imagine trading without it. That's what I have for you. Love you all. Peace.